Hello and welcome to the Business Today Brainstorm 2022, powered by CoinDCX and associate partner Lenovo. I'm Aabha. With the budget behind us, the focus shifts towards implementation and execution of all the plans and promises. With the Indian economy set to grow at a fast clip this year, the focus on Capex, among so many other schemes, has the potential to further boost India's economy. It's in this context that Business Today is conducting a day-long BT Brainstorm event on Friday, February 18th. That'll see multiple participants, including ministers, CEOs, market experts, among others, talk about the Indian economy. First up, we have Union Minister Nitin Gadkari joining us now. In a move to put the country on a high growth trajectory, the government has pushed the paddle on infrastructure development. A record 1.99 lakh crore rupees has been allocated for the highways sector. The minister will be in conversation with Business Today Managing Editor talk about the roadmap going ahead.
I'm Siddharth Zarabi, and with me on the show today, Nitin Gadkari, the Union Minister for Road, Transport and Highways, one of the longest serving ministers holding this extremely crucial portfolio for the economy. Welcome Gadkari ji to the show. It's great to have you on this brainstorm session. Let me begin by asking you, sir, about the recent allocation for the highways sector in the budget, a record amount of money, 1.99 lakh crore rupees, a target of 25,000 kilometers of highways to be built through newer innovative ways was also announced. What is the roadmap? Can you share some of those highlights with us?
Actually, it is a great theme for the government, particularly after the COVID. The finance minister has taken a very revolutionary decision for giving highest priority for development of infrastructure in the country. The PM Gati Shakti, inclusive development, energy transition and climate action, and investment in public finance. These are the four key priorities of the finance minister. It's really a great achievement for our government that we have made already 3 world record. First of all, we are at the time when I taken charge as minister and Modi ji starts his regime. At the time, the national highway construction come to 2 kilometers per day. Actually, the average was 2 kilometers per day. But now it is to be a great achievement that we are now proceed towards more than 30 kilometers. Now we are marching towards 38 kilometers per day. So this is a great achievement, and as far as the national highway record is concerned, probably we will be the highest in the world, where the fast process for making national highway is to be achieved in the country, and that is to be one record. The second world record is we have constructed 2.5 kilometer 4-lane cement concrete road near Vadodara in Mumbai-Delhi Express Highway within 24 hours, concrete road. The third world record is Solapur-Vijapur single-lane bitumen road of 26 kilometers is constructed within 22 hours, not even 24 hours. So these are the 3 records which has already achieved by our ministry. So first of all, because of the expenditure on highway, that is going to create more employment potential. That the most important thing is expenditure on infrastructure. It is a great investment. It is going to increase the revenue, particularly GST and other steel, cement, and after that creating employment potential. There is the per income and GDP growth is increased. At the same time, the most important thing is by creating employment potential, it is their purchasing power is increased, and that is also very important. So our particularly development in infrastructure, particularly the road project, it gives boost to Indian economy, and that is the reason that the finance minister is giving highest priority for it. Our budget is, as long as it comes to double now, and now the ropeway, cable car, it is already in our program. 25,000 kilometer NH length to be constructed That is to be great. New, already we are on the 1,47,000 kilometer. We are making 22 green express highway, axis control, new alignment. There are no roads. We are making new roads. And at the same time, we are making 26 industrial corridors connecting to the ports. And also that is to be a great thing for the infrastructure. You understand one thing, that it is very important for India to reduce the logistic cost. In the whole world, if you consider the logistic cost in USA and Europe is 12%, China is 10%, and Indian scenario, it comes to 40%. And that is one of the problem for us. That we are not that much competitive in international market.
Right.
Now our export increase. The whole world is keenly interested to deal with Indian industry. And that is the reason that by reducing the logistic cost, by making this 22 green express highway, by making this 26 industrial corridor, you take example of Mumbai, Delhi. From Mumbai to Delhi, now presently trucks take it to 48 to 54 hours for one trip. But now by our express highway, new express highway, which is going to open within a year, the time will be only 18 to 20 hours. So he will make more trips, and we want to use ethanol, even the LNG, and we are preferably trying for bio LNG. As a transport minister, I am giving priority for that, and electric. So it is going to reduce the cost by 50%. So 100% in the next 2 years after making this change in national highway, we will be succeed to reduce the logistic cost from 16% to 10%. That is to be a great thing. This budget is going to help us. And that is to be a great thing for our ministry. Presently, 70% of the goods traffic is on the road and 90% of the passenger traffic is on the road. I am expecting within 2 years after making this Green Expressway and industrial corridor, the 90% of the goods traffic and 90% of the passenger traffic will be on the road. And 100 times that time, our import bill will be increased, because already we have 8 lakh crore of import of petroleum products, and within 5 years it will go up to 25 lakh crores. So my ministry, there is a great decision taken by the finance ministry that they have increased additional excise of ₹2 for non-blended fuel. So now the private company, they have to blend the fuel, so the ethanol demand will be increased. I am confident within 5 years, we will make the ethanol economy of 2 lakh crores. And at the same time, we are marching towards green hydrogen. I have already one car from Toyota that is running on green hydrogen, and we will be, there is a technology available for electrolyzer, and within 15-20 days in Delhi, I'm interested to start a pilot project. It is to be, we want to show to the people that it can be possible from sewage water. By using solar power and wind power, we will get green hydrogen, and that green hydrogen with the help of electrolyzer, and it is already in Bangalore. Lot of startup are doing 90% of electrolyzer they are exporting to US and other country. So there is a huge demand for electrolyzer, and after that it comes to generator, but we are decided to use that generator on biofuel, on ethanol. So the green hydrogen will be available, and it is the fuel for the future. Even in steel industry, chemical industry, everywhere in place of coal, we can use green hydrogen. Even a railway engine, we can use green hydrogen. At the same time, in aviation fuel also, the excise duty is increased. And that is the reason that now it is to be a serious agenda for aviation industry to think about on the line that how ethanol can be added into aviation fuel. So again, our import will be less. So, and it's a green fuel. So these are the new decisions because of the finance minister. It's going to encourage rural agriculture economy, creating more jobs.
Right.
And at the same time, increasing per capita income and GDP in the country. And that is really a great advantage for my ministry. My ministry is the most important ministry which is benefited by the approach of the finance minister. And that is to be a great thing for me. And I am giving my special thanks to Nirmala ji for that all declarations.
Gadkari ji, you spoke about logistics costs, and before I move on to the next question, a quick follow-up. This is about the cost of toll. Compliance is good, but there have been protests about the rising toll costs. What do you have to say about this entire issue that people keep mentioning?
Actually, frankly speaking, there are a lot of constraints for the road construction. We cannot make all this road by government budget. I'm giving you an example. I know that you know Mumbai. Now, at the time when we construct Mumbai-Pune Express Highway, the time taken from coming from Pune to Mumbai was 8 to 9 hours. Now it is 2 hours. So you just understand, if your engine is running for 9 hours, what will be the fuel cost? And when engine running in the 2 hours, what will be the fuel cost? After paying toll, there is a time saving, cost saving, and fuel saving. So the toll is not the charge. Now we are making the highway. I'm giving the example. Delhi to Dehradun, previously it is 8 to 9 hours. Now it comes to 2.5 hours. And after this express highway, new constructed from Akshardham, which work has already started, it will be within 2 hours, Delhi to Dehradun. Delhi to Haridwar, 2 hours. Delhi to Chandigarh, 2.5 hours. Delhi to Jaipur, 2 hours. Delhi to Mumbai, already 12 hours. And Delhi to Meerut, previously it was 4 hours. Now it is 45 minutes. Already there, the road is constructed. So the time saving and fuel saving is there. And in the fuel saving, that is the cost is very high. And we are constructing this road where even land acquisition purpose, we are using government budget. And after that, we are making investment from the private sector. And we are constructing express highway, green highways. It is ultimately, overall, it is a saving for the people. So I always tell, even we are now changing the fuel. Now I'm telling you interesting example. In Mumbai, the best bus running on diesel, the cost is 115 rupees per kilometer. But electric bus cost is 50 rupees, less than 50 rupees per kilometer. But the capital cost for the electric bus is 1 crore 75 lakhs. And diesel bus is 55 lakhs. Because there is a difference between the cost of fuel, electric and diesel, the saving is there. So ultimately, this new technology, new innovations, and even in the toll rates, we are now making a lot of toll. We are now planning to, we are already on this fast track, but now we are trying to develop GPS system by which there will be no toll naka. It will be recorded from where you start and where you end, and direct that amount will be taken from your account. So because of all this new thing, the saving is there, pollution is less, and at the same time, it is going to create great boost for Indian economy. So this toll is not the problem. And one thing which I will request you, if you want good services, you have to pay for it.
Well, that's right. In fact, since you point out that the government cannot bear all costs, we've seen that the NHAI already has now a huge debt of 3.4 lakh crore, and that's not a small amount. For the next year, there will be lesser borrowing. Why is this? Can you explain this for our audience?
Actually, frankly speaking, we have 4 models. One model is EPC, other is hybrid annuity, the BOT, and now the model where we are trying to get investment for that. Even suppose in EPC mode, we construct the road, then the cost of construction which is bear by the government, we monetize that for 15 years, we will get the value, and again we can invest that value somewhere. So already government has given permission to our department. So we can raise it, we can monetize lot of roads, assets, and already in Pradhan Mantri Gati Shakti Yojana, there is a scheme where 26% we monetization responsibilities with my department, and we are monetizing the project and we will get the money. Now in infrastructure, 100% FDI is already allowed. So there is a lot of thing by we are now on every project which is completed by we are asking, we are waiting for the approval from the SEBI. And my idea is to people can invest in one project, the small people, and they can invest more than 1 lakh rupees and they will get assured returns. Still it's not confirmed, but I am trying my level best to at least get them 7 to 8% return yearly, by which the common people, the pensioner, the senior citizen, the people like small service people, they will get lot of benefit because presently the interest rate are reduced. So our idea is to make the road with the help of taking investment from the small people and give them benefit for that. And exactly these are the innovative models where we are getting good response. Money is not the problem, resources is not the problem. And our idea is, our mission is to make Indian road infrastructure within 5 years up to the standards of USA infrastructure, road sector. I already promised in Uttar Pradesh that whenever, next time, if there will be our government, we will make Uttar Pradesh road infrastructure equal to America. And that is exactly my idea, is to make green express highway, then industrial corridors, making 4 lane, 6 lane, 8 lane road. We are making bridge, 3-level bridge, 1 bridge, 2nd bridge, 3rd bridge. And now it is a great thing that Nirmala ji has also giving us increase the CRF fund. And also we are now making ROB on large scale. And at the same time, already the Prime Minister has given us the responsible ropeway, cable car, vernacular railway. We are making 16 ropeways in Himachal Pradesh. Now we are planning to move towards Kashmir, to Uttarakhand, and all part of the country we are making public transport system on electricity. Presently broad gauge and meter gauge. And standard gauge is with the railway. For the other electric mass rapid transport system, now my ministry is the nodal agency, and by which we can make ropeway, cable car, vernacular railway, light rail transport. And that can be a great thing, that we can convert our transport, public transport, good transport on electricity. Already we are taking lot of decision regarding the fuel, lot of technology change. And presently the size of our Indian automobile sector is 7.5 lakhs crores. And this is the sector which is giving maximum employment potential in the country. This is the sector which is giving maximum GST revenue to the state and central government. So now we want to make this sector at least double within 5 years of 15 lakh crore. All reputed automobile brand in the world are present in India. And that is the reason that I am confident we will export automobile, trucks, buses, cars, scooters. Now already the two-wheeler company like Bajaj and TVS and even Hero company, they are exporting their 50% of the production to abroad. And it is going to create more employment potential to getting government revenue. The ancillary industries develop. So in the way I feel that it is going to be helpful for the country. And because of the lot of new scheme which has already given by the finance minister, I feel that the schemes are really important. And also there is a lot of benefit. I am confident that by all these schemes, 100% our economy and growth rate will be increased and creating more employment potential. And our GDP growth will be going up to I am expecting within 2 years, it can go up to 12% or even more than that. So this is to be in agriculture sector, already the trends are good. Even the service sector, the trends are good. We have infrastructure, it is already power, water, transport, communication, everywhere. The way in which we are developing, I feel that it is to be a great achievement for the country to increase the growth rate, and that will be a great achievement for the government.
One quick follow-up on the scheme that you mentioned about common citizens investing in highway projects. When can we expect that final policy?
Sir, we are waiting for the approval from the SEBI, and after that, if anything we need, we will approach to finance minister to get the permission for that. I am just telling you that there is a project of 1,000 crore. We have to raise the money. Now presently the foreign investment, pension fund, insurance fund, big company are coming and they are investing already in NHI. In place of that, we will plan in a way that the small people, suppose one project from Delhi to Dehradun, if the project is there, we will open this project to the market and people can invest more than 1 lakh rupees in the project. We will try to give them assured return. But it is now, after the approval of the SEBI, we will declare it. Already principally my ministry has taken a decision, and by which we will allow the small people to invest for investment, making investment for infrastructure, and they will get good returns. And presently the rates on the deposits are very, very less, and they will get more returns, particularly retired people, the senior citizen, particularly the service class people, the small constable, journalist, even they can invest and they will get good returns from that.
Well, you've spoken about the electric mobility revolution several times, and I want to ask you, in the context of recent reports about Tesla seeking certain customs duty reliefs, what is the entire situation? What is your own personal stance on this matter?
Actually, frankly speaking, we are welcoming Tesla, but they should start their manufacture in India. If their plan is to making manufacturing in China and selling in India, then it is not to be a good thing for the country. So when the people meet me, I always telling them that India is a huge market. You are missing opportunity. Now the fact is that already our companies, the BMW, Hyundai, these are Toyota, all are now coming with the new invention, new research and good quality. Even the Tata and Mahindra also making a lot of good buses. Electric bus, the Indian buses are good. Now in Mumbai, there are 500, 900 buses they are purchasing. In Pune also, there are everywhere in the country now, buses has already electric buses are there. Even one of the electric bus company has started luxury bus from, you can take Delhi to Jaipur, Delhi to Ludhiana, Delhi to Chandigarh, Delhi to Dehradun, even Delhi to Mumbai, you can use electric bus. So these are the new research, new technology by which we can use electric as a fuel. And now for the already as the air pollution and water pollution is concerned, we are very much committed for ecology and environment. By using electric from solar, it can be a great thing. We are making 350 roadside amenities where there will be solar power will be available, and that power can be used for charging vehicles. So you understand, because of this green fuel, ultimately it is going to helpful for Indian economy. And then green hydrogen, the ethanol, it's going to helpful to the farmers, to rural agriculture and tribal area to create more jobs. So these are way, even for it is to be import substitute, cost effective, pollution free and indigenous. So green hydrogen, ethanol, electric, these are the fuel, bio LNG, bio CNG. Now we are trying to use biofuel in aviation. And that is the reason that the finance minister has taken a very good decision. Increase in ATF prices by 85%. So this is the great opportunity for adding of biofuel in ATF, by which we can reduce our import and also reduce the pollution. So these are the new things which are going to helpful for Indian economy.
Right.
That can be a great boost for all of us, particularly all stakeholders in the rural, agriculture, tribal area. Everywhere we are going to create jobs. And creating jobs is the most important task for the finance minister. And I'm really happy that because of the approach of the finance minister, 100%, this budget is going to helpful for to create more jobs in the country.
Your ministry has also taken several measures when it comes to consumers and their safety. One of these is the 6 airbags proposal. We're already hearing from industry that this is going to raise costs. What would you say on that matter?
First of all, you are absolutely correct. Every year in India, we have 5 lakh accidents, 350,000 the people who are facing lot of problem because of the accidents and injuries, and 150,000 deaths. And in the deaths, there are the people where age is from 18 to 32, young people. So this is a great loss for the country. And now the airbags cost is not very high. Day by day, because of the more number of production, and there is a cost is very reasonable. I already have a discussion with all companies. Now Indian scenario, we don't need to import. The people are making here, but it is going to save the life of the people. What is the concept? For economic model, there are only 2 airbags. Garib aadmi ne marna chahiye kya? Is it not our duty to save the life of the poor people? So we make it mandatory for all models. And as far as the standards is concerned, even also I am very much worried about it. This is the time for all Indian automobile manufacturer to think about the standards. And that is the reason that because of accident, we are losing a lot of people. We are highest in the world. And that is the reason that now we just for some 20 days in near Nagpur, near Varda, there was a big accident and 7 students from medical college, they lose their life. And one of the student was the son of our MLA. Very, very unfortunate. At any cost, we need to save the life of the young people. We have to reduce the accident, and for that reason, in road safety approach, we have taken a decision that airbags not in luxury model, but airbag also we will use in the economic model and to save the life of the people. That is the spirit behind it.
My final question, Gadkari ji, and this is to do with the reports about musical instruments or music from that being utilized instead of the noisy horns which create a lot of noise pollution. What is the plan there, sir?
Sir, you are absolutely correct. The air pollution, water pollution, and sound pollution, these are the three important challenges with the country. And I personally feel that we need to have really think seriously on this line. I'm just giving you an example. In the parliament, I have to answer the question related with Char Dham project. And where the Supreme Court has given a permission to cutting trees. But I have taken a conscious decision and convinced to all my officers that we will transplant every tree. We will not cut the tree. Even those we have got the permission, we will not do it.
Okay.
I am telling you, in Dwarka Express Highway, our NHI officers successfully transplanted 12,000 trees. So now we have decided to make a new cadre of contractors who will only work for transplantation of the tree, and we will make the policy, and I am going to take a big conference in Delhi by developing 1,000 to 1,500 contractor for transplantation of the tree. So my very, very sensitive and serious feeling that we have to address ecology and environment. The air pollution, water pollution, and sound pollution is a big problem. And you are already experiencing in Delhi. When I was Water Resources Minister for Namami Ganga, I given 6,000 crore to Delhi state for water, particularly for water pollution, to have a lot of big projects. We have actually succeeded to make clean Ganga, Aviral and Nirmal Ganga. That is to be a great achievement of our country, our government. Then we want to even also we want to make Aviral, Nirmal, Yamuna. So these are the priority for that. And second thing, we need to have a policy that we can convert waste into wealth. I'm telling you, for green hydrogen, we will use the sewage water of municipal corporation, and that water can be converted into green hydrogen by using solar power and wind power. There are small 3-meter windmills, and we can use it that with the small velocity we can make it. And power will be available, green power, and we will use the sewage water. In my own constituency in Nagpur from last 7 years, we are selling the toilet sewage water of the Nagpur to government of Maharashtra for power generation, which we are getting 325 crore rupees per year. Now our idea is to make the green hydrogen from that. We are in favor of it. We don't want black hydrogen, brown hydrogen. We want green hydrogen. So this green approach is important. And otherwise, now regarding this sound pollution, it is also a very big problem. So we have decided we want to take the opinion of the Environment and Forest Ministry by their act, and we will make it. There are for police siren, for ambulance siren, there are some problems. But regarding other cars, my idea is to use the siren, the sound like Indian music instrument we can use for that, but it can not be a nuisance for the people. And in the city particularly, it is to be most important. First of all, don't use horn. And if you want to use it, it will be a pleasure thing for all the people. I am working on that as early as possible. We will make the policy. We will change the law. There is no expenditure from automobile industry. It is a very, very simple thing. But ultimately, it is going to indicate our approach with ecology and environment, where we need to protect sound pollution, air pollution, and water pollution. These are the biggest concern. And for ecology and environment, we are very much committed and sensitive. And that is the reason that we want to work for that.
Well, clearly, Gadkari ji, that will be music to everyone's ears, especially those who have to remain on the roads for many, many hours every day. As always, Nitin Gadkari ji, it has been a pleasure speaking with you and understanding how all of India is being connected and brought together by that massive road and highway program that you yourself are leading. Thank you very much for your time with us today. And if you've been watching, thank you very much.
The government has stepped on the Capex paddle in Budget 2022 to boost the economy, especially when the private sector has been hesitant to increase the Capex allocation. But it's now for the states to take up the challenge. We have Neelkant Mishra, Head of Equity Strategy India, Credit Suisse, joining us with his take on the budget this year and its impact on markets and retail investors. India Today's Global Business Editor Udayan Mukherjee will be in conversation with Neelkant Mishra.
To talk about what the budget could do for the stock market and the bond market and indeed the economy, I have with me today Neelkant Mishra of Credit Suisse. Neelkant, thanks very much for joining in. We've spoke around the budget and you stressed repeatedly the importance of execution with this Capex heavy growth plan that the government has unleashed. Does it still remain an area of concern for you? The fact that while outlay has been made for Capex, the center and particularly the states may not be able to execute it to get the multiplier effect which the finance minister is talking about.
Absolutely. In fact, my fear is that so not only the Capex outlays, which are about 2 trillion rupees extra, of which about 1 trillion or half of it, of the additional amount, is to be spent by the states. In addition to that, I think there is gross underestimation of revenues for both the fourth quarter of this financial year, as well as the estimates for the next financial year. And on the expenditure side, the targets for the fourth quarter are excessively high. So for example, government Capex in the first 9 months is up 30%. In the final quarter is expected to be up 80% year on year. And for the next year as well, about half of the additional Capex is to be spent by the states, on which we are relying on their ability to execute. The government cash balance, in my view, which was already 5.5 trillion when we last spoke, that was after the economic survey, I think the number could be closer to 7 trillion by the end of this financial year.
This is disturbing, Neelkant. And in your experience and analysis, what is the problem? I mean, are states able to do some kind of Capex better than others? And the kind of Capex which the finance minister is talking about, which is primarily infrastructure, which actually has a very good multiplier effect, is that the specific kind of Capex which the states often are not able to deliver on?
No, I think states can do Capex. It's just that it takes time to scale up. And a lot of that scale up is actually dependent on physical files moving, people coming to office, everyone being in office, everyone being motivated. And I think all of those challenges have plagued the response of the state governments in the last 2 years, that their processes are very physical file dependent. And unless everyone is in office, that can't work. It's illegal to take some files out of office. There are no tools to work from home. The automation of process flows, of documentation has actually not been done. Some of it deliberately. Some officials do not want the transparency, but some of it just because of the slow process of automation and adoption of computers. So work from home, which for you and me has worked more or less seamlessly, is not something that has been an option for state governments. But I think more importantly, the type of Capex that the central government would like the states to work on is the more distributed kind. Right? So I think in principle, the decision to let states spend more is the right one, right? Because we need more Capex on health, we need more Capex on education, we need more Capex on urban infrastructure, we need more primary healthcare centers, we need more rural roads, we need last mile power distribution. A lot of this is actually needs to be done by the state governments. The central government occasionally intervenes, like the Pradhan Mantri Aabha Yojana. Rural housing is a state subject. Rural electrification is a state subject. Rural roads are state subjects. But the center runs schemes. But there has been a lot of criticism that the CSS, the centrally sponsored schemes, are taking away a lot of the fiscal space of the states, because the center, allocates 50, 60, 70%, and the rest has to come from the states, and that they lose the discretion. So this making available of funds for the states to execute on is something which I think is a welcome move. But the concern that you raised, and I totally share, and I think it is actually a very serious one, is that they may not be able to scale up fast enough to drive the stimulus, that the economy needs at this stage.
Right. In any case, Neelkant, how influential is government capex? Because all of us get excited when we hear that government capex is going up 25%, 30%. But compared to the size of government capex as percentage of overall GDP and compared to private capex, do you think it really has the kind of firepower to galvanize a proper capex cycle in this country?
A very important question. So if you think through, so let's remove that 1 trillion rupees that the states have to send. It's more like a blank check, and we'll figure out how fast it is spent and what it is spent. But if you see the increased allocations where we have some data, so there's about 15,000 crores, 150 billion rupees on the Nal Se Jal scheme. There is another 15,000 crores on defense capex. There is about 30,000 crores odd on roads and rail. Now, all of this is 60,000 crores, which is a lot of money, right? But remember that FY23 GDP is going to be 260 trillion rupees. So 0.6 trillion of capex is not really going to move the needle. So I think what the commentators are excited about or consider to be positive is that instead of targeting near-term growth, right? So one of the classic problems which theoreticians have been highlighting with governments is that the temptation to spend other people's money, right? That you because of the monopoly on violence, the state takes the taxes and then decides to spend as it wishes, and that wish is thankfully focused on long-term productivity building projects rather than just distributing the cash in subsidies or just cash handouts. And so the fact that the government sort of did not fall prey to those inclinations is something which is positive. The fact that it wants to spend productively is also very positive. On a macro level, though, and you're absolutely right, I think it is the processes, it is the aggregate end demand which actually will drive the private sector capex, which tends to be a lot higher in terms of a GFCF. So just to give you numbers, in gross fixed capital formation, so if the total number is say 26 or 27% of GDP, about 7.1, 7.2% of GDP used to be, this is a pre-COVID state, was the share of the government, state plus center plus PSU. So about 1/4 of the total GFCF was driven by the governments. If this 7% goes to 8%, of course it is reasonable and substantial, but not substantial. But it is not enough to drive the private sector capex cycle. But the good thing is that the other two elements of GFCF, so there's a private corporate GFCF, household sector, which is the residual. So the private sector GFCF actually has held up. So I am surprised when I hear that private corporates are. If you see that the government data, the CSO's data on GDP, you will find that private corporate investments, which are actually a data-driven thing, right? MCA 21 database, the 500,000 companies aggregate capex. So that number as a percentage of GDP is actually not slowed that much. The problem has been the household sector, where a lot of it was slowed down in dwelling construction. And so if we assume that the dwelling construction market is picking up, and I do believe that it is picking up, so there are very visible signs that we are starting a 3, 4, 5 year cycle. So then aggregate capex should be well supported. So there are many reasons why outside the budget, we should still be positive on investment activity.
So would it be a fair assumption? I mean, on the day of the budget, very simplistic assumptions are drawn because people are basically shooting off the cuff. So they hear capex and they say we should buy cement stocks and construction stocks because those will do well in the coming year. 1 week after the budget has been done and you've looked at the fine print as closely as you have, is it still a fair assumption to say anything to do with capex or construction should actually do well this year?
Well, cement and industrials and financials were sectors that we have been pushing now for several months. So it kind of supported our call, though I agree with you that if $500 billion or say even 1 trillion extra rupees are spent by the government, it doesn't really move the needle on the aggregate number that much, right? Especially as quite a bit of that capex may not necessarily be about cement, and it may not necessarily be about capital goods that where the order flow is. If you see the order flows that are coming through for the capital goods companies in this quarter, right, in the December quarter, and this was well before the budget, the execution and the revenues are well tepid to in line, but the order flow is surprising on the upside, and that holds true for a whole range of capital goods companies. So I think Capex has been surprising positively, and whether people bought it because of the budget, you're absolutely right. I think that this headline purchase, I think that may not have been appropriate, but even without that, I think there is visible momentum. In fact, on dwelling construction, I think that it can start adding to GDP from FY23 onwards, because last year, while real estate volumes picked up, sales picked up. As you know, sales are a wash in GDP, right? So if you have a ready-made apartment, you sell it out to someone, it doesn't really add much to GDP, only the brokerage amount is added. It is only when you start building new apartments, building new houses, you start launching new complexes, that's when the true GDP value add starts to happen. And that process, I think, will be kicking off now as the economy opens up again.
Where does this leave consumption, Neelkanth? Because if there was one crib that a lot of people had after the budget, is that you are dialing back revenue expenditure, which is fine, but do you have concerns about whether demand will come back in the second half of the year quite so strongly, will follow through after the initial rebound trade is over? Do you worry about consumption demand, and does that color your judgment about how to approach discretionary and FMCG through FY22?
No, the short answer is no. I don't worry about it, in the sense that, see, there are many levers in terms of from here onwards that still have to play out, right? So and the first and most important is that there are many low-income jobs that have still not come back. The schools are just starting off, and there are lakhs and lakhs of school teachers who used to earn 12,000-15,000 rupees a month, and where the school fees would be 300, 400, 200 rupees per month per student. Those schools have been shut for 2 years. The auto drivers, the rickshawalas who would ferry those kids to school, the uniform makers, the bag makers, the shoe makers, and all these kids will need new shoes and new uniforms and all that. So all of that yet needs to happen. As offices restart, we are going to have office boys, receptionists, the dabbawalas, the food delivery. The other day on budget day, they need those fast internet connections and data sharing for responding to the budget documents. And the building, they were cribbing that for 2 years they've had no business. So I think as the economy opens up, you will see a new surge, and I think a lot of that will be low-income consumption, because this will be, or say, travel and tourism. So Australia is now opening up for business, and I think the vice versa trade, the travel will also pick up. And just to give you things in perspective, $27 billion was the amount spent by foreign travelers, which is almost 1% of GDP, coming to India, and that had fallen to nearly zero. So there is a lot more that needs to happen, and almost all of that will be in low-income consumption, or the low-income earners, low-wage earners. Even the restart in construction activity. So October, November, I think November we saw a bit of a lull, but then since then, I think the incremental volumes are picking up. The incremental order flow activity levels are much better in January, and as the economy keeps opening up, I think you will see consumption revive. Some of the state government capex, which we earlier in our discussion were worried about stuff not happening. Remember that the governments and the people who are sitting in the governments do want to spend, right? Because it is in their interest as well to get that money spent. And so as that money hits the ground, you will see a lot more of construction activity. So if you plot the job losses from pre-pandemic levels to now, the job losses on the services side are in personal services, education, travel, and tourism. Other than that, I think everything is actually better. On the industry side, it is construction materials, so cement, tiles, bricks, It is also on equipment, which is the road equipment, the construction equipment, and on the auto side, which I think is supply driven. So hopefully that will get sorted out. So I think that the consumption improvement is likely to be more income driven, even if the government had given $500 billion, 1 trillion rupees more. And remember that what we see as a reduction in subsidy, I think the deliberate reduction in subsidy is only the PMGKY, the Pradhan Mantri Garib Kalyan Ann Yojana, that free grain scheme. The Narega the allocation decline is more an assumption that there will be low demand. If there's more demand, I think they'll have to increase allocation. The reduction in fertilizer subsidy is again an assumption that fertilizer prices globally will come off. Prices come off sometime in the middle of the year, and that's the assumption, right? So if those assumptions are not met, then that expenditure goes up. So what we, even if the government had spent $500 billion more, actually the incremental impact on consumption may not have been that substantial. It is much better and much more prudent to actually open up the economy, and then the income starts flowing, and the impact of that on consumption, where people become more comfortable with their future earnings as well, is going to be far more substantial. So I don't worry about it. Last point on discretionary versus staples. See, I think the discretionary demand improvement, quite a bit has actually already happened, in the sense that in the segments that we deal with in the stock markets, the consumption numbers are already reflecting, because the top 30% of the population did not really see that big a decline in their income and their consumption. So that level has already normalized. And what we are likely to see now is the improved consumption from the bottom 50%. And only staples and telecom among the listed sectors have that deeper penetration. Because even two-wheelers, only top 40% of India's households can afford two-wheelers. And that's also somewhat a balance sheet item, in the sense that till their wealth effect has recovered from the 2 years of losses, it is very hard to see two-wheeler demand coming off, growing from here. So on two-wheelers and discretionary in general, we're actually underweight, and we think staples would be the place to be as the economy opens up.
Okay. Now, the one area of concern on the day of the budget was the bond market, where yields shot up quite a bit, and one often sees the next day the reaction being moderated, but we did not see a great moderation. Maybe it's because of the higher than expected borrowing calendar of the government, or it could be something else. But do you worry that there is going to be a sticky kind of a hardening of yields, which may make things difficult this year round?
Well, I totally worry about it. The good thing about our current bond market dynamics is that a very small percent, 1-2%, is owned by foreigners, right? So if the government is paying more, there are people who are earning high yield, right? So it's more a transfer than a cost. And but what it does do is it restrains the government, and it also benchmarks rates higher, right? So there are many banks where the lending rates are earmarked to the GSEC yield. There are of course, if the government is borrowing at 6.97%, then everything else gets marked up, and that's a risk. And I think premature tightening of monetary conditions is a big risk for us, because the economy is just starting to heal, and here we have the term premium going to 2.9%. Now, why has that happened? I think it just reflects a lack of depth in our bond markets, because I'm an equities person. My mandate is mostly, and I've been looking at equities for a lot longer than I've been looking at bonds. So perhaps the bond market is seeing something that I don't see. But the way I look at it, it is that the government is eschewing, it is refraining from doing wasteful spending. It has managed to raise its tax to GDP. If you see the debt to GDP going up, right? So FY20 debt to GDP, that state plus center, was 75%. Right now, the government is at 87%. If you take government estimates for next year's GDP and the fiscal deficit targets and all of that. But if you adjust for the fact that there could be quite a bit of cash left over at the end of this year, and next year's assumptions are perhaps too low, and the fact that nominal GDP growth could be 13%, that 87 becomes 81. And when you see that 6% rise, why it has happened, 3% of that could be Capex. Now, if the government is spending and spending prudently, it is actually showing up on the ground in terms of better roads and drinking water and pipe drinking water for people, and quite a bit of that is just cleaning up of the balance sheet, right? So the government has decided to bring on budget what used to be off budget, and it has decided to clear its arrears, right? So export incentives on fertilizer subsidy arrears. So this is just a change of name. So instead of NHAI borrowing, it is the government borrowing. And therefore, from a crowding out perspective, I suspect that the bond market is overreacting. And in fact, what this suggests is actually a plumbing problem rather than a gross savings problem. So even on the day of the budget, we highlighted to investors that the net borrowing by the government as a percentage of incremental deposits has actually not gone up that much. Because remember that the nominal GDP is now within 6% of its pre-pandemic path, right? So because with the 18% growth in FY22, without it would have been at, so if nominal GDP was 100 in FY20, FY22 without the pandemic would have been 123. With a 1.5% decline in FY21 and an 18% growth in FY22, that has become 116. So it's only 6% below. And therefore, the tax to GDP and a lot of the assumptions are actually far healthier than what the bond market has been looking at. And savings have actually gone up in line with the nominal GDP as well. Perhaps, in fact, as a percentage of GDP, they've gone up. So I don't see this as a crowding out problem. I think this is primarily a plumbing problem, that it's at the base of it, at the core of it, it's an illiquid market. There are few opinion makers who set it, and once the momentum goes against you, then the bond yield says, because everyone just refuses to buy. And I think as clarity emerges, as the government itself figures out, perhaps when it's setting up the second half borrowing calendar, that both states and center do not need to borrow that much, I think this problem of excessively high bond yields too early in the cycle will be solved.
Okay, let's set the budget aside for a minute, Neelkant, and let me ask you about how you feel about the markets in the global context this year. Because the year has started on a rocky note. We can see turbulence in the American market very clearly, largely in the technology space. Do you think this year we might see severe headwinds from the global space, which will become much more important than the economic cycle that we're seeing in India? Or do you see the market differently?
No, absolutely. In fact, I couldn't agree more. In fact, what we are seeing now, when the lockdowns were on, the policymakers had to decide on the fly how big a stimulus they had to give, right? So they had to figure out, is $500 billion enough? Is 1 trillion enough? I'm talking about the US, of course. Is 1.5, 2 trillion enough? How much should you print? Should it be 60 billion a month? Should it be 200 billion a month? Should it be 500 billion a month? And now that we can see the pandemic in the rearview mirror, and touch wood for that, it is time to calibrate whether the responses were appropriate. And what we see now is that there is a lot of money in the overnight bank markets, not just in India, where, of course, a lot of it was created by the surplus dollars coming in, the balance of payment surplus, which the RBI had to neutralize. But even in the US and in Europe, so in the US, there is now $1.8, $1.9 trillion overnight, which the banks are parking back to the Federal Reserve, which means that this is excess money. Same in Europe. So they already had a big surplus, but that number shot up further to $4 trillion. Japan has been at 4.5 for a while. So this suggests that the monetary action was excessive. For almost for many years, I would say, we have forgotten, or at least the markets have forgotten, that high leverage and high interest cost burdens can lead to bankruptcies. And these are questions that have not been asked for quite a while. And now you see, after a long time, that the BB bond yields are starting to go up, and the bond markets are starting to price in some risk. At the same time, on the fiscal side, the US, retail sales went to 7, 8, 10 standard deviations above normal, which means statistically this shouldn't have happened. And so when you see that large a stimulus, and of course now that they're worrying about inflation, they're very clear that even if growth signs are weaker, and clearly with the Jan employment data, they have another month at least of retaining that hawkish stance. It is very clear that the primary target for policy now is inflation. It's not growth. And as the world recalibrates to that, I think you should expect a lot more of choppiness. And remember that outside of the US, the end demand trends are actually quite weak. So as the US has been falling back to trend in terms of retail sales, the aggregate global retail sales, so we run a proxy, and we had expected that it would fall below trend by March. It seems to have fallen below trend in December itself. So there'll be some incremental positives coming from as the economy is open post-Omicron, but I think the underlying demand trends are very weak, and I really worry about that. And I don't think the markets are fully pricing in the disruption in end demand, the concerns of what weak end demand can do to the financial system, in the sense that there would be junk bonds which will go under. There will be several concerns. And lastly, if you see oil prices, so while I'm reasonably comfortable that a supply response will occur in most metals, on oil I'm worried that the supply response may be constrained either by geopolitics or by the shale companies being cash rich but refusing to invest in fresh rigs or new drills. And what this means is that there is a lot of transfer from the oil producers or from the oil consumers to the oil producers as oil prices go up. And because the oil producing nations, the surpluses are concentrated in a few nations, it actually becomes a drag on overall growth. So lower oil prices are good for global growth, and higher oil prices, especially when supply is the constraint, are actually bad for global growth. And I think all of these concerns will become front and center over the next few months, and I expect a lot of choppiness in global markets. That should worry us, particularly given that the price to earnings premium that India is trading at right now is close to its highest levels, right? So the PE premium, the range used to be -5 to 35. We were at 38 in September, and then we saw a bit of a correction to 21, 22. And because in January, the global markets fell a lot more than we did, that number went up to 33% again. So given how stretched the PE multiples premium is, if the global markets are volatile, I think we'll be volatile as well.
Neelkant, we'll leave it there. Always a pleasure hearing your thoughts. Thank you very much for your time today.
Thank you.
In a bid to kickstart a virtuous cycle of investment, the union budget has sought to step up public investment by raising capital expenditure by 35.4%. But will high Capex spend have the desired impact on recovery and growth? K.K. Mistry, Vice Chairman and CEO, HDFC Limited, talks about the state of the Indian economy and how long before the recovery picks up pace. Mr. Mistry, great to have you with us. You really have a pulse on economic activity, and with the recent announcements of huge Capex spends planned by the government, do you anticipate that this will have the desired impact on recovery and growth?
I would certainly think so. I mentioned in a few programs prior to the budget that in my view, the focus on the budget should really be on growth, because growth will lead to an opening up of the economy. It will lead to more jobs getting created, and it will lead to generally more income in the hands of people. And ultimately, it will kickstart economic growth, because jobs will result in growth will result, or Capex will result in more manufacturing. It will result in more spending on infrastructure. It will result in more jobs getting created. And as jobs get created, people will have income. They will spend that money as demand increases in the economy. Manufacturers, producers of services will have to provide more services, produce more, which means more people get employed. So it's basically a multiplier effect that sets in. So I think it is absolutely the right thing to do because it will kickstart everything else in the economy.
Mr. Mistry, what's the kind of gestation period you see before all of this kicks in and we start to see results? A couple of quarters down the line, is that what you're anticipating? And which parts of industry, which sectors stand to benefit?
I mean, I would say during the course of the year. Now, whether it is going to be in Q1 or Q2 or Q3, that really depends on what the actual government program is in terms of how the expenditure is going to take place. But the fact that the government will spend so much money will mean that private sector will also step in its own way and start spending money, start, creating, building Capex, spending money on capital expenditure, buying goods, buying fixed assets and stuff like that. So it will create an all-round effect with both government funding and private sector funding coming in. And one of the things that everyone has been talking of for a very long time now is that private sector Capex cycle in India has been slow. And I think the best way to ignite that, the best way to get that going is for the government to also start spending money where automatically private sector will spend along with it.
Do you see the recovery as continuing to be uneven? There has been a lot of criticism, of course, that it's a K-shaped recovery. And given the focus on infra, on some of those pockets of the economy, will we continue to see an uneven recovery?
No, I think it will be broad-based across the board, but it's not going to be that everything is going to start from day one. To my mind, the bigger focus to start will be on infrastructure, because infrastructure and housing is what creates a lot of jobs. On housing, I thought, if I recall right, 48,000 crores was allocated, and for infrastructure, it'd probably be a lot more, building roads and things like that. So that will be the starting point, but that will, as I said earlier, lead to more jobs. And if jobs get created, demand increases in the economy, then it will kickstart all other sectors in the economy.
Would you have liked to see more incentives for housing, Mr. Mistry?
It is always a job of industry to ask for things, and it is for the government to decide what to give and what not to give. But I truly believe that a lot has been done for the housing sector. We've created that buzz, we created that impetus which was required for housing to take off. And we were in that 2017 to 2019 period, I would say 2017 to almost mid to end of 2020, we were seeing the demand really coming in only from tier 2 and tier 3 towns and not really from the metros. Now what has changed in the last year and a half or so is that the demand, apart from coming from tier 2, tier 3 towns, is also coming equally strong or even more stronger from the metros.
Okay.
So it's basically a broad-based growth that we are seeing.
And you see this demand for the affordable segment, because of course in the middle we had that entire phase where it was primarily driven by luxury.
Yeah, absolutely.
Okay.
Because a lot of the jobs which will get created because of this spending, this Capex spending, will help the lower middle income people also, which will help in affordable housing.
Now the RBI in its recent policy has been incredibly dovish, but when we do see the onset of rate hikes, how do you see that impacting demand?
Well, my personal view was that in the February policy, RBI would not change the rates. Yeah. There was a small chance that they could look at a reverse repo rate increase, certainly not a repo rate increase, and they've not done that. My sense is in the April policy, they could perhaps look at the reverse repo rate hike and then maybe in June look at repo hike or whatever else. But that is purely a function of where the data spans out, what kind of inflation numbers we report over the next 3-4 months, what happens to oil prices, what happens on this whole Russia-Ukraine issue. So there are so many macro factors today which are beyond we can't really envisage or know what's happening. But I think it's very important to understand that RBI historically has been fairly accurate in their projection of inflation. And if RBI believes that the inflation level going forward would be around 4.5%, I'm very happy to go with that. And to my mind, at 4.5%, you don't need to do any aggressive, increase in interest rates. People compare India with US. I think we are comparing apples and oranges. US is a completely different market. Inflation in US is 7.5%. Inflation in US was always very low, whereas inflation India historically was always a lot higher than US. And this is perhaps the first time in my whole career over so many years where I'm seeing that inflation in the US is higher than in India. So naturally, US will have to have a different policy, a much more aggressive policy in terms of raising rates.
Mr. Mistry, then projections for growth, realistic or conservative, according to you?
I would say that these projections are broadly in line. However, economic activity has picked up very substantially. We see that on a day-to-day basis. For example, if you look at the traffic on the streets of big cities, whether it's Mumbai or Delhi or Bangalore or wherever, it's now more than what it used to be in pre-COVID times. So obviously, if there is so much traffic, it means economic activity is back to normal. Hotels are running full, restaurants are running full, people are going out and shopping, shops are running full. So all of this will lead to more and more economic activity. And if the economic activity continues to rise, then yes, these projections that the government has made could very well end up being a lot more.
And would you say that the structural story, the domestic story, the India story remains intact?
I think India's strength is really its demographics. As you know, 2/3 of our population is below 35 years of age, which means there is such a large part of our population which has not even been exposed to a whole host of financial products, which they will be exposed to as they grow older and older. And therefore, honestly, in my opinion, the scope for growth in India in the coming, I won't say years, I would say even decades, is extremely strong.
Mr. Mistry, thanks so much for joining us here on Business Today. Great to have you with us. With a steady performance and quick revival, the real estate sector regained the buyers' and investors' trust and further picked up growth momentum. After 3 waves of COVID-19, there has been a historic rebound across the realty sector in India. To talk more about this and to draw an analogy with millennial sentiment of housing, BTTV's principal correspondent Karishma Sudani spoke to leading voices of the real estate sector on what's the future of Indian realty in a post-pandemic world.
I'm Karishma Sudani, and with me today is a stellar panel of guests. I'm joined by Mr. Anuj Puri, Chairman, Anurag Property Consultants, Mr. Ghulam Zia, Executive Director, Knight Frank, and I have Mr. Dhruv Agarwal, who's Group CEO, Prop Tiger Housing and Makanwala.com. That's a lot of designations to hold. Thank you, gentlemen, for joining today's session on brainstorming the real estate sector in India is going to take a wider stance and discuss how the sector has been a key contributor towards Indian economy and building value in the tough dynamic. So I'm going to start with you, Mr. Puri. 3 waves of COVID-19 and yet 2021 saw a historic rebound with the housing sales. Are we expecting this momentum to be the same in 2022 also?
So we're hoping so, Karishma, that the momentum will continue. I must say that it was a pleasant surprise. As soon as the lockdowns lifted after the first wave, the bounce back on the demand for residential was pretty, impressive. And at that time, we thought it may have been a pent-up demand, but then it continued towards the end of 2020, beginning of 2021, until we had the second wave. And similarly, Karishma, once the markets opened after the second wave, the bounce back was pretty decent. We've now had the Omicron, and we are hoping that the bounce back, does come back similar to what we saw in the first and the second wave. Maybe fundamentally, there are a few things that are working for the residential sector. And Karishma, it is not only in India, by the way. It is across the board. So, whether you take the US, I was reading this morning, whether it is Singapore, Singapore, the property prices on the residential are hitting record high. And most of the expensive properties are being bought by the millennials, by the youngsters. Which is also very interesting. And, whether it's UK, Amsterdam, Australia, India. So across the board, it's a global phenomena that we are seeing residential demand go up, whether it is social security, whether it is work from home, whether it's people wanting larger, better places, whether it's the home loan rates, or whether it's just that the millennials, who were staying in rent were treated very differently by the societies in comparison to if you were owning an apartment in that society. So, more tougher rules if you were a tenant versus if you were the apartment owner. So I think it's a combination of a number of things that has led to such a strong, growth back. We're hoping, to answer your question, that 2022 calendar year remains as solid as what we have seen after the opening up of the markets from the first wave.
You're right. I'm going to pick up that key point on the millennials part you spoke about, and I'm going to get Dhruv in this conversation. Dhruv, I belong to this millennial thought of mind between 25 to 30 years that, we shell our 50% of salaries on rent, and it's for houses that are bigger in size, because you see the millennial thought mentality can't really make it up to settle for small crammed places. So when we think of buying a house, we have a very urban aspect sentiment related to it. So is this the new conventional that you are also seeing versus the 4 people family norm that existed back then?
It's very interesting. Karishma, what Anuj just mentioned as well, that I think things have significantly changed, post-COVID. I would say that, prior to COVID, I would say the younger millennials, because millennials also, like anybody born after 1980, so, they're still fairly old, like 42. But I would say that the younger millennials and Gen Z, frankly, I used to get worried prior to COVID that there's probably a trend, growing trend of people actually wanting to live in shared spaces. The whole co-living sector was booming and really threatening home ownership, not sort of in the immediate future, but if you look at it from a secular trend, 10-year viewpoint, it was actually a worrying trend. And this generation essentially, believes in experiences. They don't believe in spending a lot of money in a single asset and locking themselves down, because not only does that, take a lot of money and put it in one spot, it also somewhat encumbers you to the place where you bought your home. So for them, it was all about, use all the money I earned in getting experiences, the kind of experiences maybe we never had growing up or couldn't dream of, while growing up at that age. Today, of course, is different. So I think that was a trend which I was seeing increasingly, prior to COVID. But I think COVID changed everything. I think, people realized, that they were facing challenges in some of the co-living spaces they were living in. They were facing challenges in the rental homes they were living in. And they realized that the only safe haven for them really, was their own home, right? At the end of the day, many people went back to their parents' homes, their hometowns, for that safety and security, which became paramount, during COVID. I think that particular shift in mindset, or how you relate to a home, I think has changed for everyone. And millennials who were sort of going more towards the, sort of sharing aspect of living, and even Gen Z, I think now they are all recalibrating their thought and saying maybe it's not a bad idea after all, to own a home.
Well, you're right. Actually, I'd like to add to that, it's kind of supercharging the housing market, and maybe Mr. Ghulam Zia, you can contribute to this, that, how it's that generation which earlier, like Dhruv also mentioned, which didn't want to buy a house earlier, but now is eventually interested in the post-pandemic housing purchase. Is that a trend that you are seeing across cities? And if yes, which kind of cities probably are seeing this spike?
I would slightly try to broad base it, not just focusing on a specific generation of Gen Zs and millennials, because it's a bit too soon for us to convincingly give the credit of this bounce back only to that segment of market, because the growth in market is such wide base. It is so broad based a bounce back that giving credit to just 1 or 2 segments may not, at least now, be good enough. So I would say, when we are talking about this bounce back, we have to also think about almost about 7-8 years of real estate depression that the industry had gone through, housing market I'm talking about. And that was the time when, incidentally, Indian economy was bouncing. It was actually doing much, much better. You talk about any sector, job growth, economic growth, etc., was all going well. It was only the housing sale which was just not picking up in spite of various government interventions, SOPs and this and that and so on. So what has really changed today? When we're talking about the bounce back in market, we have to also understand that those 7-8 years of pent-up demand also has to be thought about. Typically we were looking at about at least 3 to 4 lakh housing sales in the top 7-8 cities of fresh sales. Of course, I'm not talking about second sales. So those were the numbers when the housing market started sliding down. So from there, it came down to just about lakh and a half or two. So I have to look at that number. Where are those guys who found new jobs in that 5-6 years prior to pandemic? Where are those guys who are they into rental housing or co-living or whatever? And as both the gentlemen Dhruv and Anuj spoke about, that pandemic brought in some sense of owning an apartment, but these are the same people who had money, who had parked their funds somewhere, waiting in the wings for the markets to look good. And if you just talk about last 1 year, a couple of quarters of a bounce back, I would want to believe that 5-6 years of a depression that we're going through is still to be catered to. So if your question to start with was, is this really something where we would see the party going on? I want to believe yes. Their numbers are so strong. All those guys who found jobs, I'm sure I'm not discounting those who may have lost jobs during pandemic, etc. But even that bounce back, the job numbers are today looking so good. So with all that falling in place, I would want to call it a broad-based bounce back, not just to a certain segment of market or a region. Your next question was, is it a particular region where the housing sales are going on? Well, we are looking at numbers not just in top 8 cities, but even tier 2 and tier 3 cities. As we're talking about, the youngsters who are in tech sector are actually back to their places where they belong. And that is where they're buying their houses. So this is actually very, very democratic. I would say, while Anuj was talking about global, I would keep my focus on India alone and say that this is not something restricted to a Mumbai, South Mumbai, or a high-end in Delhi or something like that. It's actually broad-based. It's all over. And I would want to conclude that it is here to stay.
Right. Now, that is something we are talking about, the residential side of it. Mr. Zia, if you could also comment, while we were talking about the rebound perspective, have you also seen that on the commercial side of the business?
Well, commercial side is slightly complicated. It is not so simple like housing. And here it is, while earlier we spoke about youngsters going back to the towns, etc., where they come from and so on. So especially in tech sector, and let's not forget that tech sector actually contributes at least 50% of the office market, if not more, even today. So in this, there is a worry. So the cities where it is essentially driven by tech sector, talk about Bengaluru, Chennai, Hyderabad, in these markets, the trend is slightly different. But in the others like Mumbai and Delhi and many of the other markets where the share of non-tech office occupiers is large enough, the people coming back to office is actually the way we would have seen pre-COVID numbers. So I would say that it's not very simple to say that in next 2 quarters, we shall see office sector getting back to the numbers that we were looking at pre-COVID, but it's bouncing back. People are requiring jobs. And let's not forget that especially the tech sector has recruited record number of people in last year and a half. So whenever the back to work shall happen, they will require large number of office spaces. So I'm very hopeful that as times turn, as pandemic is behind us, even the office sector shall rewrite the history, but we'll have to wait for it. Maybe a couple of more quarters. Let's be patient. It's about to bounce back.
Got it. While we get back to that, Anuj, you could comment a bit on the recent good news that came for the sector. I mean, it's definitely a temporary breather with the RBI monetary policy that kept the low interest rate regime going on. They've taken this accommodative stance, and that's been there since the pandemic. If I'm right, it's in October 2020 that they are careful of the economic growth and what the consumers want. But Anuj, do you think that this, of course, could be influenced by certain other global factors going ahead?
So, Karishma, as you rightly said, it is good news that the interest rates haven't yet started to climb. At some stage, they will, because we're seeing that at a global level. And absolutely correct that the way RBI governor looked at the Indian economy, there has been a bit more time given before the interest rates will start to rise. It does really help. Low home loan rates does really help on both accounts. One, financial, and second is sentimental. So whilst the interest rates start to move up, the financial will get impacted. What gets more impacted is the sentiment, that it starts to really take a negative outlook. But in this case, Karishma, I do feel is that the ability to absorb higher interest rates from where they are today, I mean, it's the lowest ever that we have seen the home loan rates. For the home buyer is there because, as Ghulam said earlier, last 5-6 years, the sector has been languishing before COVID. So the property prices haven't really gone up, but the salaries, the bonus, the commission, the payouts have continued to go up. Even if you take, Karishma, 5-6% growth in the salary year on year, the residential prices did not move forward. When you take the combination of ability to buy, the ability to buy has gone up by 25-30% because the salary has gone up, yet the real estate prices haven't gone up during that period of time, and hence the affordability has become that much more easier for the buyer.
Sorry to intervene, but are you telling me that the housing prices have not increased?
That's right. Largely, they have been pretty stagnant in that. So there are two things that are going to happen, Karishma. At some stage, the interest rates will start to go up. And that's a global phenomenon. We'll see that hopefully in India as well at some stage. But more importantly, what you will see immediately is because of the input prices going up, the construction prices going up, your residential prices will start to go up. Because the developers will only be able to take that much out of their profit. The rest they will have to pass to the consumer. I think the party will still continue as long as the greed does not set in of the developers, because the ability of the home buyer to pay a little more, because in the last 5-6 years their salary has gone up but the residential prices hasn't gone up, their now ability to pay a little higher on the residential price will very much be there. So I am not as unnerved. Yes, there will definitely be an impact on the sentiment if the interest rates go up. There will also be an impact because of the input cost, steel, cement, labor going up. The cost of residential will go up. It will impact somewhat, but not hugely, because over the last 5-6 years, the buyer his income or her income has gone up much more than what the property prices have gone up.
Right. So there could be a prospective increase because of the increase in other supplementary aspects. Picking that up and talking a bit about the sentiment, let me bring in Dhruv on this. Like Anuj also mentioned that, the sentiment could change a lot of factors. So tell me, from the industry point of view, from the industry sentiment, what has been the good and the bad from budget that you've picked up? I know that you're not happy, definitely, with no kind of tax rationalization on the real estate part. Is that true?
Look, from a budgetary standpoint, as you rightly observed, I mean, there was very little which was specifically directed at the sector. But having said that, I think the overall budget, was good for the economy. And I think the spend which has also been, allocated towards infrastructure spend, I think does tend to have a multiplier effect. And as more and more infrastructure develops in places, it always gives a fillip to the real estate sector. So I think that clearly from that standpoint, I think the budget overall at an economic level is very supportive of the sector in general. And real estate always tends to be, close to 7-8%, of the overall GDP. So anything which gives a boost to that, I think, has a benefit on the real estate sector. But having said that, I think the point which, Anuj made is critical. And, that's what's really been, driving, I think, this bounce back in demand, over the last 1 year. Every time the COVID sort of wave comes down, you see sort of a big uptick in demand. I think one is really the first thing we all spoke about, which is, a complete perception shift in people towards, wanting to own a home. And that's been hugely facilitated, by historically high affordability, because, as Anuj said, interest rates are at historic lows. Prices, our data shows that over the last 6 years, prices have gone up by about 2% CAGR in most of the top cities, which essentially means that in real terms, real estate prices have actually come down because they've been lower than what inflation has been over the last 5 or 6 years. And then, of course, with wage inflation, that's really helped stuff. I think the point Ghulam also made, that there's been this pent up demand over the last 5 or 6 years. I think that's very, very important. I think, if we just sort of dial back 6 years ago or 7 years ago, people were fairly disillusioned with this sector, right? There was a lot of mistrust amongst home buyers because there were many developers out there who had promised to deliver stuff, either did not deliver at all, or did not deliver in time, or did not deliver according to, the quality promised. I'm not talking about all developers, but there were quite a few people who kind of, gave a bad name to the sector, and which also basically broke the trust and confidence of the consumer. So I think, the advent of RERA, I think, which happened now, I think, 5 years ago, I think has brought that, confidence slowly back into the sector. And I think that's playing a big role as well. So clearly, from my standpoint, as I look forward, budget is sort of one aspect, but the overall tailwinds that I see for the sector in terms of affordability, consumer sentiment, change in perception towards home ownership, and even certain government policies at the state level. I think when we saw the stamp duty cuts in Mumbai, as well as in Karnataka, we also saw one recently in Calcutta. I think all of that, has been helping as well. So I think structurally, if you ask me, as well as cyclically, I think we are on the cusp of an upturn, for residential real estate. And I think there was nothing in the budget which sort of, undermined that. If anything, the overall sort of fillip to the economy, will further accentuate that upcycle.
Very key important point that Dhruv, you and Anuj have spoken about on the pent-up demand. And Ghulam, I'd like you to give some data on this, because I remember reading a Knight Frank report during Diwali in 2021, where it spoke about the crazy demand uptick sales that were seen, especially in Mumbai and Kolkata. Now, what is the on-ground situation? Any data to support that? I know I was reading also a report that said Kerala is in a bad shape currently. Is that true?
Well, starting with Mumbai, Karishma, the numbers have cooled down a bit, but these numbers, we are still looking at a monthly registration data of Mumbai municipality alone. Mumbai comprises of at least 5-6 other municipalities, the MMR region. The Mumbai municipality alone is still registering 7,000 to 8,000 apartments sold in a month, which is a great number. And these kind of numbers we haven't seen in last 10 years. The Jan-Feb numbers to 8,000-9,000 apartments sold is outstanding. And as I said, I'm still talking about only Mumbai municipality MCGM numbers. When you look at the whole MMR, the numbers are much, much larger and bigger. Kolkata, however, did see a bad January. And that January numbers are worrisome, but we would want to believe that there are always ups and downs. And of course, the markets, because it was a huge uptick that we saw in Kolkata between September, October, November, essentially. December was also not that hot, but those 3-4 months did see a huge number of transactions. And those numbers have started cooling down. However, these numbers are still better than pre-COVID numbers, what I would want to tell you. And that is what is, and We are talking about extremely stellar performances from Mumbai's, etc. But even Pune is doing a good number. Bangalore is doing a good number. So net transactions, and these transactions, mind you, and the number I'm talking about are the registration numbers, which include everything: first sales, second sales, etc. Not just the developer level sale. And the developer level sales have actually shot up a lot more. Because a lot of these completed apartments inventories which are lying in many of these cities really did see a lot of takers coming up and picking up, because even the numbers, the prices were in such category were pretty affordable. And the new launches, let's look at the new launches all across in the top metro cities, has been outstanding. So all these numbers are giving us confidence that the sales shall continue. And as earlier, all three of us spoke about the pent-up demand, these numbers are actually full of confidence, are actually a proof that the numbers are here to stay. A Mumbai number of about 8,000 transactions a month is something which we didn't see even when the stamp duty cuts had started at 3%. It's only when December of last year when we saw huge numbers, but that apart, 9,000 apartments sold without any stamp duty cut was unthinkable, even pre-COVID numbers. So if you're talking about sheer data, here it is. The data is also extremely positive. And wherever we do see a bit of a cool down in numbers, those numbers, if you want to take some breather, are still better than the pre-COVID numbers. So net data is telling you what's happening out there.
One, of course, is, what you see on the sales side, as Ghulam pointed out, one of the things I wanted to highlight was, if we look at traffic on digital portals, right? Digital real estate portals, like the ones we have, and of course, there are many out there as well. But if I look at the overall share of the market of the top 4 players, right? Between February of 2020, just prior to COVID, and today, the traffic as per SimilarWeb, which is a neutral source, which gives sort of the traffic information, that has on how many visits each of the sites have experienced, that has doubled between February of 2020 and February of 2022. So that it can be attributed to 2 factors. One, of course, is the increased digital adoption, which was forced by COVID across the board. So many people who were previously not searching for homes digitally have also come online. That could be one aspect. But the fact is that you're seeing that pent-up demand now show up, in audience numbers on our platform. And it's not just being driven by rent. In fact, if we see anything, it's the buy traffic, which is outstripping the rent traffic, on these platforms. But that clearly is a lead indicator of what's in store even ahead. So it's not just conjecture and hope. I think there is a real cyclical upturn. And month on month, as we keep looking at our audience numbers or traffic numbers, they are on the upswing. So clearly that pent-up demand is being backed by actual sales data. And the conjecture of pent-up demand by actual sales data and search data as well.
And just to complete my part, that whatever numbers, and since Drew was talking about rental, I was only focusing on sales number. These transactions were just sales transactions. I'm not even talking about rental numbers in these, Karishma.
Okay. So on that, what would you rate the good and worse on a table from 1 to 10? What could be at 1 and what could be at 10 from a geographical point of view?
So look, rather than sort of, listing 1 to 10, in terms of specific cities, what I wanted to share one trend with you. While we've seen audience numbers go up significantly in the tier 1 cities, where we've been surprised is the growth in audience, in tier 2 and tier 3 cities. I think, Ghulam was alluding to that earlier, talking about how, the demand is broad-based, not driven by, one single geography within the country or a specific segment of buyer, but it's broad-based. So that is visible even in our search data, where we've seen actually traffic from tier 2 and tier 3 cities actually outstrip the growth in traffic in, tier 1 cities. So that clearly, I think again points to 2 things. One is the fact that all these tech workers who sort of gone back, their hometowns are buying there and are searching for, buying homes, digitally. And the second thing is, of course, overall, increase in digital adoption for, searching for real estate. But I would say tier 2 really has been the star or the surprise factor for us, in our search data.
Right. Before I go to Anuj, Dhruv, I have a quick follow-up question for you. While you were talking about the traffic part, I wanted to know, are you also seeing some kind of traffic and interest towards the luxury market?
So, I don't have the immediate data, with me on sales.
On an average.
But look, my perception, about real estate in India generally is demand seems to be fairly, inelastic at the luxury price points. COVID, despite all the hardships which it has caused, to people globally, I think the wealth of the rich people across the globe, or the 1%ers as they call them, has only gone up. You've seen what's happened to the stock markets, in the last 2 years, and a lot of that money has flown into luxury real estate as well. So I think luxury real estate in India has fairly been, consistent in terms of its performance. Demand tends to be more inelastic, and the last 2 years, the kind of wealth creation we've seen will only drive up demand for that segment going forward.
Fair enough. Anuj, let me come to you. And from a macro perspective, I'd like your view. If we talk about the global real estate market, somewhere India is still seen as the under-leveraged one. Where do you see the opportunity for the Indian real estate?
If I can just add what Dhruv said on both those points, I think he covered a lot of it. So we're finding, Karishma, on the luxury, exactly what Dhruv has said is that the rich have become more richer. What we used to sell in a month on luxury, and luxury, I'm talking about $1 million plus homes, we are now selling it in a week, the same quantum of that. And then Dhruv is absolutely correct, as whether it is the stock market, whether it is their own wealth, whether it is in cities like Bombay, Karishma, these luxury apartments have now been delivered. So they're ready to go and occupy. So that also really helped the buyers, because they could pay the money today and they were sort of cocooned in small homes with joint family. And they would usually go to CCI or Breach Candy or Wellington Club in Bombay. These clubs were closed during COVID. The buildings that they were residing in didn't have common facilities of a certain quality. And now, on the other hand, they've made money. These buildings have got completed, the newer buildings. They're wanting to now go out and buy. So clearly, a lot of demand on luxury. Luxury, particularly, Karishma, those which are completed with lock and key today. And again, Dhruv said the right thing is on the cities. So the way that we look at ranking the top 5 is MMR, absolutely more than twice the second. The number 2 is Bangalore, number 3 is NCR, Pune, Hyderabad, and then it goes on to the number 10 city. But clearly MMR is very, very dominant with both the volume and the value. Value, definitely everybody can understand, because Bombay is pretty expensive for real estate. So in terms of value, it does exceptionally well. The question that you asked me is that, what are we looking at the trends, and what are 1 or 2 things that we think should come in? So Karishma, I'm quite hopeful that rental housing in India will find its way. Today, if you look at it at a global level, rental housing is owned by a number of private equity, which means these are large buildings, complexes. They are owned by private equity guys or pension funds, and they rent it out. In India, we really don't have that concept of renting it out, because the yields, the return on income is so low that it just doesn't make any sense for any investor to buy an apartment and rent it out, because you're getting 2-3% return. I think you're going to is either sponsored by the government, or the way that the rentals are growing up and the property prices where they are, that there will be initiatives over the next 2-3 years being taken by private equity. As I said, either they'll be sponsored by government, where they allocate land parcels only for rental housing. Because if you look at it, we said it's housing for all 2022. Housing for all didn't mean that you have to actually buy it. Housing for all could also mean rental housing. So, in a way, I was looking forward in this budget that there should have been something on the rental housing. But I do believe, there will be something that will come out at the center level and then picked up by the state levels on rental housing, where large complexes will be built and owned by private equity or investors, which they will rent it out on a regular income basis.
But Anuj, do you think that the whole affordable housing scheme, is it being justified? Is it going on the right track?
Absolutely, Karishma. Absolutely. So on both accounts, from the government, if you look at it, even this year, they have earmarked 48,000 crores more on for affordable housing. And more importantly, the private sector on the PMAY, Pradhan Mantri Awas Yojana, has really picked it up. And they picked it up not because the government was giving fiscal and financial benefits, but because the demand is a lot more in that sector. So it has started to work. All that I feel there is a bit missing there is that there should be some rental housing policy that comes out for affordable housing. And that, to my mind, Krishna, will come out if the government is able to earmark some land parcels to say you can only do affordable housing on this land parcel and it is for rental. Because otherwise, I'm saying is, how do you complete that dream of housing for all? Because not everybody is going to be able to afford a home, but they can rent a home. So you build beautiful buildings, rent it out 20,000, 25,000 rupees a month or 15,000 rupees a month for affordable housing. And there'll be a number of investors, number of private equity who will sponsor to come in and do this development based on the returns.
Right. And that has been a long-standing demand from the industry to the government.
I think the government is also looking at it, Karishma, very seriously because, real estate is a state subject. So the center is also looking at it, what we need to do to propagate it with the states so that ultimately it is up to the state if they have to pick up on the rental housing.
We haven't really addressed the elephant in the room, and I'd like to get Ghulam to talk about it. How about unsold inventory? We've talked on the good side of it and rest, but what is the status of unsold inventory, keeping in mind that there were, almost 2.5 waves of pandemic, I call it?
We believe that unsold inventory has been blown out of proportion. All through when we talk about 4 lakh houses out there to be sold or such kind of a number, please look at it this way. An apartment is out in the market to be sold when a developer launches the project, when he has his permissions, etc., especially under RERA, he has to very particularly get all his paperwork done before he, breaks the ground. And the moment he's breaking the ground, he's out there to sell. Please understand that the whole construction cycle is going to take you at least 2 to 3 years minimum. And during that, this will be an inventory. Whatever apartment he brings to the market is an inventory. So you have to look at it at that perspective. If I'm talking about 4.5 lakh apartments at any given point of time, and you're absorbing 2.5 lakh apartment every year, which means that your stock out there on the inventory out there is not worth more than 1.5 years or 2. Which means that by the time a developer completes his projects, it is all sold out. So which is not really a problem at all. I'm actually worried all through. Whenever we're talking about those number of 400,000 apartments or 500,000 apartments, I would always look at it as a big problem. Because and that's exactly is the key. If actually you start going back to the numbers that you had in the good days, real estate, the home sales, etc., then this inventory will be nowhere. And then you will see the price pressure, prices shooting up. So to me, these inventory numbers are actually a concern. We would need developers to start launching more projects. Of course, they're not launching it because many of them are in dire straits or trying to sort their problems out, which happened due to last 5-6 years of continuous real estate troubles, etc. But today, when the things are looking up, we would need that inventory to come up because next year when you and I will be sitting and discussing on such kind of a panel, would be worried about the prices shooting up. So to me, inventory, you call it a big elephant. I would say it's blown out of proportion. Let's not really over glamorize it and say that the industry is going through a tough patch purely looking at that one number. That number is not representing the health of the whole industry. It's just one small number and it has to be given only that, a small number. It's not really a cause to worry at all.
Point taken, not the elephant in the room. Last question, I'm going to take it to Dhruv. We are short on time, but definitely the topic is always something that includes a lot to talk about. Dhruv, another key important announcement that was made in budget was on the electric vehicle battery swapping policy. And that is very much related to how the sustainable housing is going to turn out. I'm seeking your opinion on this, that how are we going to look at refurbishing or changing the whole outlook of housing in order to install this battery infrastructure? Because I've lived in Bombay for 4 years and I don't think there is place to put any kind of these battery chargers there at least.
Look, I think, that's a very important point you made, Karishma. I think, ultimately, look, while there's a lot of talk about, EVs, it's still a very, very small percentage of the overall number of cars sold. But if you project 10 years down, I think, we're going to see the internal combustion engine, start looking like a relic, right? It's going to happen. And as that sort of change happens over the next, 10 years or more, I think you're going to start seeing that infrastructure, starting to get developed. And more developers will start incorporating, this sort of the charging infrastructure, etc. Within the developments. I think the way community housing is designed, with spaces, I think it allows for that infrastructure, to be created, at the design stage. I think it's a matter of time before you're going to start seeing, homes being marketed with EV charging stations as a USP. Because as the younger generation starts to move more towards buying electric vehicles, that will become an important sales point for them. So you'll be surprised at the savvy and enterprise which developers have, and they will soon incorporate that as a major selling point for their developments. And then once one or two start doing it, it'll become mainstream. That's what my belief is.
But there's a small concern on this, Karishma. What Dhruv is talking about is the inventory henceforth, which will have the infrastructure. But how do we ensure that the millions of apartments which are already existing, how do they come on the bandwagon is something which has to be seen. And unfortunately, not much is happening because it's once again a state, as earlier we spoke about, housing is a state subject. So states have to ensure that the housing societies, etc., the condominiums, etc., come on board and start installing these. And unfortunately, because I'm a part of such condominium myself, I know that till last year we're talking about putting up solar capacities, and this year a lot of those incentives are actually gone. So today, if I have to really put up my solar system so that my EVs are also connected to that, then my problem is that suddenly a lot of those duty corrections or the duty incentives are today gone. So there is no incentive from that end. So even if I'm providing the EV chargings, etc., unless my solar or the unconventional, whatever the other energy sources I was to really boost up to are not connecting together, this will still be just one of the aspects. And I'm obviously not, as a condominium, I'm not too keen to invest in putting up the battery charges unless and until I'm getting some supply incentives as well. So this is much larger perspective which has to be taken at all the levels together, and not just for the fresh homes to be launched today.
Right. Anuj, I'm going to get your concluding word on what Ghulam pointed, because I think that's very important. You see, these are, what do I say? These are long-term goals with short-term incentives. Would you agree to that?
Yes and no, Karishma. Because if you look at it commercial on the office side, how it picked up is that the office occupier, the lessee, was mandating the developer that I want to go into a platinum rated building. I want to go into a sustainable building. So these were largely multinationals that in their charter had written that we are going to be sort of zero net carbon. And hence we need to take buildings which are gold rated or platinum rated. And that's how sustainability, the developers were forced to build the buildings. It wasn't as much tax incentives. It started with that. But when the occupiers started to demand it, you had to do it. Otherwise, your building was not going to get leased out because the preference of any of these corporate was to do that. I do feel is, Karishma, once, people in Ghulam society start to ask, once the buyer starts to ask, once the new home buyer says, the millennial is very concerned about sustainability, and they're going to say, I want a sustainable development. I want a building which has got all these sustainability, or even the existing occupiers. That's when it will start to propagate. So Ghulam is right. That's why I said is yes and no. Yes, in a way that it needs a catalyst, which is these tax incentives. But ultimately, Karishma, it has to find its own way from the home buyer. And the home buyer will have to say, and that's when the developer will get mandated to start to build residential in a much more sustainable manner, the way that they're doing today for the offices.
Okay, thank you very much, Anuj. Thank you, gentlemen. It was a pleasure to talk to you. We had Ghulam, we had Dhruv, we had Anuj share their perspective. It was discussing, I'd say, the reality of realty with the best from the field. Thank you very much for joining.
India's ambition of boosting its manufacturing sector to an all-time high of 25% of GDP and growing at 9% a year on a sustained basis to become a $5 trillion economy depends substantially on the infrastructure sector. Being the key driver for the Indian economy, the government has sharply increased the outlay for capital expenditure by 35.4% for FY23. BTTV's associate editor Chetan Bhutani spoke to leading voices in the infrastructure space and discussed how can the enhanced focus on infra meet with timely execution of projects.
Well, hello and a very warm welcome to BT Brainstorm 2022, a Business Today event to discuss all matters economy and business. I am Chetan Bhutani, and with me, a stellar panel with me today, Ms. Dakshita Das, former Additional Member Finance, Ministry of Railways, Mr. P.R. Jaishankar, Managing Director of India Infrastructure Finance Company Limited, Mr. Vijay Chibbar, DG Electric Power Transmission Association and former Secretary to the Government of India, and Vaibhav Dange, expert on infrastructure and public policy. Thank you all for speaking to us on this BT's Brainstorm 2022. My first question to Ms. Das. Thank you, ma'am, for joining us on BT Brainstorm. Ma'am, how does the increased Capex contribute, especially in the terms of contribution to the transport sector to GDP in India?
So infra spending is extremely important because it significantly boosts the GDP. India has been hovering around 3 to 4%, and recent past it has come down. So in that sense, it's very critical, the kind of Capex which is envisaged, because when the economy is being tweaked towards the supply side, it's very important that the infrastructure copes up with the higher production values. And this in particular has a bearing on the transport sector, that is both railways, roads, as well as your airspace. So in a very limited sense, the transport GDP, which has been hovering around 6%, the main contributor to that is the highway sector, where aggressively and significantly there has been a rapid expansion. So I think we are on the right track, because since we have seen in the COVID times that a lot of emphasis has gone on supply side, logically, the infra space also has to expand to take care of the process part.
Right. Well, absolutely. Well, Mr. Chibbar, the next one to you. Highway sector saw a record allocation, but the devil lies in the detail when I say this, because NHAI's borrowing has literally reduced substantially. So if NHAI is not allowed to raise funds, and do you think that the allocation from the budget, the toll money, and of course the highway monetization would be enough for 25,000 kilometer target that the government has set?
So I think let me start by complimenting the government for its continued focus on infrastructure, because it's not just platitudes, but there is money where the mouth is. And particularly for railways and roads, I think the allocations have seen a substantial step up. But I take you back to the National Infrastructure Pipeline, which is the grand design, and which requires a humongous amount of investments. Now, if you see the grand design itself, almost 50% or a little above 50% of the money is envisaged to come from the private sector. So while It's correct that your focus is on the budget and the budget figures and the allocations per se. It's really the private sector which is required to kick in. And I think the focus really should be on what is it that we need to do more or further to ensure that private capital comes in. As regards your specific query regarding the allocations for the road sector, I think that's a huge step up. I mean, you can't always wish that the taxpayer would bankroll the entire thing. And monetization program, which is again a very big, large program, is something that can easily roll out in the road sector because projects are already complete. I think we should be looking at the TOT model very, very aggressively. This experiment at doing an InvIT and then calling it my InvIT. InvITs by definition are nobody's InvITs. They are an animal. They are a trust to hold assets. And if we are serious about monetization, I think we should go whole hog on the TOT. And I think NHAI is well equipped. The only caution here would be that you should give enough time to prospective bidders to do their due diligence. There's no point bringing in projects with 2 months notice, 3 months notice. Certainly foreign capital will not jump in with such short windows.
Well, absolutely, sir. In fact, Mr. Gadkari also pointed out the same thing, that you can't expect the taxman to do everything. Mr. Jaishankar, IFCL saw highest ever disbursements with respect to, and of course, sanctions, of course, 20,000 crore rupees and 9,000 crore rupees respectively. Don't you think that with the increased focus on Capex, is there a need for IFCL also to spend more or probably lend more?
Well, the fact that the infrastructure sector has compounding effect on the growth and development of any economy is not new. We know that it has its backward and forward linkages. And the Capex expenditure in the budget also, if I have to, refer to the budget, it has been raised by 35%. From 5.5 lakh crores to 7.5 lakh crores. So IIFCL is an arm of the government, and we are the apex institution to lend to infrastructure sector. Yes, we have seen, despite the COVID and the pandemic times, the sector, we have been able to kind of show a remarkable growth even during this crucial time. Though, of course, I would have been happier with higher levels. But looking at it, we need to do a little more, right? I agree with you on that. As far as the overall demand is concerned, it's quite picking up, and we are seeing some projects getting back to its shape, what it was in the last 2 years. And I'm sure in the coming 6-7 months, everything should be back. And already we are seeing the road sector and a few other sectors, the revenue situations are in the pre-COVID, as it was in the pre-COVID days. So as it gets back to the normalcy, I'm sure the offtake, the credit offtake also will grow. And I can also say this on behalf of the bankers as well, banking sector, not just IIFCL, because IIFCL lends as a part of consortium of banks, and the entire banking sector would definitely see a better offtake in the coming days.
Right, sir. Mr. Dange, with National Infrastructure Pipeline and of course the PM Gati Shakti being officially the roadmap being rolled out, how can India's infra development endeavors come to timeline with respect to completely achieving the targets with respect to the timeline? The timeline, the implementation timeline is very important as far as the infra project goes. So how do you think with these two coming in and integrating the infra endeavors of the government, what needs to be done really to completely execute the projects on time?
I think in the budget, finance minister also suggested, and there has been a clear indication from last more than 1 year from the government, program like PM Gati Shakti with Honorable Prime Minister launch himself, primarily talks about increasing cooperation and coordination between the ministries. For example, finance minister suggested for a clearance, a common digital platform in the name of Parivesh, where clearances can be, done at a at a much faster pace than, these are the normal bottlenecks which we see into the infrastructure projects, whether it is highways, railways, or common bottlenecks. I think PM Gati Shakti and a focus on the overall infrastructure with a multimodal approach, I think is a key takeaway of this year's budget. So I'm completely convinced that with that focus, implementation can take a good pace. In fact, highway has shown it. A lot of other sectors have shown it. For example, railways, electrification in last 3 years, numbers are much startling than probably they were in last 15-20 years. So infrastructure is increasing at much faster pace. Not only highways, for example, metro, 10 years back, we were looking at only metros in 2 to 3 cities. Today we have 17 cities. They were talking about completion of phase 1, phase 2 of metros, and expanding the reach further. Same is happening in the airport sector. We have now 136 airport that are being completed. So I think the focus, of course, is on implementation. And I would also credit Finance Minister that she has focused on continuing that growth this year by focusing on infrastructure. Because close to 24th election, she will not have that leverage to probably focus on increasing the capital expenditure. In spite of there is a stress of COVID from last 2 years, and of course there is a fiscal stress on every finance minister. So looking at that, keeping that focus on, I think is very important, and that clearly is the message from the budget.
Right, sir. Ms. Das, I'll come to you now. What are the probable game changers? I asked this question because railway especially has a social obligation to carry the people of the country, length and breadth of the country. So, what are the probable game changes envisaged that can be done by the railways to boost Capex further?
So there's a very different model which operates in the railways as opposed to the highways. In highways, the government has done well, and Sir was there, Vaibhavji was there. What they have done is they've laid the legislative framework for a tariff sharing model between the promoter and the user. And there is a regular process by which both the maintenance as well as the increase in this happens. Railways is, however, carrying a large mix, which is its passenger operations is a largely subsidized area, which becomes a loss making. However, despite that, what the railways has been able to ensure is that its freight operations somehow are able to cover the gap which exists as far as the passenger operations are concerned. But that's not important. What's significant is some of the changes which the railways is seeing. You're seeing the Vande Bharat technology coming in, which is going to be very big. You're going to see the new kind of signaling, the TCAS technology, which is also going to be a game changer. So you have lightweight, speedier trains. And the Honorable Railway Minister very recently, I read somewhere, has announced that in order to boost the speed, all you need is perhaps looking at a different way of having elevated tracks. The point I'm making is that while railway continues to carry its social service obligations, at one level its constraint comes because of the paths. You see, unlike the highways where the movement can be seamless, and perhaps the jams which you see will only be at toll plazas, and even less now due to the automated toll system. What is happening in the railways is that you have a mix of traffic, but the dedicated freight corridor, which is shortly to be cleaned up, and completed, the Vande Bharat, as well as a couple of other technological changes are going to make it a leaner and, let's say, a faster organization. And as Vaibhav has said, all of that is targeted to be done within a very limited time span because of 2024 coming.
Right. Ma'am, one more question to you, that the healthy PPPs, and same goes for everybody on the panel, please feel free to come in. The healthy PPPs and successful implementation of special purpose vehicles, I think, are the need for faster implementation of PPP projects, and especially any infrastructure project, greenfield or brownfield. So, ma'am, or Vijay sir, or Mr. Jaishankar, Mr. Dange, please feel free to come in. Do we really think that PPP needs to also make a comeback along with SPVs?
We have had a very healthy relationship with the SPVs and the railways, and some of the biggest success stories came in Gujarat, in the south, where the SPV model worked very well. There'll always be one bad case, but that doesn't say that there is no comfort with the others. But as far as PPP is concerned, I'm personally of the view, because I've worked in both ministries, that the road sector is very comfortable with PPP. But I'll leave that for other panelists to elaborate upon.
Mr. Chibber, I still very well remember while covering the ministry, you had actually been a big focus of PPP players as well, PPP model. But due to the lack of private participation, you were the one who probably kicked off the other models because, of course, the road construction cannot wait. So, but do you think it's now time for PPPs and SPVs to come back?
Certainly, most certainly. There was a crisis around 13-14, which we had to get out of, and therefore government spend had to be increased. And if you recall, very quickly thereafter, we brought in the hybrid annuity model, where the government spend came down to 40%. And so my way of looking at this is as follows. The hybrid annuity actually is a model which is tailor-made for the banking sector. It is absolutely taking on board all the concerns of the banking sector. And there was a doubt at that point in time, but I'm so glad that the entire banking fraternity has now owned up the hybrid model as something which is very suitable and very appropriate. It sends all the right signals. In PPP, the question is about sending the right signals. And I think we have now matured in the hybrid annuity. We should put in more and more projects into hybrid annuity and correspondingly bring back BOT toll in some manner. But I think Mrs. Das said something very interesting, and if you will indulge me for 1 minute, I will take you to another sector, because she said the legal framework is ready, the regulatory framework in the road sector has matured, and therefore you can respond to the situation as it emerges. Today, the banking sector is more comfortable, the construction industry has matured, and yes, certainly PPP should be brought back. But I'll take you to another sector, of another vertical of the infrastructure, which actually lends itself completely to private investment, and this is the transmission space in the power sector. And I'm wearing one of the hats where I look into that. And where the policy framework right from 2003, the Electricity Act of 2003, that talks about competition in the transmission space. The National Electricity Policy, which was notified in 2006, it clearly says, considering the magnitude of the expansion of the sector required, a sizable part of the investments will need to be brought in from the private sector. Take it forward to Transmission Policy of 16. It says the tariff of all new generation and transmission projects in the central sector shall continue to be determined on the basis of competitive bidding as per the tariff policy notified in 2006. It goes on further to say that further intrastate transmission projects shall be developed by state governments through competitive bidding. This is 2016. So what is the actual position on ground? If I share some data with you, you would be aghast. The spend on interstate transmission from 2013 to 21, we had 231 projects, of which 161 went to PGCIL on a nomination route, whereas only 70 were bid out through the competitive bidding route. Even out of this 70 which were bid out, PGCIL, which is a strong PSU, we are fortunate that in transmission space, we have a PSU which is fully functional. It is the big boy in the field. It was able to capture 33% of the projects even which were bid out. And this is a good sign. But let me take it forward. For the period 22 to 24, we are envisaging an investment of about 105 lakh crores. About 27,000 in the state sector and the rest in the central sector. Only 11% of this spend is coming through the competitive route. Now, going back to my my difficulty is that here is a sector with a policy which clearly says we must go through the transparent bidding route, and the actual empirical evidence tells you you're going absolutely in the opposite side. What is the benefit of competition? Let me just spell it out in 30 seconds. One is we have empirical evidence to show that projects rolled out on competition have been achieving a tariff lower than the nomination route, but to the extent of 45%, range of 25 to 45%. Tariff is a pass-through. That is, the consumers, that is the people of India, are paying for the higher tariff. Competition brings in not only lower tariffs, but it also brings in best technology, including through PGCIL. I am not saying that best technology is only coming from the private sector, but here is a space where even the public sector unit is capable of bringing in technology. So why don't you go down that route?
Right, Mr. Chibbar, would you? So basically, India, as you mentioned, that India has this transmission policy. Any particular clauses in the policy that you would like to highlight in particular that is probably disturbing the transmission operators?
Yeah. So no, it's not clauses. It's the lack of transparency in the way forward. Okay. It's the signal. As I said, in PPP, it's the signal. If you signal to the market that we will do pick and choose, and there is no transparency in which of the next projects will be brought into the market and which will be rolled out through a nomination route, the private sector says, why am I going into this vertical? Today, we have about 12 very healthy, large houses which have come into transmission space, but are beginning to doubt whether they should continue to work in this and happily move on to some other space where they are more welcomed. Why I'm signaling this particular vertical is that here is a vertical better than any other infra vertical for inviting in private sector. The entire spend can be done through private sector investments, the entire spend. Whereas in other sectors, including roads, we have certain challenges in saying that all the projects can be taken up through PPP. The point is, we have a grand design. We have agreed that bulk of the money will come from private sector. But the signals going out into the market through this one vertical are vitiating the entire welcoming approach that I think the PM sought to roll out when he rolled out the Gati Shakti program.
The success of PPP model, as Mr. Chibbar said, will ultimately lie in the dynamism of that PPP model that is done both from the private sector and on the government regulatory front. Mr. Chibbar and Ms. Das both were in the Road Highways Ministry, and the biggest probably signal, as Mr. Chibbar said, has been the competitiveness that has been brought into the whole highway sector, the kind of approachability that has brought to the highway sector, the kind of problem solving attitude that has come to the highway sector. I remember there are so many cabinet amendments that were done to look after the challenges that contract throws in, including the challenges banks are facing. For example, HAM model.
Even the exit policy for that matter.
Correct. So HAM model was evolved based on the challenges that were faced by the private sector, bankers and the government. So I think that continuous evolving is very much required. In fact, last year, if I'm not wrong, there are 4 BOT projects which highway sector has rolled out. So as all the panelists has rightly said, the success of PPP will ultimately lie in partnership, not being a regulatory agency and a private sector. So unless that framework change, that attitude change, it's a partnership between government and a private sector. So they both are on an equal platform. Probably that equal platform is still missing in most of the sector.
I completely agree that, the way forward for, ensuring that our economy gets into the next scale of growth. If we have to look at the scaling of our growth, we need to ensure private investments flow in a very, very, there has to be animal spirits. I think if that has to be brought in, we need to bring that level of confidence in the private sector. That's what the signals that need to be put into the PPP framework that needs to build that confidence, because infrastructure projects, if I may say, are generational. they see more than 3-4 generations, and they've seen, I don't know, more than 4 to 5 governments, also pass through, they look at, a single infrastructure project. So if we need to look at, the way in which the contract provisions are honored, the way in which the redressal mechanisms are addressed, and it's not just about the highway. The highway and roads are just leading the route, because the first PPP projects were ushered in the road sector. There has been a lot of learnings. There's been the Kelkar committee, and now the HAM model was also ushered in to ensure the investments continue to flow and government continue to pedal the infrastructure growth. Now is a time, perhaps, for ensuring that sort of uniformity is what about in the PPP context, so that it's just not about roads, but also other sectors which can use this model very well. And it's not just about getting looking at concessions. Concessions is just one part. We need to perhaps look at other countries which have had this development in a more transparent and more consistent manner. And more than rules, I think it's time, very high time for India to have a PPP law or infrastructure law, which can ensure that the interests of all the parties, including the public sector, private sector, bankers, and all the other service providers involved, all are the interests of all these stakeholders are looked after, not just over a period of 5 to 10 years, but over a period of time till the infrastructure life cycle, the project life cycle is there.
Right, Mr. Jaishankar, I think that's a very valid point, that India, I think, needs a comprehensive PPP policy across all the sectors. But the onus also lies on you, because if we want private sectors to spend more, I think charity begins at home. And I think there's a need for IFCL as a government of India's undertaking to start spending more. So right. Are you taking more measures with respect to lending more?
Yes. In fact, the avenues for lending has now, the scope for lending is now being expanded. We have a reasonable. Earlier we used to have a very closed and very small channel of lending environment. But now, over a period of time, there's been a reasonable development as far as the brownfield and completed projects are concerned. We have a number of other instruments. We have the InvITs, we have the infrastructure development funds, and we have the takeout financing, credit enhancements, and the bond market is also quite reasonably active in this segment. Now, what is necessary is, the same kind of development has to take place in the greenfield environment, for which, we need to ensure that the real sector issues which we talked about, be it the land acquisitions or be it the approvals or the contract issues and the legal issues, those are also solved by a very transparent and very consistent policy framework. So I think on the whole, not only IFCL, I think it's the entire banking environment, and it's
yes, absolutely
the financial environment which needs to look at this. The bond market should play a more active role in the future. And IIFCL has already started its foray into the bond market. We've already started investing in bonds of infrastructure projects, so that the new architecture what we have been talking about, that is the greenfield investments being financed by the banks and financial institutions according to their liability profiles, 5 to 7 years, can be well supplemented by the bond market after they exit after 5 to 7 years, by adding a tenor of 15 to 20 years in the completed projects. So there we have started our foray, and we are very active in that front. And overall, this new architecture will only help the infrastructure projects in terms of better longer tenor, and longer tenor means better project viability, and ultimately better user charges, and which helps the economy in the long run.
Yes, Mr. Dangi, you wanted to step in?
Yeah, I think of course, I must congratulate Mr. Jaishankar, because IIFCL has been at the forefront of financing the infrastructure sector, and they have been doing a remarkable work in last 2-3 years, particularly in the highway and other projects. But I think I remember a meeting of lenders happening in Mumbai where SBI CMD said he is more happy to fund NHAI or the government per se for the highway sector, even 1 lakh crore, than financing the developers, concessionaire who are coming in. So I think that again, I will come to that attitudinal changes required in the sector. For example, like government is looking at monetizing its assets. Banks, financial institutions will also have to be more dynamic and more proactive in looking at how do their assets can be churned more and more, because globally churning the assets is the key in long term for raising more finances and attracting more new instruments. For example, the government had to come in with the new instrument through the insurance instead of BGs, because getting BGs from financial institutions, bank, has been a big pain for the concessionaires and the developers. So I think overall, if the infrastructure ecosystem has to work, probably institutions like IIFCL and the financial institutions will have to be also more dynamic in terms of how they handle the infrastructure project. So I think that is one area where a financial institution needs to be more looking at how do they develop more dynamism.
The relay financing and what we have been talking about, how one set of banks or one set of lenders can transmit the asset to another set of, because world over, the liability profiles of banks are limited, and because of the sources of funds being the tax, the savers surplus. So I think, we need to look at how one set of lenders, transmit the asset to the other set of lenders. And world over, that's what happens. And the channel tunnel, I have been talking about that. 99 years, concession, and 203 banks over a period of 99 years. So we need to look at those type of issues. And we need to see how best.
Sorry, I'll interject you quickly because a very similar kind of a doubt I have is that majority of funds for infrastructure come from banks, used to come from banks actually. Now what's happened is, I think the NBFCs and infra financing companies are playing a major role in that. Don't you think, or Mr. Chibber and Ms. Das and Mr. Dangi, don't you think that the banks should also play a key role in lending? Because the amount of money that the banks can lend, I'm sure they have a bigger appetite for that. So correct me if I'm wrong, but I think the bank should also play a key role with respect to lending.
So if sir, if you permit me, we've seen a very interesting change in the bank's perception. See, we've had a lot of cleanup which this government has done as far as the bank's balance sheets are concerned. And a lot of problems which due to, we know what happened in 2018 when 2-3 very systemically important institutions had a problem. Now, what's important here is not per se the approach of the banks or of the lenders, but it's actually the cost of capital. Whatever is cheaper is going to be picked up because these are market forces. I mean, if Mr. Jaishankar is going to give me money lower than, say, what you're going to give Chetan, that's where I'm going to go. Because eventually we all have to take care of the cost of capital. But what's very interesting is that, which is what I come back to my first point, that a lot of decisions have happened. And in that sense, I'll say that the highway sector has shown the way, like what Webb have mentioned about that insurance product. I think it's revolutionary. Now, today there might be a reluctance to adopt these things, but tomorrow the change will come. So Chetan, there has been a lot of mindset changes. Even when HAM came in the beginning, I think there was a lot of dialogue which needed to happen to bring acceptability. Today it's established. So what I'm trying to say is that it's not very difficult because the changes have already happened. But what will determine is the cost of capital. It's not going to be so much the lending agency as much as the cost of capital to the borrowing agents. So,
Mr. Chibber?
I think the last 1 year has seen a complete sea change. A year back, for a variety of reasons, the banking community was also constrained. They were a little tight-fisted in taking bold decisions. I find today that atmosphere has completely changed. I'm still associated with a few construction companies. I find none of their projects are being held up because of lack of financing. At the back of the mind of the Indian banking sector is also the fact that several foreign funds, for the first time, have apportioned a part of their global annual allocations for investments into India. It's like a war chest being created and targeted for a country. This is a very, very healthy and a dynamic kind of a situation. It means that those funds have, over time, analyzed that with all its warts and all the difficulties and challenges, the return on investment in the Indian market is still better than what they're getting in other geographies. It's a huge positive, despite all the inherent problems that we as practitioners in this space of infrastructure build are ourselves aware of. I am quite sanguine that going forward, I think the banking sector also has now realized that the rewards are very, very high. There is a need to take decisions quickly, otherwise the project proponents are having alternative choices. So I think there's money now following the projects very, very closely. It's also a recognition of the fact that the MCAs have also matured, and the concerns of the lenders and the banking sector have by and large been addressed. In the case of projects which are still in litigation, and I find that the lenders again are taking a very, very positive approach. They are recognizing the fact that government is taking an extra step forward to try and achieve conciliation where it is possible. I think the road sector is again a leader in that space, and other verticals can take a cue from the road sector in trying to find ways to resolve issues so that the lenders do not feel that they are left on their own to recover the bad debts.
Absolutely. In fact, Mr. Dangi, this was the point I was trying to make to you as well. Ms. Das has also been associated with the Debt Recovery Tribunal very closely. And of course, the road sector had that Sarod for affordable resolution. My quick question to Mr. Dangi is the fact that the private investors, the lenders definitely have a worry of taking large haircuts post if any company goes into bankruptcy or insolvency, or probably the money gets stuck. How do we improve this regulation and give a good signal to the lenders, to the private players that yes, if you put in your money, it will not. We'll try our best to do a good job and not let the money lose.
No, absolutely. In fact, almost on every global forum wherever I have attended, particularly on the infrastructure, the biggest point everybody has been making is about dispute resolution mechanisms in the infrastructure. And globally, I completely agree that it's an evolving process. It's a very dynamic process. But as I said, the whole approach has to be of the partnership level, because here private sector is a partner to the government sector for developing projects. So it cannot be a kind of a high-handed approach. And I think in last 3-4 years, much development has happened in terms of, for example, as you said about highway sector, the dispute resolution mechanism through Sarod and conciliation mechanisms, and similar methodologies have been adopted by banks. The NCLT model has been equally successful. So I think I completely agree that unless we have a better mechanism where disputes are, as Mr. Jaishankar said, redressal mechanisms, funding institutions, whether it is bank or the foreign funds or anybody for that matter, will hesitate to invest money into the Indian infrastructure sector. And we have seen that, for example, a National Infrastructure Fund, which was formed in 2015, it took a couple of years for that fund to actually took off and get some investment from the global funds, because there had been a hesitation about developing that mechanism which will ensure that all stakeholders' interest is taken care of, and there is a approach to resolve those issues quickly, time bound. So I think that is absolutely required, and it's not a kind of a black and white line. You will have to continuously evolve those. Therefore, I think evolving contract is also equally important. Contracts are also dynamic. they need to be, amended, evolved with the learnings every year of implementing the projects, the feedback from the financial institutions, bankers, that complete put together. I think that mechanisms need to be developed, and unless we create that confidence among all stakeholders that their interest is equally important, everybody's interest is equally important, and is important in the larger interest of the project.
Mr. Jaishankar, quickly coming on to Mr. Dange's point, what needs to be really done for you, because you are amongst the panel who's giving out money. So what needs to be done so that you feel more comfortable and secure?
Well, I have already indicated about the law, but that might be a long-term or a medium-term, issue. Immediately in the short run, I think we would be happy if a tripartite arrangement is there as far as the concessions are concerned, because they are now more bipartite in nature, and lenders have a very huge stake of about 70% in the entire project cost. So I think that is one thing which we have been, talking to the government also about. Other than that, in the financial regulations, there needs to be a review, because the way in which the asset classification is looked at by the regulator today, I think that needs a review, and we need to look at how internationally it is addressed, because the way in which we are looking at long-term finance today to be supplemented by one institution or a set of institutions will never happen. It never happens anywhere in the world also. It can't, because the sourcing of funds everywhere is limited. Even in the multilaterals, it is limited to 25 years. And we are looking at, 50 years and 60 years, if we have to look at complex mega projects. If that has to, be made possible, we need to look at regulation which actually does not disincentivize restructuring as standard assets are concerned. So I think that is something which is very important, and the Reserve Bank of India should take cue on that.
Right. Absolutely, sir. I totally agreed. Before I wrap up, last 30 seconds each to Mr. Chibbar and Ms. Das, that how about spending? First of all, to Ms. Das, ma'am, Railways has a problem of not spending properly, I believe, because we've been doing a lot of reporting and study on that. How do we solve that problem out? Yes, money is being given out by the government, by the banks. The problem is, I think, with the railways is to spend. Any word on that, ma'am?
So absorptive capacity is what you're talking about.
Yes, ma'am. Absorptive capacity. Yes.
Now the thing is that railways projects are long lead. They are, unlike the highway sector, railway, although they have land, they have a big advantage because they already, most of them are brownfield and they have land. The problem is that in railways, the initial sluggishness comes in the first couple of years. And after that, the projects take off. And I think a lot of activity has happened to clean up the norms and the regulatory framework, which ensures that the projects speeden up. And we've also now got new announcements where projects are being monitored at the Apex level. I personally believe that a set of what Railways has done, and I have knowledge of that, is that they handpick some very critically important projects, which they ensure are monitored till they're completed. Then they pick up another lot, because there are so many projects. I mean, it's got a developmental book which runs into 2 volumes, and that's the large number of projects Railway has. So what they're doing is that they're picking up core projects which are important in terms of boosting the growth of the economy. And that's very, very important, because the moment they are completed, you start getting revenues from that and you move into the next lot. So the absorptive capacity problem is something which is a cyclical thing. The first period is in any case sluggish.
Right. Mr. Chibbar?
So I'll take you to another aspect I think we have not covered, which is renewables, because that is also infrastructure space where government is huge targets and PM's personal commitment. Renewables, basically solar and wind, they are coming up in geographies which are not integrated already with the national grid. So you can have a huge amount of, and it's all being built by private sector. You can have a huge amount of investment and targets being met in the renewable space But if you do not correspondingly build the transmission capacities to link these new generating projects to the national grid, you will be failing in achieving your targets. And therefore, I take you back to the transmission space. India is a complete outlier in trying to build this transmission infrastructure on a nomination route, a route which is opaque, it is inefficient, it is high cost. It is sending all the wrong signals in the market. And my fear is that we might jeopardize our wonderful focus on renewables if we do not correct the mistakes we are making in the transmission space.
Well, I think the last point that you made on the renewable space, I think, and especially the data, with the data that you put in, I think there's a separate need for having a discussion on a larger macroeconomic basis for renewable energy, because I think, yes, they need to be connected to the national grid. We're completely out of time here. Thank you, everybody, for joining us on the BT Brainstorm 2022. Looking forward to see you all again. Thank you so much for joining us.
Thanks.
Thank you.
The crypto announcements on budget day sent shockwaves across the crypto community, but it was a mixed bag of responses. Some believed such an announcement legitimized the crypto space in India, while others were worried about its implementation. But what does this tax really mean for India's young crypto investors? Will the CBDC increase financial inclusion in the country? Our tech editor Ayush Alwadi discusses the future of crypto in India with a stellar panel of experts.
My name is Ayush Alwadi, and we're discussing the future of cryptocurrencies. With me today is a stellar panel of guests. We have L. Badri Narayanan. He's the executive partner at Lakshmi Kumaran and Sridharan, a tax and tech lawyer. And of course, we have Sanjay Farke, author of Fintech Future. Tanvi Ratna, CEO of Policy 4.0, is also joining us. And Kunal Nandbani, CEO and co-founder of New Trade Solutions, and an author of a fantastic book on the blockchain as well. Guys, thanks so much for joining us today on this BT Brainstorm session. And I wanted to start off by asking you, Badri, essentially when we look at whatever's happened over the past couple of weeks in the world of cryptocurrencies, we've had some time to digest and analyze the crypto tax announcement made by the finance minister in her budget speech. But there's still a few questions when it comes to implementation. How do you see it playing out in the coming months from a tax and law perspective?
Aisha, as you know, there's been this announcement in the budget on the crypto tax, and we've had some time to kind of digest what is going on that. I think at a very simplistic level, I think what the government proposes to do is like you said, they want executed. But I think at the ground level, they're going to face challenges. So take, for example, they're expecting TDS to be deducted on transactions which are going to happen between a buyer and a seller. And many times these transactions are happening through exchanges and other medium where it is not possible to know who's the buyer and who's the seller on either side, right? So some of these things were problematic issues in, DMAT and other places which were solved through, having, different form of taxation, something like a, securities transaction tax rather than kind of taxing this on an exchange basis. It's going to be very hard for some of these things to get completed. They're also saying that if you are going to do a barter, that is one crypto for another crypto, okay, the buyer has to ensure the seller is going to pay the tax. It's going to be very, very difficult to make that, in a process to be able to do. So what are you going to do? You're going to ask the other person to pay the tax and give you a tax challan. I mean, there are some fundamental issues with some of these points. And then of course, we have the issue with respect to what's the true scope of the provision itself. So we still have issues with respect to determining what's the set off of laws, what's the cost of acquisition, how are you going to compute this tax, what happens if, for example, there are exchanges, what happens if you're a gift, how do you make, for example, a Bitcoin could have multiple values in different exchanges, okay, or on different platforms. So how do you take a value of a Bitcoin? So a lot of challenges I feel on the implementation side, and we are not even scratching the surface. These are all situations where we feel that there will be an implementation challenge. There's a whole host of enforcement issues when you're going to do peer-to-peer global crypto exchanges and so on and so forth. I think still a long way to go for this tax actually to be brought to tax and then implemented and then actually seeing the light of the day and being effective, according to me.
Interesting. Tanvi, the fact that a crypto tax has been announced has made a lot of crypto enthusiasts believe that all is well for crypto in India. But as we all know, taxation doesn't necessarily mean something is legalized in India. Do you reckon the regulations should have come before such an announcement?
Yeah, definitely, Ayush. And I think this was my thesis the minute this tax announcement came out, that it is just a deterrent. It has been put out with that intent because there was a period of very high volatility. And, I can just speak from the policymaker perspective. And I think there were many months of just very unfettered activity, right? And I think that gave that raised a lot of concerns, I think, across the government. And I think everyone is aware of those headlines, that had come the last few months. And I think the regulation, I think we've already seen it now for 4+ years in the making, and it's a very difficult one to come to consensus on, I think, within the government. So this was really seen as a deterrent move, and I fully agree with Badri that it is actually not necessarily going to lead to the outcomes that they were expecting, because those who are in the know, they know that on the day of the announcement, a lot of volume from Indian exchanges already moved to overseas ones, right? And now it's going to be quite the task for the government to try and get TDS data collected for any such transactions that happen there. And I think and this is something that our board also highlighted, and there were some high-level meetings with the Prime Minister also. Unless we are accepting the decentralized nature of this industry, there's nothing meaningful we're going to be doing on the policy front.
So interesting, Tanvi, you say that. In fact, we had a panel on one of our shows, Tech Today, and this is exactly what we spoke about, that so much of that money is moved abroad, and something that Badri alluded to earlier as well, in terms of peer-to-peer payment platforms as well. How will the government really look at all of this and bring this under the tax net? But Sanjay, I'd like to get you in on this. Now, India's digital payments push is second to none. What the NPCI has done with UPI over the years, and of course, Aadhaar, GST, and so much talk of India Stack. That's something you understand well. The finance minister speaks of a CBDC, a central bank digital currency. Do you think this would further augment the digital payment scene in India? Would it actually help with financial inclusion, or are these just things better put on paper?
No, So thanks, first of all, Ayush, for inviting. I think you started talking about cryptocurrency. So I want to first set it right, sure, that, it is not right to call it currency, because currency is, first of all, a preserve of the government, something that is issued, a liability of the government. And none of the crypto assets or digital assets, which would be the right way to look at it, are actually, in some sense, liabilities or are blessed by the government in that sense. Now, coming to the CBDC part, right? CBDC is one connotation, and so is crypto assets, stroke digital assets, and ultimately at the base of it is this new technology called blockchain, right? And in some sense, it is being called as the Web 3.0 or the internet, next version of the internet, electricity, internet, and third blockchain, and in that sense, right? So we are still at an early stage of an evolution of what is, digitalization of our life, right? In all respects. And when we talk about money going digital, we already seen payments going digital, but large parts of financial systems still are not, in some sense, fully digital, right? In some sense, the payment is the first sort of port of call. We've had a fantastic Jan Dhan account, which took, I think, 70 to 80% of the country became suddenly in 3-4 years, became, from no account, financial account, bank account, to having an account. From there, we went to having potentially access to every phone, every wallet, a payment which is interoperable, which is like a dream for most of the rest of the world, actually. And I talk to people outside India, including LATAM and other emerging markets. They obviously think it's something which is really truly outstanding and out of the world. And even compared to the developed markets, actually, right? And US is talking about a Fed coin, which will come in probably 2022 and 2023 and so on. And it will do interoperable payments, which we already have as of 2 years back, in some sense. So we are far ahead, I think, in some sense of the rest. We also have our own unique problems. One of the unique problems is how do we
sort out the contractual issues. We have too many disputes. The framework, the legal framework takes time. So can we sort that out? Can we include people who have, maybe just a bank account, but not access to insurance, other financial services, so as to call it true financial inclusion? Can all these use cases be covered by, appropriate use of these new technologies, whether it is CBDC, whether it is distributed ledger, which lies at the base of it? I think these are the things that we should really focus on. What are the use cases? What can we achieve? How can we make lives better rather than just the buzzwords of the technology or speculation?
Interesting. Sanjay mentioned that. Kunal, with all this talk about a CBDC, and of course, the Honorable Finance Minister was on a Business Today earlier in this week and spoke about it as well. But the end user experience for the Aam Aadmi, when they're already so adept and so comfortable using Paytm and Google Pay, and of course, even for international transactions, we have options out there as well. So how does the end user experience change with the introduction of a CBDC, according to you, Kunal?
In nutshell, it does not. There is, just trying to be inclusive here, in my mind, there is zero value in a CBDC coming from a government. Let's remember that the cryptocurrency, if I can use that word still, was developed to walk away from the government, to go into a decentralized fashion where the governments would not, could not, should not control. But frankly, the decentralization has been as highly centralized as it gets. All the crypto exchanges, crypto companies have the central CEOs. They are regulated by the same government. They were invented to get away from. The same governments are taxing it. So it actually brings zero value in grand scheme of things. CBDC, if it is being developed to digitize anything in terms of money and payments, good motive, but we can do equally without a CBDC as well. And we've been doing, especially in India, UPI has been super successful. You talked about NPCI and all, so that's already fairly digital. Rest of the cash in the system would stay for a long time because of the limitation of some older people to adopt these digital means of using Paytm and Google Pays and other things. But coming back to CBDC, if they are trying to digitize, India is as digital as it gets in the world in terms of payments and money. If it is to replace Bitcoin and show people that we have a government-backed digital coin, it's an oxymoron. It makes no sense, because if it's a government-backed, it doesn't matter. Whether it's an NPCI coin versus a RBI coin, it's the same thing. It's the same digital thing, right? And nobody's gonna give up Bitcoin and accept a digital INR coming from the government at all. I don't think, or even if they accept, it's just like anything else. So it's adding no real value. And I still do not know what the intent is. If nobody's actually asking the deeper questions, everyone is just saying, yeah, we'll bring our own crypto or digital. And there is no blockchain, by the way, for all the viewers. There is no blockchain in this. Blockchain, if it is just centralized by the same central bank, and they are only ones validating, then do you expect RBI would ever allow any independent miners to come and validate all transactions and let the majority decide what's right? That's what a real blockchain is, right? If the government is only going to validate it, it is just another database. There is no blockchain. There is no decentralization. It's almost like saying the North Korean leader one day says that we'll be democratic from tomorrow. I'll be the only one voting.
Interesting analogies there, Tanvi. Since even Sanjay and Kunal were saying we should be asking the deeper questions. So it's not just about regulating cryptocurrencies and the exchanges. There's so much happening in the crypto world: DeFi, NFTs, the metaverse. That's something I personally like to cover a lot on my shows. Do you think policymakers need to cast a wider net when it comes to regulating not just crypto, but figuring out how to be future ready for Web3? Are we missing the wood for the trees?
Yeah, I think that's a good question. That's where a lot of our efforts are focused. At the moment, we are doing some things that we will announce fairly soon around Web3 and India. But I think this is a sort of hangover question, the whole token classification, which till now is not in place. Like, this is a very worrying place to be when you're even thinking about Web3. I mean, we are simply not ready for that kind of a reality. And I don't think that doing something on crypto misses the woods for the trees. It's actually we are doing too little too late, I feel, regulatorily. And I empathize a lot with Kunal's views. I work day in and day out with startups, and I just think like, see, it's not the government's mandate to protect decentralization, and I think the community needs to get that very straight. They don't have any responsibility to make sure that your mission and your idea of a world goes ahead, right? Like, I mean, that's really on the community, and I think it's high time that the industry also organizes itself better. I think with every emerging tech, it's the onus is it's really been the government that got it right from the get-go, right? It was usually always efforts by the entrepreneurs, by the investors, by the people who took up efforts in educating policymakers, who took up efforts in finding middle ground with them. And that's how policy comes about. It's a process, right? And I think the community, unfortunately, has been very checked out in this whole thing. Like that, there have been exchanges that do meetings and stuff, and that's why you see most policies is veering towards more of exchange-based sort of regulation, right? But I mean, if you don't take responsibility, you don't get the results either, right? So I think this is the reality of a democracy, right? And I think it's high time that people realize this, and on all sides, right? Like it's not all on the government, is what I would say.
Interesting. Badri, you worked with the regulator before, and from your conversations with the regulator and people, in positions who are taking the calls over here, the influential ones, how much do you think the, concepts like this are being researched on? Some of the things we spoke about, obviously, when India Stack, and that's something Sanjay knows a lot about. When that was coming about, there were a lot of consultations as well, even when it came to the NPCI coming up with UPI, and that's a fantastic payments grid. But when it comes to cryptocurrencies, there's so much cryptic information out there, which even all of us, honestly, are so curious about and learning new things every day. Do you think that the right conversations are being had, especially from the ones making the decisions?
So it's a very good, important question that you asked, Ayush. The problem is that, like you said, we tend to miss the trees for the woods. Okay. And the most important thing is to kind of look at this holistically. It's not just crypto, it's not just this thing, but Web 3.0 and how the world is going to move forward. So without having a clear view on what you're regulating, if you're just going to pick something and you're going to try and decide from a tax point of view to start with to regulate it, it's not going to be that effective. Okay. And I think Government of India needs to take a decision where it wants to stand. It wants to be the fintech capital of the world. Like if you take UK, for example, they've decided that we want to be the fintech capital of the world. We're not going to regulate crypto except in situations where retail investors are going to get affected in a very minimal way, and allowing decentralized and crypto startups and companies to come through. While Europe has taken another view, saying that we want to understand what this is and regulating it. But tax is not the starting point for some of these things. But I think Government of India needs to do that. So what happens is that our regulators, we tend to talk to the same people. We tend to have our trusted groups. We tend to think of it in a way where we have a comfort with respect to how these things operate. So sometimes the conversations that are happening within the government may not be reflective of what we should be doing in this space. So I think a wider audience, more cumulative conversation around these things will be more effective, according to me.
Interesting. Sanjay, I saw you nodding in affirmation. I want to get your take on, you mentioned the whole bit on financial inclusion, but when we talk about cryptocurrencies and a CBDC, let's look at the budget announcements. Would you say that there is a natural fit when it comes to India Stack? How exactly do these, or this world, how does it fit into India Stack?
Yeah, I think, India Stack is just a set of tools which help, everything from universal access to payments to universal access to eventually healthcare, education, and everything else, right? As we talked about everything becoming digital, you need common rails. And unlike, let's say, US or maybe China, where the rails could be owned by private entities, which could become way too large and then monopolistic, we have a version in India, which is those rails become accessible to everybody. A large company, a startup, and anybody who wishes to build on it can build on it. So I think it is all in logical sort of extension of each other. How they exactly connect is something that I think the time will tell. But fundamentally, I think we are in a very unique and interesting times where we are talking about, we are talking about democracy. We are talking about centralization versus decentralization. We are talking about, who takes the decisions on a variety of things. How can code do many more things than, people in some sense? And how can we automate things, right? In some sense, that is really the core argument in a way. And it's going to become bigger and bigger because, what COVID has done in the last 2 years is that all of what we were used to assume as physical or analog life has become digital. This call that we are having is digital. Most of our payments are digital. Netflix, Facebook, Amazon, everything that we use on our phone is digital. So, it's really just going to explode. We are still at the early stage. 5G is going to come. IoT is going to come. The cars are going to get at some stage driverless, but before that, maybe hundreds of sensors. There is a chip shortage everywhere. Why is that? Because everything requires chips, right? So what does it all tell you? Basically, it tells you that we are going to have more and more digital lifestyle. We need to find ways in which, we still make sense of the world as we understood earlier, which has changed quite drastically. And everything related to the old world, right? Like going to a bank to, give a check and get cash has just like that. It has disappeared. We use a credit card or now a payment wallet and so on, a QR code. It's going to just keep on changing, and that's just the way it is. And I think the right solutions will come. I agree with the other participants that there has to be more inclusive dialogue because some of these themes are very, very deep themes, and they require deep understanding, research to be able to design the kind of society that we want. And I think India probably is the best. In one of the best places to actually do it. We've kind of led in knowledge generation way past, and we have another opportunity now to once again lead the world.
Sanjay, what's best is I like that you practice what you preach because obviously you are in the mobile, get set, go, work from anywhere life as we speak and do this session. And that's how important this space is to you. But Kunal, I want to bring you in on this. What are your thoughts on some things that Sanjay, Badri and Tanvi just said? Does the government really need to zoom out and look at a bigger picture, Web 3.0 sort of regulation? Is that the correct way forward?
I personally think Web 3.0 is more of a fad than any reality underneath again. There is no true decentralization. If anything, it's just Web 2.01. It's just another incremental version of Web 2.01, where some entrepreneurs, VCs are getting together and trying to rebuild the internet, hoping that they will back and find the next Amazons, Facebooks of the world that would give them exponential returns. Think about it. Let's take a step back. So Web 1 was just content coming from companies. Web 2 was content coming from anyone and everyone. You could contribute, I could contribute. We are all microbloggers. We all have some social media accounts, etc. Now in Web 3, they are saying you will own your data. You will get paid for your data, right? So you can contribute and earn at the same time. So for you posting something on Facebook or Instagram, not just Facebook and Insta becomes richer by the data they sell to advertisers, something would flow back to you. That's a rethink of a model. That's the expectation of Web 3. But in reality, Web 3 is also not going to be as decentralized as we all would want, or as Tim Berners-Lee, the guy who imagined internet, would have wanted or has imagined, which is that the decentralization now, you will, just like Walmart replaced by Amazon in the internet, now Amazon might be, in the best case scenario, in the next 5-10 years, be replaced by another protocol that's again backed by a VC, public owned firm, some other CEO in the middle again, right? Could Ethereum, Vitalik, could be somebody else, who knows? So Web3, I think, is more of a, I really think it's a fad. It's just a hype. And if I just take a few years back, 2017 was all about ICOs. 2018 was all about STO, securitized token offerings. 2019 was all about DeFi. 2020 was all about NFTs. 21 was now Metaverse. 22 is about Web 3.0. Every year there's a new fad and they forget the old one. And in reality, ICOs didn't deliver any value. DeFi has never happened. STOs never took off. Some of those things come here, and now JPEGs are being sold in NFT world, in the metaverse, that may come in 5 to 10 years. Sure, we would be very likely living a digital virtual world. As Sanjay was saying, that's fair, but in that world also, the protocols are not fundamentally going to change, in my view. You would still have ample centralization. There is no need for reinventing the internet. There's no need to rebuild the internet. Of course, we may open it up more, truly make it borderless, but that comes down to the governments. Governments still try to control it. Think about fake news, think about social media, etc. So in my view, government can choose to learn about it. It would really help if they regulate these things timely. Whether they get it right or wrong, that's secondary, but timely regulation on crypto would have been great. Last 4 years, we've been waiting. Every month, every quarter, there is a statement, something would happen, nothing happens. Social media never got regulated. Probably India is the only one where they've asked them to bring data to India and keep it there and then delete the stuff government doesn't like, right or wrong, but there is some regulation there. And unlike US, where everybody has become just addictive to endless scroll feeds of Instas and stuff, some learning about it, regulation might help, but I think for that, government has to learn first. And actually, the toughest thing is going to be finding the value among the whole valuation hype cycles and the capitalistic cycles that are going on alongside, because it's very hard for government already to understand the new technologies, and now to take out the hype from the real value, that's even tougher. That's where they're struggling probably. And due to lack of any precedence in the world, there is no regulation coming. Very clear. Government doesn't want to innovate again. They don't want to innovate in terms of policy making. They're waiting for someone to come up, but nothing is happening. So yeah, taking a step back, learning about it should help.
Okay, interesting. A lot said by Kunal there. Badri, the tech geek inside you and I, our heart broke a little when he said Web3 is not the future. but some of the things that are very fascinating about this are, and especially what the crypto and blockchain world has really ushered in, concepts like smart contracts and NFTs, which as a lawyer in a previous life, I seem to really want to unlearn everything I have about IPR after I read up on NFTs. So would you say that this crypto revolution could be a game changer for law and business?
I think it's the best time to practice law in the digital world, because I think it's completely changed. So one of the interesting aspects, of course, is the borderless aspect of digital, and I know the whole problem of how do you allocate. But more than that, there are fascinating issues which are coming up in crypto, which are beyond our imagination, which just goes beyond what we have ever been able to imagine from a law. I'll give you an example. For example, say there are exchanges, right? And you kind of buy and sell cryptocurrencies. But in reality, you only purchase a very small fraction of a cryptocurrency, which is owned in custody by these exchanges for a large number of people. So we have this concept in Sale of Goods Act, which basically talks about how is a property in a bulk transferred when a sale happens and so on and so forth. All these concepts have to be relooked at from a lawyer's perspective, because it completely changes. You have a digital asset owned by multiple number of people, but who are able to buy and sell between each other, but don't really have any ownership or title or possession. They just have a token and almost a certificate of ownership. Okay, so that changes so many things. Then you have these NFTs, which are fascinating things, which are able to kind of, there is a mixture of IP, data, and technology coming together. Some fascinating things. What do you really get in terms of rights? How is it operating? And then you add this new layers of legal technology, which is coming on top of that, or legal tech, which is like things like smart contracts, where, for example, an NFT, somebody creates a JPEG, like he said, or an artwork, and then the NFT has got a smart contract inbuilt in it, which basically says that every time this gets sold, the initial author will get some money out of it. And it's able to then operate in the legal fraternity, just like you said, if then else kind of statements being put in on top of that. So they're going away also from, like, it's fascinating from a legal concepts perspective. It's fascinating from the confluence of different laws that need to come in. And it's fascinating because it's truly going digital, where, human intervention is being taken out, it's being decentralized. And it's kind of a path. I mean, I may disagree with Kunal saying that Web 3.0 is not there. I mean, the thing is, the internet is such a fascinating thing. It doesn't matter what you or I think. It ultimately what the herd thinks, right? And what the herd wants to move towards. And the herd, I think, is not you and me, but a younger generation, which has been digital first from day one. Okay. And therefore, I think they kind of usher in all of these things. So there are people who would like to spend more of the time in the virtual world than the real world, and where they want to do transactions are completely digital, where there's human intervention is minimal. And I think that's going to be the world many years from now. And I think though Web 3.0 in its current form may not get there, but the internet is going to fundamentally change. And crypto, NFTs, smart contracts, the way we look at intellectual property, all of that has to undergo a change if you are to keep up with what's going to happen over the next 10 years. That's my view.
And Badri, if we have to keep up with what's going to happen, we'll have to tune into sessions like these as well, because the future of crypto is just one title for the session, but largely it's the future and the confluence of tech, law, policy, business. It all comes together. And let's hope the next time we do this, Tanvi, Sanjay, Kunal, and Badri, we can do this perhaps in the metaverse. Thanks so much for joining us on this BT Brainstorm session and sharing all these fascinating insights. Thanks so much for joining. And for everyone, thank you for watching. Goodbye for now.
Thank you. Thank you so much.
Indian investors seem to be a worried lot looking at the way the macro setup is posing several headwinds ahead of them, including the rising geopolitical tensions, data points on inflation, tightening liquidity and impending interest rate hikes. With Budget 22 and RBI policy now behind us, what's the best way investors should look at rejigging their portfolio to generate alpha in an otherwise turbulent investment scenario? Sakshi Batra in conversation with some of the top voices from stock markets and personal finance to find out where money will be made in 2022.
Hello and welcome. You're watching the BT Brainstorm Budget 2022. I'm your host Sakshi Batra, and with me on the show is an esteemed panel of experts to discuss what are the emerging opportunities for investors at the backdrop of Budget 2022 and ahead of the brewing macro headwinds. What is the SIP mantra that you must follow? How should you save, invest and prosper? With me on this panel, I have Mr. Feroz Aziz, Deputy CEO at Anand Rathi Wealth, market expert Ajay Bagga, and Swarup Mohanty, CEO Mirai Asset Global Investments India. Thank you so much, gentlemen. Appreciate you really taking our time for this discussion. I want to kick start by asking all of you first about the macro backdrop. First of all, starting with Mr. Bagga, first you. Do the macros really play any part while selecting stocks and investing? How do you really analyze the current macro headwinds that exist? Is there still an opportunity to buy despite the kind of global scenarios that are emerging?
Yeah, definitely. It's an opportunity to buy. Secondly, for an individual investor, no matter how much their net worth, from a ultra HNI to a retail investor starting off, when is the good time to buy? It is yesterday. When is the second good time? It's today. So ignore the noise is what we keep saying, and keep on focusing on your asset allocation, your financial goals, your time horizon, and just keep investing. That's the very simple mantra. It is simple, it's not easy, and very few follow it. The good news is 5 crore SIPs in India now. That is helping us withstand withdrawals by FIIs, and for the first time Indians are really participating in the growth of this economy. So I would hope that this 5 crore SIPs go to 20 crores and we have so much money coming out into the Indian markets that we really don't look at the FI numbers. That's just a footnote which gets reported once a month.
Absolutely. Feroz, let me bring you in at this point in time. Help me understand, how much do you think macros really matter when it comes to individual investment decisions, both locally and globally? And just like how Mr. Bagga pointed out, do you think this SIP number hitting an all-time high will continue to remain robust, and we'll see soon that 20 crore number coming in despite the macro headwinds?
Hi, Sakshi. I think if you break that down into two parts, macros are very, very critical. But incremental changes, delta X, positive, negative, is irrelevant. So if you ask me how important are macros, I would say 10 on 10. Changes in macros, which is what each budget or a meeting of the RBI and giving you their stance on interest rates, that's change in macros. That's not macros. So macros are very important. Change in macros are not very important in the long run, because there's a strong correlation between what you make money in and the macros in the long term. In the medium term, markets are corporate earnings dependent. In the short term, they're news dependent. If an investor is looking at 10 years and looking at news, then he's looking at the wrong variable. A trader looking at news is brilliant. So that's point one. Point two, I think it's very important for a person to understand that the FII correlation to Indian markets has reduced considerably. The correlation of FII, if FII bought, markets would go up. If I sold, markets came down. That's what I mean by correlation. In 2011, there were only 38 days when the market behaved opposite. Last year, there were 109 days in the 241 days where markets behaved opposite to FII action, which implies that the domestic flows, like Ajay sir said, have a large implication to where the market is headed.
Absolutely. Sarup, let me get you in here. How are you analyzing the macro setup, the rising inflation, oil prices, interest rates, and the geopolitical tensions, global markets volatility? How do you really see this scenario shaping for the Indian investors?
Yeah, Shakshi, thank you for having me. You cannot isolate yourself from what has happened into the world to all of us in the last 2-3 years. And when you shut down the globe for 2-3 years, the ripples will be there. And then to isolate yourself from that is actually living in a different world. When that happens, there will be changes. And then these changes can be viewed as an opportunity or as a threat, whichever way you look at it. When you look at a portfolio construction purely from an investment manager perspective, a portfolio construction is formed of 60 to 70 stocks. Some changes then give opportunities for new stocks to enter. But at the end of the day, if you look at what is common to this large SIP figure looming, and then they having good investment experiences, they remaining invested in the market. So that is key. I mean, if you are choosing a fund manager to build your portfolio for yourself, leave it to the fund manager to navigate himself or herself through these changes. And yes, these changes are real. When you look at US inflation at 7.5, something which probably 2-3 decades have not seen, the effect of that will come to the world. And to say that India will not be affected by that will be not correct. So it is a known sort of phenomenon. It's not something which came out of the blue. And from that perspective, I keep on saying that thanks to COVID, India now gets into a very favorable position. And one should always remember that and look at markets favorably from here on.
Right, absolutely. Mr. Bakaya, let me ask you, has anything really changed in your approach to your portfolio post the two big events that we've just witnessed domestically, both the budget 2022 and the RBI policy? Now, on the budget front, we did see the focus was entirely on Capex, on infrastructure push, long-term vision. So what are the top sectors that you are really focused on right now? How would you advise investors to really go about their investments, selecting stocks and sectors?
Yeah, you have the best private banker and the best equity fund, CEO. They've given very good inputs already. What I would again and again say, who made money throughout 2020? The HNIs got out in April and they took time to come back. September, October is when they started coming back. FIs came in and then October 2020 onwards, they started selling. Who made the money? It was the retail Indian investor and the HNIs who kept their SIPs going. This is actually what we miss out. There are umpteen studies of, you look at how much funds are giving, how much markets are giving, and then you see how much individual investors make. Individual investors don't make more than 30 to 50% of the market return because of trying to time. So that is what I would like to emphasize most. Right now, the sectors I give you might not be pertinent a year from now, but what is the long-term story? Long-term story is India is growing fast. We will be in the top 3 economies in another 10 years, if not sooner, on a real GDP basis. I'm not talking purchasing power will be there much faster. You look at what is happening around you. And if you don't participate in this growth, it's a huge opportunity missed. Sector-wise, inflationary times, what is good? Cyclical, domestic, or your banks will lead, auto will do well, real estate, cement, building materials, all these sectors tend to do well in inflationary times. But inflation, RBI governor is saying inflation will be controlled by the end of this year. And I would rather go with the most best data repository in the country. We can be skeptical and say RBI doesn't know its job and they're wrong, but I would not say that. I think with the base effects and where we are sitting today, inflation might be under control by end of this year. And we could have seen that a lot of the rate hike fears were overblown. So we are taking a more contrarian approach to all this and looking at taking small bites. I think geopolitically and monetarily, both the fears are very heavily overblown, but who knows? We don't try to time, we stay invested. That's what I would tell investors.
Okay, point taken. So Firoz, what about you? Are you taking in the point made by the RBI? And based on that, do you think, on the basis of these four broad class asset classes that we have, equity, debt, commodities, gold and silver, and real estate, keeping in mind that the focus is not going to be too much on inflation because that we think we will be able to manage, the interest rates will remain stable. How would your thrust be post the budget and the RBI policy now? And in which pecking order?
See, I would say equities have the potential of delivering 12-14% return on the index level itself over the next 8-10 years. If 10-12%, 12-14% is made at index level, fund managers will help us add alpha of about 2-3%. That's why that becomes the first one. Corporate, if we are today the fastest growing economy in terms of GDP growth across whatever 190, 200, if this country does not deliver 10, 12, 13% return on the large headline numbers, and then have a 3% alpha, that's why that's the favorite asset class. So a reasonable skew towards that asset class is mandatory. On the debt side, if you're able to lend money to the government greater than what you can borrow a home loan, today you can lend to RBI or the government at 6.7, 6.8, and you are able to borrow money from a bank at 6.5, it's a no-brainer. You locking in for long periods of time, that's debt for you. Gold, we think it's only a rupee hedge. Gold is the only asset class I know, other than Japanese equity, of course, which has given a negative return from 1979 to 2002, below $750 an ounce for such long periods. An asset does not behave like this. So I would say it's just store of value. And then comes to real estate. I would say the last one would be real estate. Because of the huge supply. Mumbai itself has 15 crore square feet, Greater Mumbai, approved last year alone because of the concessions in terms of building premiums. So this is the order. And if somebody could marry this order with their objectives and try and amalgamate these two, we'll have a brilliant strategy to achieve double-digit inflation-beating results.
Right, absolutely. So, Arup, could you add on to this and help most of the viewers understand who are thinking that since rates are stable right now and any which way the global scenario is inching towards higher rates, is it a good time to perhaps invest in real estate, buy a house, which I've been postponing for so long?
It's actually very interestingly, I think Firoz referred to the gold behavior.
Yeah.
What has happened over the last 10, 15 years is the way every asset class used to behave is changed. I mean, no longer can you say that in this horizon, my house will yield me this much of returns. For the last 5-7 years, in fact, Mumbai real estate has not made money. Gold, you've seen what has happened in the last 10 years. But while at the other end, the financial assets have shown a very different way of working. The Indian is more invested in the fixed asset side than the financial asset side. We saw a reversal of trend post demonetization, and the growing SIP book is just reflecting that there is incredible potential for the penetration of financial assets going forward. So that is one recognition which we are seeing, and one has to really look for these changes, and that's why there has to be a need of a good advisor or a distributor who can stand by you through these fluctuating times. It's a great time in India as an investor because at these times you can lock into fantastic yields on the debt side. The equity market post-COVID gives you very good potential in areas which Mr. Bakaya said, which were not part of the portfolio before. So if I were an investor, it's good time for me. But the key is, am I staying invested in the market or not? That is the key to everything.
Absolutely. Ajay sir, if you could come in on the new age tech companies. I have asked you several times before also, but this everybody wants to know because the likes of Zomato, Paytm, Nykaa and PB Fintech, they've all seen sharp reductions in their prices in the recent times. There is a fall, and not just domestically, we are also seeing a trend globally as well when stocks like Meta crash suddenly. The question is there on the steep valuations, and this was a new emerging economy, new age tech companies where investors thought that they could have a chance to invest in early, and for a long time they could be in for a good ride as well. How should one really look at these increasingly becoming household names at the one side, but on the other we are seeing a whole lot of question on the valuation front?
Yes, actually, I'll answer it in three parts. One, unfortunate part has been that profitless companies were brought into the public markets. Earlier, we didn't have it, but it's part of you are making the market more and more broader. So let it be. Caveat emptor, applies. But the reality is, if you look at the private equity funds over time, 50% of their investing companies go to zero. And it's about 10% of the companies which give superordinate results and really make very good. I mean, the biggest you can take, I will not name the fund, but a 40-year performance, they have given 12x on their entire portfolio in 40 years. You would have done better in the public markets with less risk. So that's why I would always give my money to Swaroop rather than private equity in India. The examples have been far and wide where you have really made money. The foreigners have made money. Second, looking at these companies, a lot of the valuation is intangible value. It is exponential growth. So it's a small trader sitting in Moradabad. When he gets on Amazon, he's able to sell to the world. That's the exponential growth that Amazon is giving. So all these companies are predicated on that. For me as a retail investor to understand that is very difficult. Third, don't be too tough on yourself. If you got IPO allocations and now you are 40-50% down, what should you do? One thing we always advise is get out of what you not comfortable with and ride the fastest horse that you think. Otherwise, just hold it. Remember, Amazon also went to $5 in 2000. It's $3,500 now. But how many of these are Amazons and Teslas, and how many of these are going to zero? I can't say. But remember this, 1926 to now, 4% of the companies have given the market return. Which are those 4% starting today? I can't. I'll just tell you, go to a good advisor, have a very diversified quality portfolio, and you will do well. I can't pick those 4%, and no one else in the world can do that.
Right. Firoz, would you like to come in and add on that, please?
Like Ajay sir said, who's a great expert. So I personally think that any business which is not making profits, you're buying a dream. And to buy a dream, you will have to understand the dreamer's psychology and his execution capability, which comes with one-on-one interaction alone. That's what private equity helps doing, right? When a private equity person invests in a Swiggy or a Paytm or whichever company, he gets a board seat. He understands the dream and the execution plan. But in the public market, you have to be dependent on numbers. Before the numbers come in terms of profits, investing on that is being very unsettling. It's very unsettling to buy something which is still not made profits. So I think anything which is incorrect will correct itself to the right valuations. I think fund managers do a better job picking those dreams than an individual investor, like Sir said. Secondly, I think I think technology companies, there are two kinds of technology companies. India, of course, from an IT standpoint, has the highest IT export share. It doesn't imply that you can paint all the companies in the same brush. So the ones which make profits are definitely something which is rock solid part of the portfolio.
Right. Swaroop, in terms of mutual funds now, I want to ask you, what would you really recommend to all the investors among the various categories? How can one construct an ideal mutual fund portfolio today after we have seen these mammoth events, go past, and now we are headed in terms, there is a thing that, markets will be in a consolidated mode. There could be a whole lot of volatility, and these macro scenarios will be definitely posing some headwinds. So how does one go about creating that ideal mutual fund mix?
See, actually, I'll reflect from what Mr. Bakaya said and what Firoz said, and wrap it up in one particular sort of chronology. See, first, why do you invest has to be defined, and that's most important. Setting your goal then sets the basis of why you should build a portfolio, because if you don't know why, you will never know where to invest. 9 out of 10 times you give more importance to where you invest, and that's a mindless journey. So fix your goals. If you do not know how to fix goals, please take a qualified distributor advisor's help, but because that is most important. If you need 6% return, you don't need to invest in equity, right? As simple as that. But 9 out of 10 people do not know whether they need 6% to reach their goal, and they need 12% to reach their goal. you are at a fantastic time from an investable climate or environment perspective. You have, like Firoz rightly said, if his projection of index return is say 12%, the active managers, because we charge a fee of say 1.5–2%, the least we should strive to deliver is that, which is 1.5–2% above the index. Otherwise, we have no right to be active managers. And Firoz can correct me if I'm wrong on that one. So that's an expectation one should have when you pull the active side of the portfolio. And the active side of the portfolio should be in two parts, which is the core part and the satellite part. The core part should aspire to have large companies, track record, strong companies, which will give you a basic nominal return along with a little above the index, while the satellite part is where you go in for that kicker. Now, here's the thing. In India today, because you're in the threshold of this fantastic journey ahead, you have the choice of choosing both the active as well as the passive. Because of the categorization bounding on the active mutual funds, a lot of new stories will come on the passive sides, which will be pretty good and can add a lot of value to the passive side of the portfolio. So choice is yours. You can build a full active portfolio based on choosing the right fund managers, which can give you that alpha over the index, or you can do a mix. If you're a newcomer, you can say, no, I don't understand all this volatility. Let me understand by taking the market first, by buying the index. So the possibilities are endless in front of you, and every possibility of finding a product to cater to your goal is there in the market. But first find your goal, and then you will always find something which will marry yourself to the goal. And that's how your investment journey becomes fruitful. And then make a fruitful investment journey in India, because the next 5–10 years belong to India in the globe. I'm not taking away anything from the globe's future, but I think post-COVID, the tilt is towards India. So don't discount India at your own risk is what I'll say.
Right. Firoz, would you like to add any top funds that you would have at the top of your mind that investors should definitely tick box right now?
Yes, Shakshi, of course. I think the first step of choosing a fund is, of course, goals. But after that, we did some research in terms of which categories have the largest potential to deliver extra returns.
Right.
On that basis, one surprising inference was the large cap category, which is the most popular and the heavily weighted category, had the least chance of generating an extra return. So having said which, there are 4–5 categories which you should choose from. Generally, people choose 2, 3, 4 funds in the large cap category. I would change that to only one fund, Franklin Blue Chip. This was recommended last year as well on the basis of future potential as per the target NAV concept, which we use. And it was very bad. And when we chose it, and then it has generated 12–13% alpha over Nifty and became the best one. So it might not necessarily figure out in a 5-year best performer, because it was very bad till last year, and you identify the ones which are at the trough going towards the peak. So Franklin Blue Chip in the large and mid cap category, ICICI large and mid cap. In the focused category, ICICI focused equity is a good one. In the blue chip category, Mirai emerging blue chip, Swaroop Saab's fund is of course a very good fund. On the Contra fund, SBI Contra is very well positioned. If you look at each constituent and find out targets of each of the stocks, I would say SBI Contra has the largest future looking potential. So these are the 4–5 funds one can consider having in their portfolio, not looking at the rear view mirror, but looking ahead, which is why you may see numbers not being great for the past, but have packed potential to unrealize.
Right. Ajay sir, would you also go with the large caps in 2022?
No, go with small caps. When the economy takes off, small cap will do well, and always go with a fund in the small cap. Don't try to pick small caps yourself, because Sarup will pick 40 for you, and his manager will actively manage it. So small cap, mid caps will outperform. Right now, because of the fear psychosis, we are saying large quality. But as Firoz mentioned, generating alpha is very tough. And look at the size of the funds. If somebody is running 30–40,000 crores on an Indian market, it's very difficult for that fund manager to really perform. Go with the small cap, mid caps should be a majority. Normally, we say 30% of your portfolio and rest is safe. But I think with this economy growing up, the way the government is putting the stepping stones for this economy, start with the small caps first and go with the funds. If you can own the entire market, there are some ETFs also, and there are outperforming small cap funds, mid cap funds. Go with those.
Got that. Ajay sir, could you also talk about cryptos now? I will ask both Firoz and Swaroop also to add on to it, but I have spoken to you before also. But now the scenario is different because the budget has actually brought cryptos under the tax realm. So how are you looking at this space? Is it getting more accepted as an asset class now? Should one really look at it, or has this development further thrown this option out of the window for investors?
Yeah, I think where we'll go towards, on one side you have China, which has banned everything, but it's espousing blockchain and its CBDC, it's digital yuan. You have El Salvador on the other side, which made it legal tender. IMF is telling them remove it. It's not worth being the legal tender. The reality will be somewhere in the middle. And one regulator I really respect globally is the Singapore regulator. Also, having worked for Temasek, I've seen them internally very well, MAS. And what they have done is nearly 100 exchanges have now filed with them to become crypto exchanges. They have made it totally open. So we should make it open. It's a asset. It's not a currency. Make sure that out of the 10,000 cryptos that come in, you are not letting the scamsters come in. But at the end of it, it's caveat emptor. What FM is very clear that they have taxed it, but they have not legitimized it.
Yeah.
RBI governor still is saying that we don't like it, and RBI is right. The governor will never want their currency, imperative being taken away. But I have seen enough youngsters who have made so much money. Even my nephews are buying 30 lakh cars, and one of my friend's daughter in London, she made 12 crores. She's bought 4 rent-paying properties, and she's left her job and traveling the world. So there are those examples which old has-beens like me cannot really fathom. So I'm very smiling when I talk about crypto. But I think there is some future now in the way it's got mainstream. Institutional money has come in. There is no basis to it still. It is just, and as the RBI governor said, there's not even a tulip behind it. At least in gold, you have some value to hold back to. Isway, there's no tulip also. So has to be careful. What is good is small amounts are being put by a large amount of people. Bring it into the mainstream so that the money laundering and the terrorist and funding guys don't find it as a conduit. Bring it like a Singapore, make a strong regulation for it. I think that's where we'll end up with. That's my
Okay. One quick take from both, and then I'll come back to you for another very important question. So Swaroop, I am very unhappy that somebody is making 12 crores suddenly in cryptocurrencies, and I can't choose to ignore it absolutely. What is your take?
See, there was the era of the fixed assets, then came the era of financial assets, and here is the beginning of what we call digital assets. I think Mr. Bakaya has rightfully said it's an asset, it's not a currency. And that's where the central bank will always debate that it's not a currency. Let's face it. If you talk to my son, he will very logically tell you what this is all about. Right? He's all of 23 and he's a computer geek. But they understand this. How it works is something which is very different to what you and I probably would understand. So for me to sort of rubbishes is not fair. What I completely agree with Mr. Bakaya, and there's a reason for that. There has to be a legitimate framework around it. We started by taxing it, but it's a matter of time that as a country, we should have a framework, because if there is no framework to the flow of money, more often than not, the money has its own way of behaving, and you know how it behaves. So we've taken the first step, but I would really advocate that there should be a good framework around how it should behave, and you cannot ignore it anymore. That's the reality.
Right. Firoz, your take?
My take is very negative on crypto, because an asset fundamental principle is that it should add value, right? If I buy a share, if I bought a share, there are lakhs of people going to work, trying to create profits, at least future profits with these technology companies. There has to be underlying value created. That's the key attribute of an asset. As a currency, stability is the key attribute of a currency. Neither of it fits in, to my mind. It has lasted long enough. People have made money. There will be parties in Mumbai. I will not go to all of them for sure. There will be some rave parties. I can come back scratchless. Doesn't mean that that party was right to go to. So it has to find its place in terms of not having a value if it does not have an underlying asset. Lastly, I would like to say that if you look at crypto as an asset, there is a lot of anomalies which need to get corrected. So this will find its place in terms of demand and supply alone. So there is demand, there's supply. That's why it has a price. I would stay away from it with the part.
Okay, see your opinion right there, 2:1 on crypto, but we can definitely not ignore this space and how it has definitely created value for many other people right there. But definitely we need to back it up with solid assets, and that is an important point. The other upcoming bit is the biggest IPO, the great Indian IPO that all of us are awaiting, and that is the LIC IPO. Anytime we can expect, further steps on it, DRHP, and then the final proceedings. All of your take on how you're looking at this mammoth IPO and what kind of opportunities it can create for investors, starting with you, Ajay.
Yeah, a lot will depend on the valuation. I hope Indian citizens are given a deep discount because, I remember about 3 years back, we had made a presentation in the finance ministry during budget time when, we get called in. And I had said what Margaret Thatcher did with the privatization of the entire British public sector is what we can do here. So make Indian share owners, make a nation of share owners, and give deep discounts so that the retail investors, LIC policy holders, LIC agents, for example, can be given a preferential allotment. I think if we do that, that will be very good for the equity cult in the country itself. There will be a lot of new demat accounts opened because of this IPO. So what we could not achieve through advertisement, this IPO will create by reaching all the far-flung areas of India. In terms of valuation is what we will look at, embedded value. If you see the private listed players are 3 to 5 times. So if you have a 5 lakh crore embedded value, you would look at least a 15 lakh crores, if not more, and then a premium to the market leader. It's the biggest deal, and if the real estate is held at cost, you can't sell the real estate of LIC because it will bring down the Indian real estate market. But if you REIT it or if you InvIT it, look at the amount of value you can create by just the real estate that LIC owns. So it will be huge. It will be very good for the market. Will money go out of the secondary market in anticipation? I hope not, maybe some institutional money, but I think fresh allocations will come in because it's such a great opportunity globally for investors to come in. So I think we could get a lot of fresh investors, and I hope the retail investors are given, keep a lower limit, say a lakh of rupees, but give them a deep discount so that they are assured of profits and create that equity cult in the country.
Absolutely. Swaroop, are you an LIC policy holder, and would you be looking at adding this to your next set that you would be bringing out and investing in this IPO? Of course, like what Ajay sir said, we are already seeing some 34 lakh new accounts being opened. So that is opened a new era to investors. The whole challenge will be to whether they will actually expand beyond holding just LIC in their accounts.
Yeah, I hope and pray the powers to be have listened to what Mr. Bakaya has to say, because, it's the best known financial name in this country. The penetration that this name can bring about, no other name can bring about, is a reality. And if that part is, addressed, forget just this organization coming to public, which it should, and people should own it. Because if you close your eyes, and this is something which my professor had said in 1992, I'm trying to fight him, close your eyes and think of the most prime property anywhere you go in this country, it is the LIC of India. Forget the insurance business. Okay, that's the power of this organization. But if something can be done on the lines of what Mr. Bakaya said, a lot can change on the equity culture of this country. That is the power this holds. So let's see how it unfolds. But yes, not holding it will not be the right thing. Everything will depend on the valuation. If you've seen what has happened to many of us, especially us in the last few months or so, the new age has given us challenges in assessing valuation. That's the reality. So we'll be a little more strict, which is not the fault of LIC. But yes, the valuation will be key at the end of the day. So how much you will uphold going forward.
Right, absolutely. Feroz, will being a PSU weigh on LIC going forward from here? Of course, we all know what are the challenges ahead, the way it has been investing in the loss-making companies so far. How will the decisions being taken right after dilution and the valuation front, which all of them have been talking about? What is your take?
So my take is, of course, it's a PSU. Valuation is going to be key, like Ajay sir said, Swaroop Saab said. Valuation is going to be key because this kind of market cap will require dilutions by the government over periods of time. So initially, if you let people make money, there's a positive momentum to that stock, and that's when you will be able to monetize this as an asset. Of course, there's a lot of real estate, but there is an overhang of it being a PSU. And I would leave it to my fund manager's judgment. Because this is going to form a very small part of one's portfolio. So I would not bring in a stock into the portfolio, but I would be very happy about the kind of equity culture it can bring around and the new investors it can bring to the equity side, Sakshi. But on the crypto bit, I want to just add one thing, which I couldn't recollect at that point in time, is that just because all of them are doing it, doesn't make it right. Okay, institutional money was backing mortgage bonds, which was the result of that was a GFC, global financial crisis, for 20-25 years. And all institutions, the biggest of the biggest world names were there. It still didn't make it right to lend to people who were subprime. So I might not see the fate of crypto going down to zero or negligible in my lifetime, but it still doesn't make it right.
Okay, if it doesn't happen in our lifetime, I don't have any qualms in experimenting with it. That's, I think, what I think about it. I don't know about Ajay sir and Swaroop. I think they were already looking at that, we cannot ignore it. But thank you so much. It's been an absolute pleasure discussing all these wonderful insights with, all of you on Save, Invest and Prosper. I hope this has given enough insights to all our viewers as well on the BT Brainstorm. Truly appreciate your time on BT Brainstorm Budget 2022. Thank you so much, gentlemen, for being with us.
The Indian markets entered a volatile territory in the past couple of days. But is volatility here to stay? With global tensions simmering and the Fed ready to hike interest rates, will bears rule Dalal Street in the coming days? We have market master Arvind Sanger joining us to take stock of the markets. Arvind Sanger of Geosphere Capital joining us on the show. Arvind, great to have you with us on BT Brainstorm. Let me first get your verdict of the budget this time around in terms of indicators and cues for the markets and for the economy going forward.
Well, my biggest concern going into the budget, it was about populism, given that there are elections, there were elections in the pipeline when the budget was announced. Luckily, the government resisted the temptation to go populist. It maintained fiscal discipline, and it invested in long-term future by extending the investments on the infrastructure side. So there were those were the major positives in the budget that it was. And another important point was it was very realistic. If I would blame it for anything on the realistic side, it was a little too conservative in its revenue assumptions, which is rare for governments to do, because the temptation is to over-assume money and then go and spend it. And here they were under-assuming what the real revenue dollars might be. Revenue rupees might be.
Arvind, what do you feel led to the conservatism? Was it fears about, the pandemic receding, this particular wave receding, crude oil prices, the global backdrop? What do you feel was the primary reason?
I think it is all of what you said. And I think there's also some nervousness, I assume, about, global macro headwinds in terms of rising interest rates globally, certainly from the Fed and now other central banks, Bank of England, ECB, all talking very hawkish, and concerns about oil prices, all of which could be a headwind to economic growth and therefore to revenue projections. So I think they've allowed enough of a cushion that I think many of these risks are discounted in the budget.
Well, while talking about that, share with us what you're expecting from the Fed. They've indicated, of course, a spate of hikes, how soon you see them kicking in, and again, the kind of implications this will have for global markets.
I think the first one, I mean, the Bank of England has already done two. Fed is definitely going to do the first one in March. I don't see anything that prevents that. I think the first couple of hikes are in the bag, so to speak, in terms of happening. But the benign hope is that some of these inflation forces will abate quickly as economies recover from Omicron, and you start to see some of the supply chain challenges start to abate. But my big concern is China's zero COVID policy is going to be one of the major impediments to supply chain normalization and therefore to inflation abatement. I was talking recently to a shipping company, and their concern was, and shipping is one of the major bottlenecks because the Chinese have seen many lockdowns in ports, and their concern was that if there is a major increase in Omicron cases in China, you could really have a major shutdown of ports. So right now you've had periodic single port shutdowns, and if that happens, there could be a real logjam. So I think some of those concerns are real. I'm not sure how raising interest rates helps, other than tamping down growth and therefore slowing demand. And that's one of the risks for the global economies, is that they can't manage the supply chains, they can only manage the demand side. And so that would be one of the risk factors.
Crude oil has, of course, been a burning issue, and given the current backdrop with geopolitical tensions, Russia, Ukraine, and of course, supply side issues that we've seen, how do you feel this is going to play out? Are we going to continue to see oil prices spiral higher?
Well, it's really not about Russia, Ukraine. I recently launched a fund which I call the Brown Tech Fund. Okay. And the reason I launched it is because my assumption was that energy transition is creating phenomenal opportunities as an investor in the resources space. And what you have to realize is, what is not often commented on, is that natural gas prices, LNG prices in Europe, the month and a half, 2 months ago, got to the equivalent of $300 a barrel. And LNG prices in Asia, Japan and Korea, got to $280 a barrel. So oil is only at $90 a barrel. The reality is that because of ESG pressures, nobody's investing enough in new capacity, and demand is increasing rapidly. Natural gas was power related, and oil is, revenge travel. People are going to come out of Omicron and want to travel a lot, and car usage is growing, and electric cars is still a tiny portion of global car sales. So we are going to see some huge demand increases, all-time high, and you are not seeing a similar investment or supply response. So I think that the risk on oil prices are very much on the upside. There's one negative for oil prices, or one optimistic view for an oil-consuming country like India, which is that there might be an Iran deal, which the US Biden administration is quite keen for. And if that Iran deal were to happen, of allowing them back into that agreement that had been signed under President Obama, then that could near term alleviate the pressure on oil prices. But I don't think it solves the problem that the world is going to be very tight on spare capacity by the end of the year, with or without Iran. And therefore, oil prices have a lot of upward bias. And I'm not talking about Russia, Ukraine. If we ever get Russia, Ukraine, I mean, oil prices last high was $147 a barrel. We'll go through that if we really try to put pressure on Russia if they invade Ukraine. I'm hopeful that that will not happen.
In terms of inflationary pressures, and we have been taking a look or monitoring really the glide path here, when it comes to what's anticipated over the next few months, whether it be, of course, on the back of crude prices or otherwise. Tell us, Arvind, what are some of the key themes that you think will be good to watch out for given the current macroeconomic environment?
Well, inflation is definitely a theme which is global. And I think in India, we have seen some hardening of inflation data. people that I talk to are seeing it in everyday purchases of food, vegetables, and also a lot of consumer goods. You had Hindustan Unilever talk about demand pressures that they were seeing because of inflation cost pushed in rural India. So there's a lot of signs that inflation is creeping up in India too. And obviously, petrol prices, diesel prices are certainly not not benign, and therefore they're also feeding this inflation narrative. So I think that one of the risks is that RBI does not get too far behind the curve. Obviously, RBI needs to be more circumspect, because a lot of global developed and emerging market central banks have already raised interest rates. So hopefully RBI is headed down the same path. Obviously, they have started to lessen some of the support that they were providing, but I think it's important that we continue to see RBI stay on the right side of the inflation curve, and so that's a risk for India. And as we've discussed, oil prices are a risk for India, and global liquidity is a risk. India is still, I think, the current account deficit is going to go up as oil prices go up and as domestic demand recovers. Last year, India benefited from domestic demand being weak and international demand recovering, so current account deficit was quite low. This year, we could see current account deficit widen, both from oil import bill and from domestic demand recovery. Therefore, foreign capital flows, which have been negative on the portfolio side, are going to be worth watching, and therefore, the rupee is another risk factor for us global investors to keep an eye on. So far, I think there's been enough flows from private equity and other investors to offset the FII portfolio outflows. But I think 2022 could be a little bit more of a tricky year from that front.
We have seen some volatility of late, particularly on the back of some of those tech names like Meta. Is that a theme that's done with for the moment? Would you still look at select pickings when it comes to the tech universe?
Well, as the era of free money ends, the leaders of the last cycle will not be the leaders of the free cycle of the next cycle. Okay. So if you go back to the early 2000s, we had a cycle through 2008 global financial crisis, during which period tech stocks did terrible and commodity stocks and emerging market stocks did great. If you look at the post-global financial crisis from 2009, 10, or maybe 10, 11 onwards, emerging markets and commodity markets did terrible, and NASDAQ and tech stocks and the US S&P did great. So I think that the leadership is changing again after COVID and the new cycle that is beginning. And I'm quite hopeful about emerging markets, and I'm very hopeful about commodity resource stocks. And I am much less optimistic, although my main forte is not investing in tech stocks, but I think the headwinds you're seeing is that a lot of these companies whose earnings are way, way, way into the future, a lot of these unicorns and the recent startups with great promise, but with earnings that are way into the future as interest rates go up, the future value of earnings when you discount it to the present value comes down dramatically, and therefore I think that this is a headwind that tech companies market is going to be much less forgiving of, and some of these growth stories that have been great for a while might see some headwinds on growth.
And what are some of the growth stories or growth areas that you're looking at, Arvind? Would they be deep cyclicals? Is that where you see momentum coming back?
Well, certainly, I'm looking at commodities, metals, energy is an area where we like. We like real estate because, again, real estate cycle was dead for the last decade. And I think, a lot of what we in the US refer to as household formation normally results in housing demand. Yeah. In India, housing demand has been dead for, in terms of any growth for the last 6, 7, 8 years. Household formation has still been taking place. The demographics have been supportive of that. So there's a lot of pent-up demand that we expect. to result in housing demand, and inflation also causes housing demand. So many factors which will drive real estate cycle to come back after a decade in the wilderness. So we like that. We like the Capex cycle. We think, again, we are in the early stages of a Capex cycle, and therefore that would be a sector would benefit. There are some E&C companies, again, engineering construction companies had a terrible decade. Those could come back. So there's many things. The IT services have done very well in the last couple of years, but we think there is a huge new digital and outsourcing on steroids because of stay at home. And if you're working remotely from your office in New York as a financial services industry, you could be outsourcing that to somebody in Bangalore or Delhi as easily. And that has opened a whole new range of outsourcing opportunities. And the acceleration of digitization is creating opportunities. So we think IT has a lot of tailwinds, but it's probably the sector that has done the best in the last couple of years. So one has to be a little more careful about valuations and entry points. But I think if you take a longer term cyclical view or a cycle view, then there is still room on those fronts. So those are some of the areas that we're most interested in terms of the next cycle coming through.
How do you see India positioned in the emerging market landscape, and also vis-a-vis China? We have seen investor sentiment sour somewhat given some of the policies coming out of China at the moment. Do you see some of that money continuing to move towards India?
Well, I don't know that India can be dominant in the way that China is dominant. Remember, China's economy is 5 to 6 times India. So we're comparing really probably different scales. But I do think that China is embarked on a different stage of its growth cycle, and where the government is now saying, okay, we've grown fast enough, we need to focus on redistribution, fairness, all of those things, and therefore they're handicapping some of their high growth sectors. India is sitting in the right place, right time, and unfortunately, one of the things that I can say about India is India is an expert at missing opportunities. Unfortunately, that's been true of India for the last several decades. And that is up to the Indian business people and the Indian government to put in place the right structures. And I will tell you the one negative that I worry about in India. I know the flavor of the month is Atmanirbhar Bharat.
Yes.
The last time we went Atmanirbhar, we got Fiat and Ambassador cars. So my concern is that closing off India, not entering trade blocs, raising tariff barriers to protect domestic industry is the wrong way to build a world-class industry. The right way is, yes, you want to build world-class businesses to come, you want to create the infrastructure, you want to create the environment for it, but you also don't want to put too much protection, because protection creates low-quality growth rather than high quality world-class growth. So that is the real challenge, that India does the right things. Any crutches provided are very temporary, have very strong sunset. We haven't seen signs of that where they say, okay, in 3 years, it's going from 20% tariff to 0, and you have to, in 3 years, survive. There should be a very clear roadmap. I haven't seen that yet, because the risk is that this is the nature of businesses, that they will ask for continuous. And Indian businessmen are very competitive if you give them the right framework. But if you give them this crutch, like any business anywhere in the world, they will always find reasons why we need more crutches forever. And that is the nature of business and the temptation for governments to give in. And I think that so the Indian opportunity is phenomenal, but it needs to be with world competition so that we get world-class companies that are able to compete at a world scale and to be able to export. So that is the opportunity for India, and that is the challenge for India. So in terms of capital flows, right now the capital flows are coming in, and right now there is interest in India. But it is here today because there is the promise that the China +1 is creating opportunity. The size of the market is creating an opportunity, but there is no guarantees in life. It is up to India to seize this opportunity and to put in place the right policies to make sure that businesses are treated. This retroactive taxation has gone for now, but are we going to see stable policies where people can predictably invest and there are not going to be changes on taxation, on capital gains, on profits, because unfortunately the history of Indian bureaucracy is they always find that if people are making too much money, how do we take the money away? And I think that's a big temptation. So we need to put in place, I'm not saying that businessmen should make free money, which is why I'm saying that the tariffs barrier should be reduced, but the predictability and the visibility, which has not been India's forte ever, predictability and therefore the ability to invest with a clear idea of what's coming would be critical for India to sustain this cycle.
Do you think the government will be able to stick to the kind of trajectory it's set for itself? They were very surprising in being a non-populist, especially when the budget came at the time or at the cusp of assembly elections. Do you think that they'll be able to maintain that going forward?
I would say that, look, the last two budgets, first of all, I don't give as much importance to budget as I do to policies, and budgets are kind of a signpost along the way in terms of policies. And in India, I think people pay too much attention to budgets. In the US, we haven't even passed a budget ever, but it doesn't really matter. For a number of years, we have not passed a budget. We keep doing continuing resolutions, as they call it. But at the end of the day, it's the bigger policies, the regulatory framework, tax. When we lowered the corporate taxes from 35 to 25, it was not part of the budget. It was, allowance in the middle of the year. So some of the biggest moves have come extra budget. So budget is not that be all and end all. I think, even the retroactive taxes didn't come through a budget, that came through, some other steps. So my point is, at the end of the day, it is important for India to demonstrate a policy framework, not a budget framework, but a policy framework, which is predictable and reliable and isn't prone to, okay, now we need to do this certain things to fill the budget gap, or now businessmen are making too much money, or now these foreign investors made too much money. So how do we get something back? That's not the goal. Let us all make money together as long as India can create growth and jobs. That's what matters. And that should be the common objective, not seeing who made money and who didn't. As long as it's done in a fair, transparent, and predictable form, some people will make more money than others, some businesses will do better than others, and it shouldn't be to punish those who do well. It should be to create a framework that provides a predictable pathway to people to invest. And therefore, I think India needs investment, both domestic and foreign, in growth, in capital, in job creation. I think one of the biggest challenges for India, frankly, is the lack of job creation. And the lack of job creation is really, really concerning for the political system should be worried more about it than I think it is right now. And I think that is one of the challenges, and the only way to create job is mass manufacturing. And for that mass manufacturing and for all of that growth, including small business growth, we need more incentives for small and medium scale enterprises, because the majority of the jobs around the world are not created by the large corporates. They're created by small and medium enterprises. And you need a virtuous cycle for those, including the more lending by the banks and the non-bank NBFCs, and by I know we've moved through a formalization of the economy, which has actually hurt the small and medium enterprises. But we need, within the formal framework, rather than in the past, so informal framework, we need more job creation there. And that's really one on which neither this budget nor any other policies have done enough to address that. And I think we need more measures to, the PLI schemes are meant for big companies, and hopefully they will create jobs, but we also need more of a framework of support for small and medium enterprises.
And Arvind, what if we do see the Fed hike rates in terms of money moving into India? How are we going to be impacted? Do you feel the domestic story is going to be strong enough to carry us through?
Yes, it does. I mean, if you look at the past interest rate cycles in the Fed or others, India is, in a growing global economy. India does fine in a rising rate cycle. It is important that it participates in that growing global economy, and it's not like U.S. is growing and the rest of the world is not. Then it's a problem. But as long as India continues on its growth path, Fed raising rates, as long as it's moderate and predictable, and it doesn't cause a recession in the West, India's growth story will be fine. But if the West goes into recession, the history of recessions is such that it does not, even though India is not as linked, it wants to be more linked, right? With this PLI and everything, we're trying to be doing more exports. So we can't have it both ways, that we want to be linked, but if there is a recession in the West, it won't matter to us. That doesn't work. So therefore, I think as long as the Fed doesn't raise interest rates enough to throw, Western central banks don't throw the world into a recession, I think the India growth story stands on its own legs, but it needs global growth to be relatively continuing. It can't count on global recession for it to do fine. So that's important.
Amazing. Arvind, thank you. That was so fabulous. Great speaking with you today.
Thanks, Aabha. Enjoyed it.
India has welcomed the rapid digital transformation with open arms. Pandemic has sped up the shift from offline to online. Technology today is driving the change in India. And to talk about the changing landscape of fintechs and blockchain technology, we have a stellar lineup of guests. Rajneesh Kumar, former chairman SBI, Gopal Jain, senior advocate Supreme Court, and Sandeep Agarwal, founder and CEO Droom. They will be in conversation with BTTV's managing editor, Siddharth Zarabi.
With me on the Technology Drives Change show is a stellar panel of guests today. Rajneesh Kumar, former chairman of the State Bank of India, one of India's foremost and most well-experienced bankers. Gopal Jain, a senior advocate at the Supreme Court and someone who is very well versed with the intersection between technology, regulation and the legal framework. And from the startup industry, the shining star of India's corporate events right now, Sandeep Agarwal, the founder and CEO of Droom. Welcome to the show. Let me begin with you, Mr. Kumar, and ask you for a response on that one fundamental question that every Indian is grappling with, regardless of his socio-economic strata, which is how much technology is driving the change that he is having to adapt with. And this applies to not just individuals, but really from your point of view, businesses, small businesses, medium businesses, how much of technology is driving change within that entire ecosystem?
Technology in last 10 years, it is driving change in a very, very significant manner, be it an individual or be it a business. The way we live our life, now it is completely changed. In 2010, none of us would have heard, or if I have heard, only just on the fringe. Google, Amazon, Facebook, Ola, Uber, Tesla. Did we hear of those names 11 years ago? Or maybe 12 years ago? My answer would be no. But today, whatever I do, there is a technology intervention. Whether it relates to my personal convenience or my personal life, be it banking, be it transport, be it healthcare, everything, there is an intrusion of technology. Same holds true for the businesses. And each business today, they have digital or technology at the center of their strategy. The advantages of adoption of technologies are many. And I'm not leaving out agriculture, because in our country now I can see a trend where within the area of agriculture also there is an emergence of agri-tech. We have seen emergence of so many unicorns. Unicorns means $1 billion evaluation, and every day there is an announcement that this company or that startup or that fintech has become a unicorn. And as I was saying, that technology is all pervasive. It is bringing in required convenience, and it is bound to reduce the inefficiencies in the system. It is a much more efficient way of delivering services. Even public services, we have seen that the way India has created COVID and Arogya Setu to manage the vaccination program, it is a remarkable example of how technology can be used for public services delivery. And the efficiency of the system, if it improves, if the productivity improves, so obviously it will have an impact on the overall income of the nation as well as the per capita income of an individual. And we are in an age where the traditional ways of living and traditional ways of doing business, they all are crumbling. And you have a new way of thinking, new way of doing business, new way of living your life.
Right. Gopal Jain, we heard Rajneesh Kumar, who's dealt with change even in his own business because how banking has changed due to the fintech revolution, but we'll come to that later. I want you to tell our viewers about the broad changes as far as the tech and legal intersection is concerned, and why I ask you this is because of your long-standing experience, for example, in telecom regulation. For the last 2 decades and more, India has grappled and evolved a telecom framework. We are currently in the process of figuring out whether we need a framework for cryptocurrencies or not. So, given all of that, how good, sound or regressive is India's legal framework as far as technology adoption and innovation is concerned?
So technology brings transformative changes, and law and regulation, unfortunately, is not as fast paced. So it is always trying to play catch up. Having said that, India usually brings regulation in a very reactive manner. You gave the example of crypto. I'm a firm believer in the fact that when we live in an era of ease of business, and as we move to a digital economy, we must allow the fruits of technology to go across the board to all stakeholders with a light touch framework which sets the rules of the game for fair play. Perhaps in the new area, we should not use the word regulation or regulator because, as I said, technology is so fast paced, it will constantly leave it behind. So guiding principles which ensure that businesses thrive and grow, there is innovation, there's investment, and all of it bears rich dividends to the end user. You can take e-pharma, e-commerce, fintech. These are all revolutionary changes. And I think the benefits must go across the board. So policymakers and regulators, I think, should take a long-term forward-looking view in just shaping the design and the landscape. And if we truly want to be Atmanirbhar, releasing stakeholders from strong-handed regulation. I think that's really the way forward, as I see, in an era of digital ecosystem, and as you rightly said, constantly changing technology, which we are seeing at an exponential pace. And second, the mindset of the regulator has also to change, because regulation is not about control. Regulation is about facilitating ease of business and balancing the interests of different stakeholders. So sensible policies and forward-looking regulation, brackets lack of it, is really the way forward in an era of changing and innovative technology. And the fact that we've seen so many startups come up and unicorns gives a great fillip and boost to what I'm saying, that let them be, they will deliver for us.
Let them be and they will deliver for us. A wonderful line really, Sandeep Agarwal, but is that how you would describe the framework, the legal, legislative and administrative framework that you yourself have grappled in various businesses?
Both Mr. Kumar and Mr. Jain has made some very fundamental, strong points. As a tech entrepreneur, our job is to really convert every challenge into an opportunity. At a very macro level, India is the only country which is offering 850 million people now, which are plugged in with a smartphone, low cost of data, and consistently, due to structural constraint in our country, our physical infrastructure may not give them what they hope, aspire, or deserve. So technology is absolutely helping India leapfrogging. No longer you need to be centered in metro cities for a best education, best healthcare, or best economic activities. You can be anywhere. How Mr. Kumar mentioned about efficiency, India tend to have a higher cost of capital, much more expensive real estate. So use of technology, the simple use cases of technology would be removing human error, doing the same thing repetitive manner without human being involved, removing human greed and incentive. These are the old technology use cases, why we need technology to lift our standard of life. And they hold true even now. They will hold true even 30 years from now. But how technology is transforming our country, this is no less than an industrial revolution in 1750. And absolutely, it is, I must stay positive and must see glass half full. And I would say, as a two-time tech entrepreneur, there's a lot more can be done. But if I see the glass half full, I think India has clearly emerged among the top 3 nations in terms of adopting new technologies, making actual commercialization of them, and creating significant local wealth out of that.
Mr. Kumar, a fintech revolution, this is what everyone talks about. People travel from overseas to India and say that we are years and decades ahead of many countries when it comes to small payments, for example. The example of Bheem, the example of UPI, all of these is cited. As a banker of such vast experience, break it down simply for our audience as to what really is this fintech revolution. Is it genuine? Do you think it is a fundamental difference and like Sandeep said, a new industrial revolution happening?
No, absolutely. And when we talk about the fintech and you spoke about UPI, it is a unique system which India has created. And imagine the number of transactions and the volume today which is happening. So the Aadha, what we call GEM Trinity, which is general accounts in the banks, Aadhaar and mobile. That laid the sort of a foundation. And then NPCI, National Payment Corporation of India, which is managing UPI. So in the payment space, I would say India is well ahead. Same I can say that even now for the financial inclusion where the underprivileged or not so privileged, they all are having today banking accounts. So when we talk about fintechs, what are they doing? What we see is about like payment system, or we see about the flow of credit, where a lot of innovation is happening. And this is, I would say, a very positive development as far as the micro and small enterprises are concerned, and the individual retail credit is concerned, where there are certain limitations which legacy institutions or banks face in delivering these products in an efficient manner, and that gap is being filled by the fintechs. And there are many other areas for them. It is around data privacy, security, cyber security. So fintechs is a very wide term, but immediately what impacts us and what we see is the payment system and the lending system. And another major development which is now happening is the account aggregators. That will be another revolutionary step. And we are moving towards some sort of an open banking system, faceless banking system. And the question is for whose benefit? And then my clear answer is that the people who were not covered by the traditional banks and legacy system today, through fintechs, they are being brought into that formal banking system. So this is a big positive development for the country. And I'm sure that we will be able to build on success of this. And
Mr. Kumar,
as I said, that the number of people who have been covered because of technology 10 years ago, that was not there. Today, almost every Indian has a bank account, which is a remarkable achievement, and that has been enabled only by adoption of technology.
A question that is asked as a quick follow-up, Mr. Kumar, is what will be the fate of banks, particularly public sector banks, who many believe are not that quick to pick up new technology and addressing those gaps which you said fintechs are already picking up. Is the future robust for traditional banks in India?
The traditional banks, one is that still we are in a situation where there is a scope for everyone, and I believe that public sector banks also have a role to play. And they are also changing. At least I can say that the State Bank of India is leading the way. And a few days ago, only a report appeared in the Business Standard. We said that YONO, which is owned by State Bank of India, it is the largest global new bank. So State Bank of India is a public sector bank in the country, and today, as far as the digital banking is concerned, it has created the largest new bank globally. So we are number one. And I'm sure that other public sector banks, they are following suit. And I can see like a lot is happening. And ultimately, it is not about public sector or private sector. It is not about the ownership. It is about that the management and the boards of these banks, how focused they are on delivering products and services by using the latest technology. Ownership doesn't matter, which has been proved by the State Bank of India. And many people used to ask me this question, that how come you're a public sector bank and you have created YONO? And my answer was, whereas government said or stopped me from doing what I am doing.
Right, right. Gopal, coming to you, and one of the points that I want you to explain to our viewers, during the early advent of telecom and then for a few years, the law, its interpretation and the decisions of regulatory authorities were a huge factor in the business success or failure of telecom companies, which, as we all know and for our viewers, were the initial backbone and pipeline on which all the data apps are now riding. For the current technology-led boom, one notices that one of the biggest advantages is that they don't have to go and seek permissions. They don't have to seek licenses. That framework does not apply to them. Is that the reason of their success? And for such companies, how is the future going to be? Will the state eventually catch up with them?
So, like you said, freeing somebody from the shackles of the license Raj was important. You gave telecom. Power sector was another example when they freed generators from taking out licenses so as to augment and boost the supply of power. So I think that's really the way forward. And that certainly, as I said, has been a very good platform or trigger for new age businesses, because they've not had to do matha takeover for seeking licenses and the shackles which come with it. So unshackling is important. Equally, I think time has come for responsible industry and stakeholders to move to an era of self-regulation or co-regulation. And that is what I see as the future for India, as we've now seen in the OTT sector, etc., which are all hotly contested. So the future for them, perhaps, as I said, will lie in yourself inviting and setting up a platform which does both self and regulation, if required co-regulation in some sectors, and an effective grievance redressal mechanism for the end user. If you do that and put a mirror to yourself, then the chances of the state or the government coming up with intrusive or harsh form of regulation or control will not be there. But you're right, these things do catch up. We are looking at now crypto, edtech, all of them are heading in that trajectory. So a national vision or consensus on the regulatory approach is important. And we should talk of good regulations for startups in the new age ecosystem. That should be the flavor of the discourse.
Gopal, one quick follow-up, because you mentioned a couple of sectors. For example, in edutech, one of the feedbacks on the ground is, what are these education companies teaching, these online ones? Are the standards there? What about their claims and the costs involved? The second point is crypto regulation, and maybe you may want to answer this question from that point of view. Please explain to our viewers whether you find it unusual that India has not yet been able to evolve or even debate properly in Parliament, which is the appropriate forum, a legal legislative framework to deal with blockchain and its associated applications.
Okay. Very important, as you said, to have a legislative framework in mind and policies, because now we have crypto already deeply entrenched, both in terms of users and exchanges. So in order to be able to provide certainty and clarity in a roadmap, particularly for the users community, all of whom may have some form of crypto assets, so there's suspense, so we could do away with it. There was a talk of a bill which was to be introduced, but it's not come, which is why I firmly believe, as I said, these are areas which require a clear legislative framework. Then whether you bring in sector A or sector B is easier. But we can't be at a time when the sector is deeply in. India has probably the largest or the second largest number of users, right? It's growing at an exponential rate. And we haven't even introduced for debate the proposed legislation or the form of regulation. Do we need an entirely new regulator, for example, for crypto education, very specialized areas? So as I said, there should be no gap in these things, and one is able to see these trends well in advance. Hence, it's much better to plan and prevent some kind of collision, because ultimately businesses and law and regulations have to align. That is harmonious coexistence. You don't want businesses to be there and the law to come later, because then likely of collision and crash is there head on. So that is highly avoidable. And that's why ease of business and Atmanirbhar means complete clarity. So the real approach really is in all these things to every stakeholder. He should have complete upfront clarity. Don't take him through a tunnel of which he doesn't know is there light at the end of the tunnel.
Upfront clarity, and that's very important. And before I go to Mr. Rajneesh Kumar on that point, Sandeep, I want to bring you in. Technology is driving change regardless of whether the regulatory framework exists, regardless of whether other processes are applied. But in your experience, do you think the government is also being able to keep up with the change? Gopal says regulation is always reactive. Where do you stand on that point?
That's right. I mean, especially the previous, before me, the discussion was a little bit around crypto and so on. So you can see, especially in the, right now we are for the last 28 years, we are in the era of information-based technology revolution. This is a whole evolution of maybe the technology. So if you look at, in last 28 years, every 3-4 years, you will find one disruptive sector, one sector where the new technologies are going to change the rules of the game, and the existing players, existing regulatory framework, and existing way of monetizing the business may not work, right? So we are talking about crypto now. Also, there has been talk last 3-4 years about social media. There have been also privacy laws and so many other industries. So, it is absolutely, I think, the innovation in technology and at speed at which entrepreneurs can implement things is always faster than the proper policy framework, because, right, so until that happens, in my view, we should not assume for the sake of being progressive and for the sake of how the technology has made world as a better place to live in for the last 300-400 years, as the framework is still, even if arguably it is not catching up, we should still give full benefit of doubt for the new industries and the entrepreneurs who are burning the midnight oil and believe in something.
So Sandeep, are you therefore saying that that benefit of doubt should be extended to crypto? When the RBI governor calls it not even a tulip, do you think crypto and the potential that the underlying blockchain has is being discouraged? Is that what you are saying?
I was making much more generic statement for any type, but yes, if you want on a crypto also, I would say that look, until the rules and regulations are not there, we should not be assuming that something is just, here and it's smoking guns.
Okay.
And it's going to just, bring the entire financial sector or for that matter, any other sector to a standstill.
Right.
Right. I mean, there, these new technologies exist for a reason. And if they have, let's say, when our old Indian wisdom that something which can last for 1,000 days, reality is it can last forever.
Right.
So if something has already existed for more than 1,000 days, we should cut some slack and let them breathe. And regulations can come at an appropriate time. But the innovations and growth are something which are very temperamental. If they once they disappear, it's very difficult to bring them back. And in this 21st century, I would like to see India in a forefront of all the leading technological revolution, rather than missing out the current revolution which we are going through.
Mr. Rajneesh Kumar, I come to you with the final couple of questions on the show.
Siddharth, can I come in for a minute?
Yeah, Gopal, go ahead. Please go ahead.
So just to give one word to the direction that Sandeep was mentioning, we need a booster shot to the legislation process.
Booster shot
and
for
perhaps,
legislation. That's a brilliant line.
And perhaps at a Vishwanathan Anand speed that is exponential and rapid. And that will ensure that businesses who are already there get supportive legislation, which, as he said, enables and helps them to grow rather than retard and put a roadblock because you're already there.
Are you saying, Gopal, that a roadblock is being put?
Well, the uncertainty creates a roadblock, and statements here and there, as you know, don't really shed much light on what is coming. So if you're good for taxation, you should be good for doing business, is how I see it.
That's a good point. Mr. Kumar, I come to you with the final two questions. And the first question, sir, for the average viewer who doesn't understand too much of technology and law and regulation, but is interested in benefiting. And a lot of Indians, as you know, sir, are dipping into cryptocurrencies. There is no framework. There is no KYC. There are platforms which are legally running in this country. Why is it that between the RBI, which is full of stellar people, and the government of the day, we have seen this back and forth?
This is something new. And let me tell you that we are not the only country where everyone is grappling with this new animal called crypto. Worldwide, the courts, they have treated crypto in a different way. Some courts have said it is a currency. Some courts have said it is a commodity. Some courts have said it is asset. So different countries have taken different position. Even their national governments have taken different position. So when this is something which is yet to be comprehended across the world, not only in India, so obviously we are finding it difficult to define. But in my view, the first step has been taken in the budget, where it has been defined as a virtual digital asset. Okay. And as you said that because your viewers, they need to understand the difference. So let me simply give you an example of gold. So gold at one point of time was being used as a currency also. It was a certain. It is a commodity also. And because it has a store of value, it is an asset also. Using the word currency for crypto is not right. It is not a currency. Currency has certain characteristics. It has sovereign backing. There is a promise to pay by either the central bank or the government or the sovereign to pay. There is nothing as far as crypto is concerned to describe it as a currency. And it is not a commodity. So the best description can be an asset. When tomorrow, as proposed in the law, Reserve Bank of India, they issue CBDC, Central Bank Digital Currency. Now what technology they use and in what manner it will be implemented, we are yet to see the details.
Right.
But then if you call CBDC as a cryptocurrency, if it is using blockchain technologies, then it is a different matter. So I think the budget has taken the first step where you do the transactions and considering that you need to establish the identities. So the provision of TDS, and we can debate about whether how practical it is, whether the tax rate is high or low. But this is a recognition of the fact that large number of people hold crypto in their wallets today in India, and there is a huge amount of money which is sitting there. When RBI governor says about the underlying value, he is just warning these people who are holding crypto,
right,
that don't get carried away.
Don't,
what is that?
Don't get carried away. One final quick question, Mr. Kumar, as we close the show, and because we are discussing technology driving change, I want you to explain as clearly as is possible with available details, what about this RBI digital currency? People ask all manner of questions.
Yeah. Let me try to explain it. That let us take example of a currency. All of us understand it. And who issues currency notes? Reserve Bank of India. How does it get distributed? Through the banks currently. We maintain, all the banks, many banks, they maintain currency chest as an agent of Reserve Bank of India, where the currency is held, but it is owned by Reserve Bank of India, bank doesn't do. And when I do transaction, I give you a currency note and you accept it, and the transaction is immediately settled. So this is about how do we deal with the currency or cash. Second is we are seeing digital world, where today there are credit cards, there are debit cards, there is UPI, there is IMPS, RTGS, there is NEFT. So various ways through which, without using currency, we do transactions and we receive and we pay money.
Right.
So that is now, as I said that no details are available to me, my imagination is that what is CBDC should do or would do is that eliminate all these steps. Today, imagine that when you use your digital wallet using UPI, your account is a bank, there is an intermediary, there is a SWIFT, there is NPCI, there is a recipient, there is a bank. So I think there are about 12 nodes involved in doing one transaction.
Okay.
It looks very simple, but it's not so simple also. There's a very complex technology architecture which is sitting. So CBDC, if designed properly, which I presume, then the need for all these intermediary nodes should get eliminated. And then it will bring a huge efficiency where in offline mode also, I should be able to do transaction with, like I do with the currency.
Right. That's a very good point, and in the months ahead, we'll probably hear more about how that digital currency will evolve, and that will perhaps be one more evidence of how technology is driving major change. I'm going to thank my panel, stellar panel really, for participating on the Business Today Brainstorm 2022 session with us. Rajneesh Kumar, Gopal Jain and Sandeep Agarwal. Thank you very much for your time, and you the viewer, if you've been, thank you very much for watching.
Even as the government bears its intent to step up investment, the question everyone is asking, when will private investment rise? Is the environment conducive enough for this investment? Are profit cycles encouraging enough? To answer these questions, we have a high-powered panel comprising Vishesh Chandyok, CEO, Grant Thornton Bharat, Subrakant Panda, MD IMFA, and also the Senior VP at FICCI. Great to have you both with us. You know, you really have the pulse of what's happening on ground, and it'll be great to get some insight and perspective on how you really see things moving now that we've kick-started 2022 and we're also well past budget 2022. Let me first come to you, Vishesh, on the signals and takeaways that you feel are the most important to track as we sort of head towards a recovery now post the third wave of the pandemic.
Absolutely, Aabha. I think, as you said, we are now firmly into 2022, firmly behind the budget. The thing to note today would be that the budget has actually now matured to be that presentation of the income and expenditure account of the government versus the one day that everybody hopes there'll be big policy announcements. Those big policy announcements now happen through the year. Retrospective tax, that big public procurement policy change that happened in October. So many other reforms now happen through the year, right? So I think, first of all, the budget is not, one day. A budget is not necessarily that reform day anymore. Where are we as far as the economy is concerned? We had the Monetary Policy Committee meeting last week, and obviously we've seen a sort of surprise from the Monetary Policy Committee. The expectation on the street was that we will see at least a reverse repo hike, if not a repo hike, and none of those two happened. I think the MPC has also shown the sort of consistency we saw in the budget. That for the 10th straight time there've been no change to the repo. Now that everybody expects may change as things play out in the future, as we go into April and the June meeting of the MPC. But I think you're just going back to the budget for a minute. Overall, what I'd say is that consistency, the predictability, will all go towards building trust, which is so central to the growth. The growth is there. 9.2% last year, expected 8 to 8.5% in the economic survey for FY23. Right? RBI now, I said 7.8, but the growth is there. We expect it to be the third, 3 straight years of the fastest growing economy ahead of us. And therefore, the choices the finance minister made was priming the economy with investment, keeping up with that 35% increase in capital expenditure, which we can talk about, versus maintaining the predictability on tax rates, no cuts there, which would have fueled inflation, which remains about at 5.59%.
Okay. Shubhrikant, let me bring you in on this. A lot of people called it a neutral budget, and questioned whether or not some of the Capex that was outlined will actually work in terms of implementation on ground, getting projects started, and then resulting, of course, in growth. What is your view on how the economy is shaping up so far this year?
First, thank you for having me on the show. As far as the budget is concerned, I'm not certainly one of those who would call it a neutral budget. I think it was something which was, which at the very least can be categorized as bold. Obviously the economy is dealing with a situation where we are coming off the unknown situation relating to the pandemic going back a couple of years. It was staging a smart recovery when you had the second wave, which obviously dealt a body blow. But and then you had a third wave, which is of course large in number of cases, but fortunately not in terms of severity, which is why it has perhaps not had an impact. But all said and done, the economy, while staging a recovery, is still in that phase where it needed careful nurturing. And I think what the budget has done and what the finance minister has done is to take a bold step to make a significant increase in the outlay of 35%, as Vishesh was mentioning, to 7.5 lakh crores. If you add the 1 lakh crore extra to be given to the states, that's a huge outlay. Now let's come to the implementation part. Clearly, one does expect that that implementation will be effective, because that is the key to any vision document. It's one thing to have a vision, and of course that needs to be executed on the ground. But I see no reason why it will not be. And in fact, if you look at FY22, where again some questions have been raised in terms of the capital outlay not being fully spent, I believe the number is about 63% till the end of December. But the finance minister, in public interactions, including at FICCI, has expressed confidence that even for FY22, the Capex budget will be adequately or properly utilized. I guess you have to take into account that during FY22 you had 2 waves of COVID, and that undoubtedly must have had a little bit of a setback. But I think end of the financial year push should see us reach close to the target, if not actually achieve it. And carrying that momentum forward, I certainly see that FY23 will be significant in terms of this outlay being properly spent, and that will clearly aid and abet the ongoing economic recovery. And just to add that one point, I think it's good to see that all the policymakers are on board in terms of the approach, because what the RBI has, the governor had said yesterday in his announcements following the MPC meeting, is clearly an accommodative stand, which is which is supportive of recovery, while keeping a close eye, of course, on inflation and on both the growth front, where as well as the inflation front. I think the outlook is quite good in the sense that growth is projected 7.8% according to RBI, 8+% according to the economic survey. And of course, the inflation forecast for FY23 is to abate to about 4.5%. So I think India is well poised. We have to be careful in it's a delicate balancing act to manage growth while keeping inflation under control. You obviously have to deal with the inevitable tapering which will happen globally in terms of the excess liquidity being pulled back. But I think India is well poised, and the finance minister and policymakers in general have shown a deft handling of the economy, and that will stand us in good stead.
Okay.
And if I can just add,
yes,
if I can just
go ahead, Vishesh.
On that capital expenditure, the FY22 budgeted, the budget estimate was 5.54 lakh crores. If you look at the revised estimate is 6 lakh crore plus. So already, the expectation is that we will not only, catch up, we will, spend a lot of money in the next couple of months itself within this financial year.
And do you feel, Vishesh, that private sector Capex will also kick in? The companies that perhaps have been waiting for the pandemic to be well past them will now start to implement or action some of those plans that they perhaps have had pending?
Absolutely. I think, again, the economic survey talks about, the bank credit finally picked up, in Q3. Even though NBFC credit remains sluggish, is the words the economic survey use. Certainly, whoever I talk to in industry, depends which sector you are in. Of course, high-touch sectors, still have, some way to recover. But there is definitely newfound initiative behind looking at new projects and investments.
Okay. What are, some of those sectors, Vishesh, if you could just elaborate on that a little bit more for us? Where are we seeing the maximum traction and investment likely to kick in?
As I said, I think it's across pretty much all sectors, other than the high-touch industry. So I can't, I would pretty much end up naming every sector. I don't know too many businesses which are in good shape, who, have balance sheets which are in good shape, who have access to capital. Now, banks' balance sheets are in good shape. Who are not looking at making use of this, economic opportunity of, the growth that Shubhrakant just touched on.
Okay, so let me touch upon manufacturing in particular, Shubhrakant. Let me come to you on that. Do you see perhaps some of the pain receding? What are the challenges you feel the sector still faces? How do you see things improving? How do you see the benefits of schemes like PLI kicking in over the next few months?
So manufacturing is obviously a core sector. If I look at it broadly, and one of the things about manufacturing in India has been that looking at the last 15-20 years across several governments, the intent to push manufacturing to about 25% of GDP has always been there, but somehow that intent has never translated into actual investments on the ground or growth in manufacturing. And to that extent, I believe what this government has done in terms of the PLI schemes, which are I think will have a significant impact, because close to 3 lakh odd crores in terms of incentives to be paid out linked to manufacturing growth in 13 or 14 sectors. That's not a small sum of money, and that's something which will bring about growth and, more importantly, create global champions, because I believe that is the intent of PLI, which is not to have a permanent sort of an incentive structure in play, but to give that initial boost so that those sectors where there is either a high import bill or there is a rationale for India, especially so to be self-reliant or Atmanirbhar. Those are the sectors which have been targeted, and I believe that schemes in general will have a significant boost to manufacturing. Now, there are several other aspects which affect the manufacturing ecosystem. One is the ease of doing business. And that is, again, an area where the government has done a significant amount of work looking at the pandemic period as a crisis which should not be be let go, as they say. And from the FICCI side, I can tell you that we have had multiple interactions at all levels of government, and there is clearly that intent to bring about significant change in the ease of doing business. So a lot of rules, regulations have been repealed, a lot of reliance placed on self-certification, etc., for industries, all of which will come in handy. We believe, in as much as the manufacturing ecosystem in India is concerned, there is another aspect, which is the cost of doing business. If I were to take a sector like logistics, for example, there's a clear 400 to 500 basis points difference between what our logistics costs are and that of similar competing economies, which needs to be addressed. If you look at power sector, for example, there is a lot of cross subsidy which impacts the cost of power for large industries. And these are all issues which need to be tackled. Now, if I were to again go back to the government capex which has been outlined for FY23, a lot of it is aimed at public infrastructure in the logistics area, and that has a multiplier effect, not just in providing an immediate boost to the economy, boost to employment, etc. But when complete, it is something I believe which will bring down the cost of doing business in India, and that certainly bodes very well for manufacturing sector. If I can add one more point to your previous question about when does private sector investment kick in? Private sector investment obviously has been a little sluggish, both on account of the uncertainty relating to to COVID, which is fortunately now, I would say, receding, as well as the fact that private consumption is one of those areas which has yet to pick up. It is still below pre-pandemic levels. And that is where, again, it was very important in this budget to sort of provide a big boost to consumption. And that, I believe, has been done through the Capex outlay by the government sector. And, the effects of the pandemic receding, the uncertainty associated with the pandemic receding, and the fact that we expect consumption to pick up is what will provide the necessary impetus to private sector investment as well.
Absolutely. Let's talk about that a bit more, Vishesh. On the consumption front, demand generation, I mean, while it's anticipated there'll be that collateral effect, if we take a look at the moment, things are still relatively subdued. We're not seeing the same kind of revenge or pent-up action that we saw after earlier waves. What's your sense?
The economic survey summed it up, right? Yeah. It said government consumption as well as exports were back at 110% of the pre-pandemic levels, whereas private consumption was still at 97%, I think. Right? So, you can see that if you look at the results of particularly sectors which are dependent on rural demand, the two-wheeler, tractors, etc. There are supply-side constraints, but there are also clearly demand constraints because of the bottom of the pyramid impact of the pandemic that Shubhakant just touched on.
All right. And, when it comes to the kind of ease of doing business that Shubhakant was also pointing out, do you feel there are still significant challenges for companies in order to scale? Because if we take a look at the more unorganized informal sector, for example, and they've seen the brunt, of course, of successive moves, whether it be GST, Demon, COVID, they have taken a lot longer to get back as opposed to some of the bigger companies and the kind of deal flow we're seeing there. Are you also observing an uneven recovery?
No question about it. I think, clearly, if you were in the informal sector, even before the pandemic, with the introduction of things like GST, you face challenges with demonetization, etc. So I don't think that has changed. I think clearly, if you want to operate in the supply chain, and you saw in the budget, the new norm, very much like you have on the direct tax side, the responsibility is with the company that is claiming the input tax credit to ensure that people in your supply chain have uploaded. Have paid their tax and uploaded the information. Otherwise, you're going to be denied the credit. So I think clearly you need to be in the formal ecosystem if you want to grow and progress along with India. You need to pay your taxes, contribute to that development. So that message is quite clear.
Shubhrikant, do you also feel a lot of what the government spoke about in terms of digitization, in terms of trying to create further formal processes will also help in terms of increasing efficiency and creating better infrastructure, digital infrastructure for industry?
Oh, absolutely. Clearly there has been a thread of digitalization running through the various aspects of the budget, be it the health sector where they've talked about putting all service providers, etc., on a common platform. So there are multiple examples running through the budget in terms of where the government has tried to focus on technology and on digitalization, which I believe is the way forward. And see, clearly the economy has to formalize even more going ahead. And it is in that on that path, I should say, rather. If you look at the consistently high GST collections being above 1 lakh crores for I think 4 or 5 months in a row, and the January figures being the highest ever, if I'm not mistaken, all of that points to the fact that the economy is formalizing at a rapid pace, and that is the way to go. And equally, of course, there is there are revenue loopholes which have been effectively plugged, and that has led to the high higher GST collections. But yes, I do agree that digitalization and a focus on technology is evident in many aspects of government, and I believe that is perhaps a result of the Prime Minister's vision as well of a new India. And you certainly can't envision new India without without being a tech leader, right?
Absolutely. Vishesh, what about the sunrise sectors that the finance minister also alluded to in the budget speech, with an eye to opening up investments and really looking at the future in terms of building technology in some of these areas? You have an insight into the kind of action and deal flow we're seeing across some of these spaces. What really do you feel is the potential and opportunity here?
Yeah, I think, clearly 1 or 2 areas. First, let me talk about what the expectation was, which was not addressed in the budget. For example, some clarity on overseas listings, whether it was a direct overseas listing or into the SPAC route. Capital is so important for these new sunrise sectors, right? And there was an announcement that was made as part of the Atmanirbhar Bharat announcements during the pandemic, and one was expecting some clarification, and that clarification hasn't come in a long time. Finally, there was a hope that it'll come in the budget, but again, that's not happened. I think even pharma has been included now in as a sunrise sector. So I think as far as deals are concerned, you're seeing that on the ground. Again, difficult to single out any one sector, but the drivers are very clear. Right? It's the consumer, the direct to consumer companies. It's the companies that will play out in the digital ecosystem. It's the companies that will play out in the healthcare ecosystem, in the education ecosystem, are the ones that have to benefit and gain as India formalizes. And of course, in the infrastructure ecosystem as well with this huge spend.
Absolutely. So a lot that one can anticipate. I also want to just get a word in from you on the LTCG that was capped when it came to certain transactions that, especially in the startup space, they were also celebrating that. Is that a step in the right direction, Vishesh?
Absolutely. It's the same way where effectively the long-term capital gains has been, the surcharge has been limited to 15%, which has a 2.5% to 4.5% net saving if you were to invest in things like startups and have long-term capital gains. So it is an incentive to back those companies, those sunrise sectors, as you said.
All right. And would the industry have liked to see more? Where else could they have tinkered with in order to really make everyone happy?
I think industry, is quite happy there isn't too much tinkering. I think all the basic ingredients are there. Shubhrikant can come in on this subject, but I think industry really likes that consistency, predictability, focusing actually on building trust. Even the announcement on taxing the virtual digital assets, people have welcomed, because when it was a gray area, the other alternative would have been until there is a crypto law in the country, you can't tax it. At least now there's clarity of a tax versus, and even though that tax is as if you were gambling or it's at the same level as lottery winnings, but still, there is predictability and transparency to everyone. So I think from industry's perspective, no change is really what investors and industry looks for. In terms of what more can be done, almost everybody would say, high-touch industries, aviation, hospitality, etc. In whatever way, irrespective of size, we could support. Those at the bottom of the pyramid impacted the most with the pandemic. Even the government's done, right? What you receive from employers, if an employee lost their life or COVID benefit, that was announced earlier, but has been confirmed as tax exempt. So government's done things, but there's not enough you can do there. People would say that the investment-led growth will take time to translate into jobs and to translate into cash in the hands of people in the rural economy. Could you have cut rates at the bottom of the pyramid potentially? But it would also be inflationary, right? And that's why inflation where it is, it was best avoided. That's what's enabled the RBI to maintain that monetary policy. Can you imagine if the tax rate was cut at the bottom, at the bottom tiers, would the RBI have taken the same call? I'm not sure.
If I can just come in here, you asked, about tinkering. In fact, I think one of the best things about this budget is that there hasn't been tinkering, as Vishesh was also referred to. The, consistency and predictability of policies is what industry and investors look forward to. And, that's been the case in the last budget as well as this one. And the fact that there hasn't been tinkering around the edges, and in fact, it has been like a bold, vision-oriented budget is what I think has got it high marks and a good response on stock exchanges on the day and the week thereafter. As to what else can be done, if I were to take the liberty of answering that as well, broadly, I reiterate. I mean, I agree with what Vishesh has mentioned about the high touch point sectors. Of course, 50,000 crores has been set aside, targeted, especially at the hospitality and related sectors. But one has to see how how things pan out, because that's one area which has been the most affected. Be it the first, second, or third waves, and that it is important to provide them hand-holding. And again, at the FICCI interaction, the finance minister was very gracious when she said that she would personally make sure that she's present at an interaction and to see what best can be done for these sectors. And I think that was a very nice personal touch on her part. That apart, I think there is inherent conservatism in the revenue projections in the budget. Because if I'm not mistaken, I think the revenue growth is projected at about 11% or so. Whereas if you take even the RBI projections of 7.8% growth and 4.5% inflation, that adds up to the nominal growth will be about 12.3. If you take the economic survey projections, a little bit more. So I believe it's there is a little bit upside potential in as much as revenue is concerned, and that will give the government flexibility going ahead to respond to eventualities or have a little bit more in the kitty to direct at sectors which need support. And going into the budget, one of the expectations was that there would be an urban equivalent of Manrega to take care of urban poor. But I believe the thought process in this budget is a little bit more longer term than having a short term approach, and that is to sort of ensure employment through investment, the investment cycle. Might take a little bit of time for it to bite in and for that to have an impact. But I think the quality of growth and the quality of job creation that way will be much better than any short-term SOPs. And I think one of the good things again has been no tinkering, and the fact that despite significant state level elections taking place, the finance minister has stayed away from the temptation of anything, to by way of SOPs, and focused on the right thing to do, which will set India on the path of growth towards not just a $5 trillion economy, but beyond that in this crucial 25 years as we get to our 100 years of independence.
Fabulous. Great speaking with both of you, and wonderfully detailed view on some of the policy initiatives early this year and what to anticipate in 2022 as we set off on the path of recovery and growth. Thank you both so much for joining us here on BT Brainstorm. Great to have you with us. The Indian OTT streaming industry is expected to grow to $15 billion over the next decade at a CAGR of 22 to 25%. Calling it a revolution would be an understatement. Join Prerna Lido in her conversation with Samir Nair, CEO Applause Entertainment, Karan Bedi, CEO MX Player, and Karan Torani, Senior VP at Elara Capital, on the future of entertainment in the age of streaming.
We have a stellar lineup today. We have CEO of Applause Entertainment, Samir Nair. We have Karan Bedi, the CEO of MX Player. We also have Karan Torani, who is the Senior VP at Elara Capital. Welcome, guys. My name is Prerna Lido.
Hello.
I would want to start with you, Mr. Nair, because you worked in the industry when TV was at its peak with Balaji and Star, dominating the TV landscape. And now you're heading a company where which sort of seems to have cracked the OTT code with the blockbuster success of Scam 1992. What do you think has changed in the media and entertainment landscape in India in so many years? Can you please summarize that?
Well, I think the biggest change that has happened in, say, the last 20 years is that, there has been a great degree of digitization that has occurred. So there was TV, and TV is a very linear medium, and it's not like a one-way kind of conversation with the audience. And it's linear, and it's time-bound and geography-bound. With the rise of the internet, then with the telecom industry, with the smartphone devices, and now with all the social media connectivity that has occurred, I think video over internet has been the single biggest phenomena in the last 15 years. It's only been growing. So, I mean, like 15 years ago when Facebook first started and when YouTube was happening, it was still smaller. But now it's really grown. A company like, like MX Player gets to 200 million, consumers who can consume content on their phone, on the fly. So, I mean, that's a revolutionary thing that's happened. And I think what it's done is, therefore, it's democratized content, whether news or entertainment or anything for that matter, is available easily to everyone, everywhere, anytime. So I think that has been the single largest change. Of course, it's caused a lot more fragmentation. TV has been overtaken in a way by OTT, may not be in revenue, but definitely in consumption. And that is only growing. I don't think there's putting this genie back in the bottle now.
Mr. Bedi, I just realized that I called an OTT success a blockbuster, because this was the term that was traditionally used for the movies. That's exactly my question. What is the difference and change in the metrics of a commercial success for an OTT product?
See, actually, there's two ways to look at it, Prerna. One is to say, listen, what are the specific sort of metrics that we can count or not? But the second thing is actually the entire business model has changed, where, typically speaking, a commercial success for, let's say, the film world used to be, okay, a film has collected this much money in the box office or so on and so forth. And what used to happen was that most sort of production companies were B2B entities, right? They would deal with cinemas, they would deal with channels. Today, I think the whole value chain has gotten integrated, and this is what you're seeing across multiple platforms in the world. So what has happened is that now the success metric has become what is the value you're delivering back to all your stakeholders. So if it's to a user, success metric has become, listen, do I enjoy the show? To the platform, it is, in the case of our platform, we are free. We are not, we don't charge money. It becomes minutes consumed, because minutes consumed translates to ad revenues. The more people watch, more people, the more ad revenue that we can generate. And to content owners, folks like Applause, it becomes, hey, listen, how many users or how many minutes did we generate out of that content? But the most unique thing about, I think, digital delivery over any other, traditional format has been that it has become properly measurable. You can actually go down and say, these many people watched this show in this pin code in Delhi in these 2 days. And that's something that no other traditional media has ever been able to deliver.
Another metric I would say when a show becomes a meme. Because
social virality, you're absolutely right. Social virality is something that's really, really important, right? Because it is today, social media overtook sort of traditional media a while ago is the way I would think about it. So I think absolutely the popularity of how quickly your content translates to pop culture is very important, and it's easy to measure. So, I mean, I think we all put numbers out there. I mean, we are very transparent with many of our numbers. We talk about user figures. Probably we are the only platform that does that. Most other platforms won't share stuff like this once in a while in like a year-end report. But I think that, you know, it's now, I mean, we share numbers with our advertisers who are very happy to see what the actual numbers on the ground are.
Right, of course you will, because you're at the top of your game. Moving from one current to another. So tell me, do you think that you've watched the industry in its entirety very closely? Tell me, is OTT as a medium forcing the industry stakeholders to think of new monetization models, because all of them are experimenting right now? What do you think will stick in the long term?
So I think, we are definitely going to see new monetization models. I mean, I'll just give an example here in terms of the other mediums of the industry. Single screen, movie content saw a transition from single screen to multiplexes. We moved up. You saw cable industry from Doordarshan free dish. We saw MSO, we saw DTH moving towards premiumization. I think when digital started, it's not been too long that 4G was launched and digital started, OTT started in India. And of course, the transition will happen wherein the earlier part of the audience, in terms of the large number of eyeballs or the consumption, is currently dominated by AVOD. But what you see in the last 12 to 18 months because of COVID is that a lot of the trends have accelerated towards SVOD as well, because people have started to, kind of accept that they're okay to pay for content on digital unless the content is very, very compelling. So I think there is a transition which is going to happen from AVOD to SVOD. So I'm not ruling out the fact that, AVOD will become smaller in share or something of that sort. But, SVOD will really catch up in terms of gain. So I think that is something, which is a very, very big trend to watch out for. And what that will do in terms of monetization, I think that's a very good thing, for the OTT platforms, because it will ensure stability in terms of cash flows, which will further, help them invest into content, invest more into content. They'll have more visibility in terms of their revenues rather than just relying on AVOD. So I'm not telling that AVOD is a bad business model, but if you look at globally all the countries, you need to have a sizable SVOD to actually scale up in terms of content cost.
Mr. Nair, tell me that survival of the fittest also means that how quickly you are able to adapt to change. Do you think that legacy production houses today, are they experimenting in terms of content and, other innovation, or they're simply reinventing the wheel? Do they need to change their strategies in that sense to stay relevant?
When you refer to legacy production houses, there are first of all two types. So one is the movie industry, which has historically been innovative, experimental, risk-taking, because that's the way the movie business worked. That is, the producer or the studio would raise capital, make a movie, have it released in theaters, and then sell rights for satellite and now streaming, etc., etc. So there was a degree of risk and reward involved in that. That's how the business works. The TV business in the last 20 years, however, evolved on a commissioned model, which is that the production companies would essentially go to the channel and get commissioned by the channel to make something for a margin, like a cost plus model. And that's how TV evolved, the TV production business evolved. Now streaming has come into the business. So like at Applause, we like to position ourselves as a traditional movie studio that makes series, right? So we invest money in content creation, we take the risk of making it, and then we license it to platform, right? So there is a risk, and then there is hopefully some reward. So I think the innovation that you talk about is happening all around us. I mean, I think a lot of innovation is driven by platforms. A lot of innovation is driven by, larger companies that are wanting to do different things. Of course, everyone has their own metrics, their own sort of goals to achieve. Like now everyone's, is looking for India to deliver the next 100 million. That's the, the real buzzword now. So the next 100 million will come from India. So that's like a big tricky thing, right? The next 100 million to come from India, paying customers, is easier said than done. So I think that's happening. And I think from a content point of view, see, these are like what? It's been 5-6 years since streaming really took off, right? In that time, we've produced numerous originals, many book adaptations, many international adaptations. There have been movies that have been made direct to platform. There have been anthology series, drama series, all kinds of things. So I think this is just the beginning. I mean, I think it's only going to grow from here and we'll get better at it. I think everyone is going to get better at this.
Right. Mr. Taurani, there's a buzzword in the West, at least. It's called subscription fatigue. And it hasn't come to India because maybe we're still under-penetrated in that sense. A, do you think is it real? And B, how can the industry drive solution? How can the industry solve this problem? Because people can't be expected to pay for 16 odd platforms. So is this real, first of all?
So I think, yeah, I mean, there is some kind of subscription fatigue, especially in a country like India, where you have 60 plus OTTs today. And, a large portion of the OTT is also just SVOD based, not only freemium or AVOD. But I think the way to go ahead for this is, I think, for a country like India is freemium, because that helps you get to a wider target audience. You have got people who want to watch free content, people who want to watch paid content will pay for that premium content. So I think premium is definitely the way to go. That's one. And I think the second trend is, partnerships, very, very important. So I don't see, a lot of the niche platforms which are there sustaining for a long time, because, content costs are really going to go off the roof in such a, highly fragmented industry. Everybody is going to run after content. Everybody is going to wants to, produce that high scale content. So I think content cost is definitely going to inch up. So I don't see, niche apps kind of sustaining, and basis that they'll have to partner with the larger companies. So for example, Amazon introduced partnerships wherein there were a couple of niche OTT apps which partnered with them. So I think this is going to be the way ahead, from here on going ahead. We've seen plans where, Jio is giving you that, the broadband connection with the subscription to the OTT platforms. So I think partnerships is the way ahead. So this is just the beginning right now. We are seeing partnership maybe with a TSP or maybe with an OTT giant. You may not know that, when the smart TV penetration goes up, you might have partnerships there as well. You might have partnerships, with other OEMs as well. So I think that is something which has to happen, from here on going ahead, and that will ensure that, you have a larger target audience which is there, because a niche app cannot firstly invest into content, and also in terms of customer acquisition. The customer acquisition costs are very, very high. And apart from that, customer retention, which is another added cost which is there. So I think they may not have that kind of capability to invest that amount of money and to compete with the larger giants.
So a lot of aggregation-based models coming up, consolidation happening. That's what
something like an MX player, which is there. They are. Their mantra is aggregation. So you've seen the kind of content they have, huge variety of content, and that has actually led to this huge number of eyeballs which they have. That the TAM becomes so big for them. So the conversion rates also become high. So I think it's all about offering variety to your customer. India is a very price-sensitive market. You can't just offer them 5 shows or 10 shows and tell you pay for this 20 rupees per month. They won't do that. They want more for less. So I think that is going to be the way ahead.
Mr. Bedi, does it scare you? How do you differentiate yourself? For example, you've been experimenting with gaming, short video formats and whatnot. We don't even know what is going to come next from your platform. So does it scare you? Because differentiation strategy is going to be key going forward.
See, there's a couple of ways to look at this. I think the one big thing we've been clear about is that the models that have worked in the West are not going to work in India, right? And this is not just about the entertainment industry. Like, the one statistic I quote often, and I'll quote here again, is that, the top 5 car makers in the world, right? Volkswagen, Toyota, Ford, GM, and Daimler, I think, have less than 10% market share in India combined, right? We are a market where Suzuki has, Maruti Suzuki has 50% market share, Hyundai has 25% market share, and then everybody else is sharing the rest. So I think business models here are very different, products here are very different. And even business models for entertainment content have to be very different, right? 3% of India, I saw some income statistics recently, 3% of India earns more than 1 lakh rupees a month. 3%, right? Now, if you're saying, okay, fine, we want to go and, deliver entertainment content to folks and we want to find a right business model to it, I think we have to look well beyond AVOD and SVOD, right? I mean, we have chosen at MX to go down the AVOD route because we have seen the large potential TAM here. And our strategy is very clear. Look, we want to address that large market. We want to give them content that they like, and then we'll figure out how we've done very well with ads, right? And even with ads, I think the one thing you have to invest in is really, really good ad tech, right? You have to be able to deliver that value to your advertiser to get it back. And that's something that, traditionally speaking, I would say media companies have not done compared to tech companies, right? Because, the ad serving technology has been fairly sort of table stakes for the linear media industry, right? You didn't have to think too much. Your content worked. You went to an advertiser and said, listen, my content's working, give me ads. Now you have to think 3 levels deeper than that, right? Whatever the content may be, you need to be able to deliver the right ad to the right consumer and be able to do it. The second thing is that even for paid models, right? As you said, we're experimenting with gaming. We've done very well with short video. We've just recently announced a transaction on that one as well. So I think what is happening is there is a lot of experimental monetization models that will have to come into play, right? And that could mean, for example, in the Western markets, TVOD never did too well, right? But in India, as Karan just pointed out, right? I mean, you can't simply go to a customer and say, listen, for these many shows a year, please give us this much money, right? So maybe the answer is to say, okay, fine, can you just charge a very, very small amount for a show? We don't know that. But the point is that there is a huge amount of experimentation that needs to be done to find what models will work for audiences. And we've been doing that, right? For example, one of the next things you're going to see from us is one innovation that we did was MX Gold, right? We don't restrict access to content. Watch it, wherever you want, whether you would like to pay or not. But if you want to watch it without ads, pay us a small amount of money. So that's sort of somewhere in between AVOD and SVOD. Similarly, like this, I think many models will have to emerge in the middle to say that, listen, this massive market we keep talking about in India, remember, there's only these many people who ever actually subscribe to anything on TV, who paid a subscription fee. How do you get past that number?
It's a tricky situation. Like, for example, Disney Hotstar, that has a different model. If you want to watch something in English, you pay more premium. So what do you think will stick finally? Like, how is it going to evolve?
I mean, I don't think there's a finally here, right? I mean, I think this is the beauty of nonlinear, that, it's actually a completely different industry. Right? It's not just about putting content on a distribution pipe. It's about content, the kind of content. For example, there's a show we're doing at the end of the month. I think you may have heard about, we have Kangana Ranaut hosting a reality show for us. We're doing, like 4 or 5 layers of interactivity and innovation in that, part of which will be monetizable, right? So you have to think very, very innovatively, right? You're not just putting content that has been on linear onto digital. You have to, if you're building content for digital from ground up, you have to think about what it is and what models can emerge to do it. So I don't think there's a finally here, but I think there's going to be a lot of innovation on business models in the next 4 or 5 years. I think there'll have to be a lot of innovation on business models in the next 4 or 5 years if, as Karan pointed out, content costs are becoming, are scaling up. So I think if people want to eventually build profitable businesses, you have to think beyond simply ads and subscription.
Right. Let's talk about the content. Mr. Nair, how do you bet on good content? Is it a shot in the dark? Or, what is an ideal content strategy that a production house or an OTT media player needs to have in today's time where streaming is the norm?
But, when you say ideal content strategy, it's many things, it's not like, I mean, across the world, actually, there are, everyone likes to say India is a unique market and India is different and Indians are different, but that's not so true. What happens is that, just broadly speaking, and the entertainment business has now been going on for like maybe 2,000-3,000 years, starting from the Mahabharata, which is supposed to be a great tale. So human beings in general tell each other stories and others listen to it. So over this period of time, over TV, over international movies, everything that we've done, some broad things emerge, like there is, everyone likes romance, everyone likes crime, everyone likes action. These are common themes. They are universal themes. So I've always believed that it's not the story, it's the storytelling, right? So it's how you tell the story. The stories are the same, give or take. I mean, once in a way, a unique story will come and then everyone will, follow that one unique outlier and that will become a herd. Then everyone will be doing that. So that's okay. So the key is in being able to tell stories and tell them well. I think individual platforms also use some degree of, what is the scale of their market? What kind of audience are they think they're reaching out to? So there are the premium elite platforms. Then there is the big mass audience platforms. It's like horses for courses. So I think when we are sort of looking at market, we are looking to, obviously, create popular, distinctive entertainment. That's the sort of way we want to approach it. We are wanting to tell stories that people can watch, consume, and like. We tell all kinds of stories. So you can tell something extremely ultra premium and snobbish and very, very elitist in English, or you can be, really hardcore Hindi and heartland, but both work. I mean, there's no one thing is right or wrong. One thing that's happening in India, and that'll happen more and more, is that as the streaming platforms grow, audiences are going to increasingly see content from everywhere. So far what's happened is that audiences have been in a way segmented. So like a Hindi audience saw Hindi content. An English audience, tended towards more international. South India was different. Now we are seeing everything together. And so audiences are also appreciating content from other languages, other countries, other types, and comparing it with their local. So I think, all boats rise with the tide. And I think the pressure on content creators and platforms is going to be that no matter what you're doing, so you could be thinking you're making a Bhojpuri show, but it's going to be compared with a show with anywhere else in the world, right? And that is increasingly going to happen. So I think that is the key. But it really comes down to the same thing. I mean, we work with all the platforms. We do a lot of work with MX players. Some of our biggest hit shows have come on MX. And, it's a strategy and it works really well. And we make some really, I think, Karan, allow me to say that, I think we make some outrageously successful shows and it works quite well. So I think it's a big market. Audiences are looking for all kinds of content, all kinds of variety. And there's no one formula. I mean, no one would have thought that Scam will go on to become the success that it did. 30-year-old story, obscure stockbroker, like no one, everyone says young adult audience. So theoretically, who among the youth know Harshad Mehta? Plus we cast Pratik Gandhi, who is a very, Gujarati star. So, I mean, in a sense, if you want to tick the boxes, you're crossing the boxes on that. Everything is wrong about it, right?
You've literally made him a star. He's going to be on next, like all the big TV series, I'm assuming.
He's doing a lot of work, yes.
Yeah. So tell me something. Give us a little sneak peek on how did Scam 1992 happen behind the scenes when you were betting on it, when you were producing it. Did you know that it was, obviously you didn't know it was going to be this popular, but what was the target audience? What was the psyche behind, who were you targeting?
See, actually, I've been wanting to tell this story for a long time, right? Because when I was growing up, Harshad Mehta was a big name, and I recall he came in an article in India Today actually, where he was there. He was actually a murti of his was put in a Ganesh Pandal, and they said that India worships Harshad Mehta or some such thing, and that thought stayed with me. When we started Applause, we got rights of the book from Sucheta. Then later I met Hansel, we had to do some work together. I told him I have the rights of the book. So he says, oh, I want to make that. So that's how he got signed on to it. We spent 2 years in developing it, writing it, getting it all organized. At one point, Pratik got cast. So it's been a process, so it was never that we were making Scam 1992 because we thought it was an outrageously good story to tell of a colorful period of India. And, great character. And, he's our own, Mr. Ponzi. So, good to do. As it came along really well. And I think all the different parts came together well. So this thought about casting with a whole collection of Gujarati actors worked well. I think the dialogues, Karan Vyas, the dialogues that he wrote were like totally outrageous, like really good dialogues. The music came together well. Hansel shot it so well. All the cast of characters that we assembled on it were really good. And I think then after that, the platform put some real muscle behind it. I mean, I think Sony Live went really, pulled out all stops to promote it. And it sort of, so sometimes what happens in the content business is no one sets out to make a flop. Like you don't set out to say that, no, let me make a really bad show or movie. Everyone sets out to make great stuff. But once in a way, things really connect. You have, all the planets aligned and everything sort of works out. And Pratik, I mean, in fact, from a comparison point of view, Pratik does not look exactly like Harshad Mehta. And we had discussed that in the beginning, that should we go for complete likeness? And then Hansel said, no, but I think this guy is a really good actor. We'll make him put on some weight. Pratik is a very thin guy. So we made him put on some 12 kilos leading up to the shoot. And even that was not enough, he's still a thin guy. But it sort of worked out really well, I mean, from within a few minutes of the show starting, he owns Harshad Mehta like a boss and then just takes it from there. So yeah, I mean, it's a story well told, Again,
and season 2 is underway.
Season 2 is underway. It's on a different story, and millions of memes got made. I mean, we had crafted the character to be like the angry young man of the 70s, Amitabh Bachchan. So, which is why Harshad Mehta was also referred to as the Bachchan of the BSc, and a lot of the whole play was, daring and risk taking, and the whole Bachchan attitude. So I think it worked out really well. Yeah.
Superb. All the best for the second season. I'm looking forward to it. And Mr. Dorani, taking from what Mr. Naya said earlier about regional and, smaller actors, smaller stories going global because you don't have a control anymore who's watching it. How big is the scale of regional subbing and dubbing industry going to be in, say, next 5 years?
I think that's going to be the next big thing, in terms of content. So one of the reasons why I mentioned content costs will go up is that, you will see content being sold in terms of rights for multiple languages. Unlike earlier, a film content which was made in Hindi was sold only in Hindi. Now that dubbed content will be sold for a specific value because there is a dubbed audience out there for it. You saw what happened with Pushpa, right? I think this is just one example which you're seeing, just one spark. I think things are going to move in that direction. So that is just one about, within India regional. Second opportunity, in my view, is the overseas part. So, distribution of content has become so easy right now when you're going directly to the customer. A producer can just make a piece of content, tie up with a Netflix, and Netflix can do wonders with that content, in terms of dubbing into multiple regional languages. So if you look at a country like a US, typically when the studios make a film, only about 30-35% of the revenues comes from US market. The balance revenues are coming from the non-US markets. But when you look at a country like India, when you make feature films or any kind of content, for that matter, we just have feature film data right now. Only 10% of the revenue comes from non-India market. 90% is India market. So I think there is a huge potential for things to change in a very big way on those numbers, wherein a producer will be actually able to monetize the content in a much better way. And that will propel the producer to actually make more large-scale content because he knows there are multiple streams of monetization, not only in India, but globally as well. And then, of course, we've got this entire concept of cross-sell, upsell. So when a Sacred Games was made, if you look at some of the metrics which pointed out, a lot of the viewership, even globally, happened in Hindi language. So there's a large audience which is there, or maybe in dubbed as well. So I think cross-selling, upselling is also the next big thing which is going to happen as far as content is concerned. And we're just in the beginning of that because I think India has got a huge, pool of good creative storytellers. Our regional market, Hindi market obviously is very good, but the regional market is phenomenally strong, specifically Tamil and Telugu. We've seen so many remakes which are being made, from Tamil, Telugu to Hindi. So I think that entire creativity is going to play out in a very big positive way. And I believe that, this kind of content will reach global in some way.
Right. And look at Korean shows. Who knew that Indians will be watching Korean shows like crazy, dubbed in Hindi, Money Heist, dubbed in English, Hindi, regional languages. It's just crazy. It's just went out of the box like anything.
Yeah, look at the kind of marketing efforts Netflix is putting behind these shows, be it on social media. There is so much amount of word of mouth which is there. So I think this is, really just the beginning. And we are right now, as Samir also pointed out, we are in experimentation mode right now. We're just trying out different business models, different types of content, which suits, which doesn't work. Because India has a large audience. I think we need some more years in terms of, getting the track record right in terms of where things are heading. Because even today, right now, there is no secret sauce or secret mantra. No matter how much of marketing you do for a particular film or a particular web series, word of mouth is king nowadays. Because if word of mouth is poor on social media and, between the people, I think the film or the content doesn't do well. So I think this is all about the word of mouth, and this is all only going to grow. And dubbing and regional is definitely the next big trend in content, which I see.
Right. Mr. Vedi, let me talk a bit about filmmaking as an art and writing, which is considered to be a creative process, right? But nowadays, a lot of platforms have an over-dependence on data and analytics to guess, to judge what's working, what's not working, to predict rather. So how do you, as a somebody who's greenlighting scripts every day, how do you deal with this conundrum? Do you go with instinct? Do you go with data?
See, there are, even in the human body, there are two distinct sort of nervous systems, right? There's the central nervous system and there is what they call the enteric nervous system, which is literally called your gut instinct. So I think you have to be able to use both nervous systems correctly. And I think platforms that do well have to do that. So you have to rely a lot on data and analytics to understand possibly what your users are doing, right? You then use machine learning to predict what they may do. Right, because that's the difference between analytics and and machine learning or the data science. So you use data science to then predict what they may do, but then actually figuring out what to make to fit those, predicted behavior patterns is, I think, comes back down to skill and instinct, and using the second nervous system. So I think it's a combination. I think you can't just say, listen, it's analytics or it's gut instinct. I think that it's always a combination of the two. I mean, I'll give you a great example. There's a show we did last month called Campus Diaries, right? It's very different from the standard sort of OTT fare, which is much more around drama, action, crime, etc. This is a college romance story, right? And one would imagine that, and it's done extremely well, by the way. It's one of our best performing shows. And when one was sort of planning this show out, there was this sort of consultation internally saying, hey, listen, this is a big deviation from what is sort of tried and tested and working in the data you're seeing back. But actually what I think the analyst team did very well was they were able to pick up signals and say, listen, no, there is actually across, as Karan had pointed out earlier, we have so much content that we could pick out signals from what is working across multiple different kinds of content, and then use that to say, hey, listen, excuse me, we've identified this particular subset of folks that want to watch this, and then obviously it went over to the commissioning team and to the producers and writers to actually create a good show out of it. So there's a great combination of that. It also, by the way, the amount of access available now is so large that even the granularity of data is getting to the point where it's almost becoming part of your instinct. We were talking about dubbed content. MX runs something called MX Videsi. We have the largest collection of dubbed content in India, and it's a hugely big performer, led by Turkish and other Middle Eastern shows. But as you pointed out, Korean, Latin American, Spanish shows that do very well. But what that does is it gives us an ability to dive into not just what is working at a show level, but episode by episode, minute by minute, what is working, not working. We literally can see graphs, so where people fast forward more or less than something else. So I think you have to use all that, but then the ability to create good content is the ability to create good content. That's a skill that good writers, good producers, good directors that they have.
I would like others to weigh in on this. Karan, tell me how much of over-dependence or dependence on data is a good thing? Because Netflix is famous for this. Even the thumbnails are customized to your taste and what you watch.
Right. So I think user experience is a very important thing, for any platform. Tech user experience is very important. And I think, of course, content is definitely is a very important aspect, because that's going to be the way in terms of the customers going to consume your platform. But if you don't offer a good user experience, the customers can tend to get really, irritated with that. So I think it is very important to invest a lot in terms of tech offerings, in terms of AI, in terms of knowing your customer. And good user experience, I think, also helps in customer retention, because it helps you get closer to your customer, gets to know in terms of what your customer likes, dislike, and maybe you can relook at your content strategy and make the content basis your customer base which you have. So I think a lot needs to happen in terms of that as well. We've seen Netflix, Amazon investing a lot of money. They are more of tech companies than content companies. I think that's the need of the hour. Hopefully, the Indian broadcasting companies also have that kind of approach, because without that, they really cannot scale up in terms of subscribers or in terms of, going the next level and competing with the larger giants.
Right. Mr. Nair, do you also look at yourself as a tech company first and a creative agency later? Did you make, let me ask you very directly, did you make season 2 of Scam because the season 1 worked very well?
Well, it's a very simple thing. The metric for a season 2 is always season 1. It's not just Scam. We do so many season 2s, and all season 2 metrics really come out of season 1. If people like season 1, chances are they're going to like season 2, and then it goes on from there. It's been going on TV for years. So, most of everything that's happening now is not as new or unique or different than what has been happening for the last 20 years or the last 50 years, right? It's a new technology. It's not necessarily new content, right? So when people watch Pushpa, they watch it in theaters, single screen, then multiplex, then, on TV, then in dubbed, and then on platform. It's still Pushpa, right? It's still the same movie. It's just being watched on different platforms. I agree with what Karan says that, with tech improving, the user experience improves of these platforms, and that makes a difference. But finally, even if you have great user experience, if the show sucks, then the show sucks. So, the user experience is not going to save you. The technology is not going to save you if the content is not good. And sometimes if the content is good, but if the technology is not good enough, then it's sort of, that whole, because our experience in general, consumers are experiencing different types of platforms. And wherever the experience is seamless, they tend to sort of, gravitate back to that. So there are these different moving parts to this. But, just coming back to this whole matter of data versus gut and all of that, is that data itself is experience, right? At the end of the day, when many people say that in my experience or I feel, what you feel is a collection of your own experiences from a lifetime, right? That is in a sense data. So, I mean, if you are able to look at data in a slightly more, intangible, emotional manner, I think the word data often gets misused as being treated in a very cold-hearted, That's why I don't like the term artificial intelligence. Everywhere around us, when you look, I think we see a lot more natural stupidity. So artificial intelligence in that sense may be better. But application of information, what people like, what people do, what are trends, where things are going, what are pain points, what problem are we solving, those kind of things are important. And then, as I said, it's not the story, it's the storytelling. You've got to tell a good story. That's what startups do. How do they go and raise all these wild amounts of money and become unicorns in 6 months? They're telling good stories, right? People are buying into those stories. So
But does data lead to, dependence on data lead to better storytelling or better stories?
it could. I mean, it depends on how you use it. No? Like, I mean, finally, if you take a game of chess is the ultimate algorithm, right? And you can, the big chess machines can work it out, and they can work out up to 1 million moves ahead. So finally, it is about using that data. It's about how smartly, intelligently, innovatively you use the data. Like, data might tell you that everybody loves crime, and you might come to the conclusion that since everyone loves crime, I am going to do a campus diaries. I'm going to go against the grain and do something different. And I'm going to, at this time when everyone is looking for something, I'm going to give something completely opposite and it'll work out. And if it does, then that's good, right? It's good application of data and it's a contrarian thought. So, I mean, that happens all the time. I don't think we should sort of knock down, like, I've never understood the thumbnail making me want to watch a show customized to me. I mean, I've never even noticed the thumbnail, to that extent, so.
But Samir, sorry to come in there. The thumbnail stuff, I can confirm the thumbnail stuff works, right?
I'm sure it does. And I'm saying when you hear now that the thumbnail is being sort of, customized to every single human being has a different thumbnail. I mean, I'm sure it works. You must know that it works.
Also, how do you know it works? Like, had it been a different thumbnail and the person would not have clicked on it, how do you know that?
So you do, so in any large platform of any type, not just entertainment, you do lots of what is called A/B testing, right? Let's say you have 50 thumbnails for a particular show. Those 50 are shown to, randomly selected, statistically significant groups in real time. And you measure how many people are clicking or not clicking and then what they're doing after they click. And the system works it all out sort of instantaneously and you get this back, on that basis. Let's say someone of your profile, clicks on a particular thumbnail versus another person of your profile, the click rate is higher than another thumbnail. We'll know at a very simplistic level that for your profile or your kind of profile, this thumbnail is working better. So we'll put that out. But I think Samir made a very, very important point, which is that the use of data to make decisions is not new. We just have better tools, right? For example, what I'm talking about in this thumbnail thing, if you were to do it imagine having to do this with a hoarding for a movie. You can't, right? You'll have to put up a hoarding. How will you figure out how many people have looked at that hoarding and, actually said, oh, I want to watch that versus something else? It was logistically impossible to do or extremely difficult to do. But it's not as if the movie industry or the TV industry hasn't been using user research, which is data, for decades. The thing is that now that access to data, the level of granularity, the tools available, is just a lot more, it's a lot easier for anyone to do that. And then obviously, as Samir pointed out, it's up to us to be able to look at that and make, decisions at the end of it. And tend towards natural intelligence and not natural stupidity, hopefully.
Very interesting times ahead. Let me quickly get your closing thoughts on what is going to be the next big tech disruption in the industry according to you. And I all need unique answers from you guys. Mr. Samir, you can go first.
The next big tech disruption.
Tech disruption in the streaming industry.
So I've been thinking about this, and about last few days in different conversations, this has come up. So I think one good thing that could happen, since everyone keeps complaining about pricing and how do you make this into a sustainable business model, is that since there are so many apps, so there are so many subscriptions. You were talking about subscription fatigue. And in a giant market like India, which is, got like 1.3 billion people, there is an opportunity, if at all, I'm sure, because, since now technology is available, that is it possible to create a sort of an app of apps, which can allow people to buy shows across platforms and, just watch that show. So you watch a show from Netflix, and you watch a show from MX, and you watch a show from Amazon, just the show, and you pay just for that and operate it. The technology is there, the payment gateways are there, the wallets are there, the social media is there, everything is there. So it just requires everyone to, of course, cooperate. But on that basis, that could be quite the, the ultimate sachet pricing, that I want to watch only Sacred Games and nothing else. So I buy that, and then I take Bhokal and I pay 10 rupees each for both, something like that. I think that could be quite cool.
How I wish it was true today.
No, that's why we are talking about futuristic science fiction, right? So that's what I think could happen.
Yeah. Mr. Taurani, what do you think is going to be the next big tech disruption?
I think two things here. One is, of course, we've seen a lot of dependence on cricket as a sports content, on the video streaming industry. I think over a period of time, say 3 to 5 year horizon, that could really change the other way around with the emergence of esports, other kind of sports which are there, metaverse, tech, AR, VR, everything put together. And a lot of the Gen Z, are actually going to move to OTT, and they haven't even consumed TV. So I think some kind of innovation in terms of the nature of content, the type of content consumption will actually happen over a period of time. And just to, second to Samir on that, just one more suggestion would be, we could have some sort of system wherein you actually know what content is where, because what happens in streaming is that, product discovery becomes very difficult. What do I want to watch? Okay, if I want to watch this, where will this be available? So I think some kind of a some kind of a system there development in terms of this movie or this show is on this OTT platform, that would make life much more simpler for a customer. So I think these two things could be some innovations which would come out.
Yeah, I hope a lot of future startup entrepreneurs are watching this, because these are really great ideas. Like you're talking about a catalog of sorts, right? Like a good old catalog. Very interesting. Mr. Bedi, we want to hear from you.
I think, both, just to sort of reiterate both points over here, I think, yeah, these are all, I think tactical problems that can get solved quite quickly, because I think the big disruption that's going to come, apart from content and all of these things, is that if you look at the traditional cable industry, and the reason, and Karan covers these companies very, very deeply, not just in India, but, in many parts of the world. Anytime you see an industry with supernormal profits in one part of the value chain, and cable companies had that, right? Because they controlled that last mile distribution and were charging a rent effectively. I think you're going to see disruption there, and OTT was that disruption, right? Company said, okay, because of the internet, we're going to take the proposition directly to the user. So I think even all of these things today, right, saying that, look, there's content on multiple different platforms, and discoverability is a problem, subscription fatigue is a problem, even for someone like us, right? Even when we don't charge a subscription, discoverability is a problem. I think all of this will converge into a couple of large platforms being the centers of discoverability, consumption, and eventually customer billing. Because finally, I think what the internet has done, and internet has now been around 30 years, and we're still feeling the effects of how it's hitting new industries. I think the internet has finally hit the entertainment industry in the last maybe 3 years, is what I would say. And saying, hey, listen, if you look at this entire value chain of where profits are being captured in this industry, you can no longer think about supernormal profits being captured in one part of the value chain. The information is too easily available now, right? It's the same thing that happened in many, many other industries, where you are going to have to give users very transparent value for what they're seeing. So I think that's going to be one big model. But I think at an India level, one big thing that's happening, and I'm going to say it very openly, is that 2015 to 2020, in my view, was OTT differentiating from TV and saying, hey, listen, we exist and come watch us. 2020, I would say late 2020 to now, whatever you want to call it, 2025, 6, 7, whenever, OTT is replacing TV. I think TV has there's 200 million TV sets in India, including cathode ray and including all CNS households, right? There are 600 million smartphones in India already. There's going to be a billion plus in time. So I think that's the trend that's happening. I think it's going to become completely user centric, and it's going to move 100% digital. I think the TV industry, linear TV distribution industry, is staring at the next 3 years tops. I know, Karan, you and I disagree on this one, but
yeah, that's what I was going to say. What are your views on this?
Faster, and I feel it'll go faster than everyone thinks.
Yeah, so I mean, it could work actually that way, what Karan is pointing out. But if you look at right from the advertiser standpoint, currently, as of now, what we speak for the next 3 to 5 years, there is no threat of digital kind of replacing TV in terms of the ad spend part. As far as the SVOD or the subscription TV revenue is concerned, there are a lot of overhang in terms of NTO 2.0 pricing, and also people wanting to subscribe to platforms. But yeah, 10 years hence, I mean, TV is looking at a very dark future, because clearly, today's generation has not even seen TV. As I said, they've just explored digital, and I think they are used to watching content on digital. So they're not used to watching ads. They're used to watching SVOD content. So I think there's an entire habit change which is going to happen, consumption change which is going to happen in the next 10 years. So TV is definitely staring at a very dark future, I think 8 to 10 years hence.
Yeah, very interesting times ahead, and hopefully when we meet 5 years from now, we would sit again and talk about in an Adda like this, and things would have been so different. Today we don't even have an idea of what. Thank you so much for joining us, and thank you guys for watching. Hope you have a good day ahead.
Thank you so much.
Thank you.
And with that, we come to our day-long session here on BT Brainstorm. Thank you so much for watching.